Good morning and welcome everyone to introduce Investor Days. My name is Jesper Birch Jensen and I work as an equity research analyst here at ABG, focusing on the gaming space and software space as well. Today we have approximately 36 companies presenting. We'll start at 8 o'clock this morning and end at 5 p.m. this afternoon. You'll be able to view all of the presentations here on the live stream, but you'll also be able to view them on introduce.se afterwards. Starting off today, we have the CEO of Remedy Entertainment, Tero Virtala, presenting. So without further ado, please go ahead, Tero. Sorry, without further ado, please go ahead, Tero.
Okay, just a question. I was said that you would be sharing the presentation, or shall I use my own presentation?
Okay, just please tell me when you want me to switch the slides, and I'll do that for you in the presentation.
Okay, that's good. That's good. You can start the first one.
Yep.
Let me know when they are up.
Oh.
I don't yet see anything.
Yeah, they're up, Tero.
Ah, okay, so I don't see them.
Okay, we're on the first slide.
Okay. So good morning, everyone. My name is Tero Virtala. I'm the CEO of Remedy. We can go to the first slide on Remedy. Okay, now we are on slide 2. So what is Remedy? As we say it, we are a category-defining creative super developer. What we mean with this is that there are a number of gaming companies in the world, but when we look at the big AAA gaming developers who have the capability of develop high quality, high production value, fully priced games, there aren't that many of those, approximately 150 game studios in the world. And out of those, it isn't many who, in addition to capabilities of creating high quality games, can actually also create world-class gaming brands, new franchises, new worlds, new characters, new stories that set up a long-lasting brand. We are one of those creators, and out of these brands, we can develop distinctive benchmark-setting games. In addition to that, most of the world's AAA gaming studios, high-quality developers, but they are focused on one single team, so have capability to develop one high-quality game at a time. As I will be telling you, we have systematically transformed and developed Remedy in a direction where we truly have the multi-project capabilities, ability to develop multiple games in parallel. In addition to being a developer, we have been constantly developing our capabilities to also self-finance and self-publish some of our games while partnering and being a good partner with some games with world-class publishers. We are a highly attractive home to world-class talents, and we have been building all the above all the time systematically by being a profitable growth company who also manages its risks well. We can go to slide number 3. So our games, as I just shortly said, are based on our strengths that we have been building now for 26 years. Games in immersive worlds, interesting characters, memorable stories built around these characters in these worlds, and then this all is combined with polished action gameplay. We can go to the next slide. So when we look at our games, they are games for PC and console platforms. As we say, they are big screen games for core gamers. Most well-known games in the past, Max Payne, Alan Wake, Quantum Break, and most recently Control. Games that have been selling well, but have also received big amount of industry awards, winning Game of the Year awards, many of them. We can go to slide number 5. That was the background who Remedy is, and as I said, we have been around for a long time. But for the first 20 years, we were focused on the pretty standard model that many high-quality game developers, game studios are, having one big team, one really robust leadership team for the game projects, but a company organized in a way that it had capabilities to only develop one game at a time. But then in 2016, we started crafting our future strategy that after 20 years, what should be the remedy for the next 10 years to come? What should be the way how we could materialize much more growth, much more possibilities for our people, and also bigger ambitions for our future games. And we started a bigger transformation. We set ourselves a new strategy with the intention to really enable long-lasting, much bigger growth than we had seen in the past. And that new strategy was built on 3 core pillars. One was the creative one, that yes, we would continue creating games on top of our strengths of world building, characters, stories, and action gameplay, but we would develop competencies around these that would allow us to develop games that would be step-by-step longer lasting and longer engaging. That was clearly the direction where the market was heading, and that was clearly what was still missing from us to create the much bigger hits that we know we are capable of. The second big pillar in our future strategy in 2017 was set to be the operational transformation from single project organization to multi-project, which has required a lot of organizational changes, process changes, developing new leadership teams, new ways of working for our game production teams. And then when we would do the multi-project change, we would be able to do the third business transformation, because in the past we had mainly been, for the past 5 years from 2012 to 2017, we had been focusing on one single project, and that was the subcontracting project. Now we wanted to get higher up in the value chain, so basically with the multi-project model, while we could have only a selected subcontracting project, with the other projects we could go back into creating our own IPs, own brands, and by doing that, then of course having a bigger upside on the successes that these games would create. Then slide number 6, please. And this first phase lasted about 3 years, and in end of 2019, we could proudly say that we had successfully completed the first phase of the transformation based on these 3 pillars. 2020, we have continued work on that, continued to improve, and can say that many things have now been built in order to have this ability for the longer term future growth. Instead of having one game project in 2020, we had 5 main games in development. Those were divided into 15 bigger sub-projects, which all provided different opportunities for us. And altogether, these have delivered our games to 10 different gaming platforms, gaming subscription and streaming platforms on the PC and console space. Our internal talent pool has grown from 120 people to close to 300 people, and we have been able to build much more scalability also by developing our ways how we plan, manage, lead our game projects, and therefore how we are able to then also use much more external development, especially on the labor-heavy parts, implementation, execution on the later phases of the game development when it's all about execution. And last year we had over 30 external development partners, out of whom over 350 people were working for our game projects. Then slide number 7, please. And then when we look in a bit more detail on the games we have been working on, we have Control, the game that we launched in 2019. That's an IP brand owned by us. It has been a collaboration with 505 Games. Then we have a project team working with Korean gaming company Smilegate on a hugely successful Crossfire brand. That is the only subcontracting-based project that we have ongoing. Then we have 2 unannounced game projects with Epic Games, games based on our IP, our brand. And then we have our multiplayer initiative, Vanguard project, which we are developing. We can go to slide number 8. Shortly on each of these games. So Control launched in August 2019. It was a very important driver for our multi-project development. Control was the second project, the second game team that we started building in 2017. It was driving many of the changes that we needed to build for the company. We were able to then finalize Control in 3 years with the development budget of approximately 30 million euros. Control launched in August 2019, has won a number of industry awards, being nominated as Game of the Year by highly respected game media. It has sold well. So Control reached 2 million sold units last December, and it continues to sell well. As an example, 15 months after the launch in November 2020, Control sold most units in digital channels than it had ever sold, and it's continuing to do that. Then slide number 9, please. Then in relation to Crossfire, we have been now collaborating with Smilegate almost for 5 years. Smilegate is the owner of Crossfire franchise, which is one of the biggest free-to-play PC games in the world. It's a over 10-year-old gaming brand, cross revenues typically over $1 billion per year, especially well known in the Asian marketplace and China specifically. Smilegate started to consider that what should be the longer-term future for Crossfire. They had both global ambitions, but also ambitions to build the big successes for the next decades to come. And in addition to continuing to build the multiplayer-based service games that they had done, they saw a need to expand the Crossfire universe to provide their players deeper stories that would build more emotional attachment for the players, help to explain the world, help to create the connections for the players with the locations, with the factions, with the characters, and they chose to collaborate with us. Now, this year, finally, these new games are launching. So Smilegate is launching Crossfire HD in collaboration with Tencent in the Chinese market, and that's a continuation to the currently existing hugely successful Crossfire game. And then Crossfire X is a new console game in the Crossfire franchise, launching for Xbox platforms with Microsoft this year. And both of these games will include our Remedy-created single-player campaigns. And when these launch, it then also means that we naturally have been paid for the work we have done. But on top of that, depending on the success of these games and how our single-player campaigns are perceived, we have a royalty upside. How big those royalties will be, when they will start realizing, we don't yet know, but the fact is that with these big games, they can be significant if all goes well. So it's a good upside. Then slide number 10, please. Then we have the 2 games in development with Epic Games. There is a bigger AAA gaming project and a smaller project. They are both based on the same IP created, brand created by Remedy, and we are the owners of that brand. It's a really good deal, shows in part how the gaming industry has developed. It has continued to grow, but there is a growing demand both for high-quality AAA games and high-quality developers, but at the same time, there seems to be less and less developers. It's really slow and difficult to build new AAA developers, and with the consolidation, there is less and less independent developers available to collaborate with those parties that don't have so many internal studios. That has created a situation when our type of developers, high-quality developers, can actually close really lucrative and good deals. Our deal with Epic was a good example of that Epic is fully funding the development, so taking all the financial risk. We are developing the games for console and PC platforms. Epic has committed also to quite significant, over 10 million euro marketing budgets for these games. And then when these games launch, Epic can take first their investments from the revenues created, but rest of the revenues, the net revenues, will be shared 50-50 between us and Epic. Then slide number 11, please. So then our fourth project is Vanguard. Remedy has been typically known, or Remedy has always been known, for high-quality single-player games. But the action gameplay know-how that we have built and the world-building capabilities that we have, those can be expanded to other type of games as well. We see that there is a lot of opportunities as the industry keeps on growing with single-player games. But at the same time, with our multi-project model, we can also expand selectively to different genres areas. Multiplayer games are growing, but it's a highly competed, almost bloody market. It is especially in player versus player, team versus team games. We studied the market closely and saw an opportunity in long-lasting service-based collaborative co-op multiplayer games. In order to create long-lasting games into that space, there are certain challenges that need to be solved. That is the biggest reason why there is less competition, but still few highly successful games. We set up a new Vanguard team with people experience from multiplayer games to try to sort out, try to solve that what would be the type of collaborative multiplayer game that we could make that would be unique enough and differentiated enough for the market, but which could still utilize our unique skills of world building, characters and stories. It has been a slow progress. We have been developing the game now for 2 years. And in 2020, that development started to show some good early progress, and we have slowly started to ramp up the team. Now the team it had 20 people at the end of last year. Now we have been continuing to grow the team step by step. It's still in a fairly early phase, but an interesting opportunity that we are taking further. Then let's go to slide number 12, please. Just shortly on the market. So our market focus has stayed the same for a long, long time. When we look at the bigger market, we are focused on the console and PC games, games for core gamers, as we say, big screen games for gamers. It basically means PlayStation platforms, Xbox, Nintendo Switch is an interesting platform. PC platforms have been expanding, and now the cloud and subscription services are further expanding this part of the market. And this is what we know. This is what we are known for. This is where most of our strengths lie. And that has been our focus for a long time and continues to be. Then slide number 13. We introduced, as I said, we had our first phase of transformation done from 2017 to 2019, 2020. We spent some time improving and polishing some parts, building certain competencies further. And we introduced an updated strategy last December. And basically, this strategy, in addition to having, of course, internally more detailed action plans, it sets our long-term objectives for the 2025, And we aim to create with our multi-project model several successful games, as we have been doing so far, and continue building bigger successful games in the future. And the aim is that when we do everything right, when the quality is there, when they are unique enough, when the marketing has been handled well, when we step by step grow on the shoulders of the previous games that we have done, the likelihood of creating at least one major hit game grows. And in our industry, that can mean significant revenues and profits. No one can forecast exactly what this game is, but with all the games we have chances for that. And that is definitely a concrete objective for us, that we are creating several successful games and at least one major hit game, a game that can reach the global top-selling charts and stay up there. We continue building our brands further, and we will own at least 3 expanding game brands that all have long-term hit potential. We continue developing our commercial capabilities so that for each of the games, we have the full freedom and ability to decide whether we self-finance and self-publish our games, or if there is a bigger opportunity with certain games to working with globally leading publishing partners. In a way, we are a creative organization, a highly professional one. We have been a highly lucrative place for the top class talent in the world. And the aim is definitely to be the most attractive gaming industry employer in Europe. And we are systematically developing, following our progress towards that. And as said, we have always been a profitable growing, or for the past 10 years, we have been a profitable growing business, always managing the risks, and we are reaching these objectives above by continuing to be that. Then the slide number 14, please. Just shortly, that in 2019, we first time got onto the growth path where we aimed at. In 2020, we continued in that, growing our revenues by 30%, having a good EBIT level of over 30%. And it was especially important that we reached these even though we didn't have any new game launches, that we were able to support the existing game out there, Control, it continued to sell well, and our multi-project model with the development fees and good deals we had provided a steady revenue streams as well. But we see that we are in the early phases of the bigger growth where we aim at. We only have one live game in the market. We have a number of games in development. The more we are able to launch these good quality games in the market, the more our business is going to be built on the much higher profit consumer revenues, game sales. And at the same time, we would continue having multiple games in development. And that is the direction where we are aiming at. Then slide number 15. This just shows the longer term development we have had, that for a long time we have always managed our finances, but up until 2017, we were fully focused on one game project, and that was limiting the growth opportunities. That was the moment when we started the transformation, building the multi-project model, more focusing on our own IPs and brands. And in 2019, we first time saw some fruits of that continued in 2020, and the aim is to be a long-term growth company. Then slide number 16, please. Yes, this was a recent development a couple of weeks ago in order to support the possibility to self-finance and self-publish selected future games. We had a share issue, and we just raised a bit over 40 million euros to support in the implementation of this strategy. So overall, instead of having 20 million euros, we now have a profitable growing business and a cash position of 60 million euros, which gives I would say, a good basis to also execute on the strategy we have chosen. Then the slide number 17, please. So just on the outlook, so we are continuing according to the plans we have had. The aim is to launch at least one game or bigger game expansion every year. This year specifically, Crossfire X with our single player campaign, Crossfire HD with our single player campaign are launching with Smilegate, and overall we expect 2021 to be a good year, revenue to growth and also EBIT to growth. That's it on Remedy. Any questions, please?
Thank you, Tero. We're a bit short on time, but I think I'll try to get one question in there. And you kind of touched upon this already, that one of your upcoming games, currently labeled Project Vanguard, as it kind of differs from what you usually tend to do in terms of genre and business model, also in that it's a free-to-play multiplayer game. And I was just wondering, how have you had to adapt internally in order to feel confident that you can succeed in this genre, which is quite competitive and might require expertise different from developing a single-player game in the traditional product-based model? Thank you.
It has required all that, and that is one of the reasons why we have been quite patient, taking our time. In our multi-project model, we are building some centralized competencies that can support all our game projects and using some benchmarks on how these games should work. But beyond that, we try to build game teams that are fairly autonomous. And the most important part is to create, and typically the bottleneck in this expansion is to create really experienced, highly qualified project leadership teams who have the kind of like CEO of the project, the EP, who has the development director, the daily project manager, creative director, technical director, product director focused on the business aspect, art director. And building these teams takes time, and they have to be spot on to the game. And with Vanguard, we have done exactly that. People with these competencies, and then fulfilling these teams with some of the Remedy expertise that can, in a way, bring the speciality of world building, character stories into the team. And now it seems that things have started to fall into places, but yes, it has taken time, already 2 years.
Thank you. I think, unfortunately, we're out of time, but thank you, Tero, for joining us today and telling us more about Remedy.
Thank you.
Thank you. Tja Patrik, det är Jesper. Hallå?
Ett ögonblick. Nu kanske Jesper, hör du mig?
Ja, nu hör jag dig.
Ja, bra. Jag hade mutat.
Ja, det är lugnt. Hur är läget?
Det är bra. Hur är det själv?
Jo, det är bra. Jag hade en presentation här precis innan dig och så att vi kör på här.
Ja, okej. Är det du som modererar eller?
Ja, modererar. Så introducerar dig som vanligt en liten kort så låter dig köra din grej och sen tar vi om det finns tid så kör vi lite frågor på slutet.
Absolut. Jag kör på engelska den här gången.
Ja, precis.
Jag ser ja, nu ser jag presentationen. Okej, bra.
Precis, så säg gärna till mig så byter jag slide när du vill. Så håller vi.
Ja, jag får klicka fram då. Så. Men jag såg ju, det kanske lite dumt, jag har några animeringar med också på vissa slides. Så det,
Okay.
Men jag får bara be dig att klicka liksom.
Ja, men bara sätt till.
Det är inte så många, det kommer några stycken liksom.
Okay.
På slutet i alla fall. Men klicka fram så du vet, punkt för punkt liksom.
Ja, men det ska jag nog fixa.
Ja, bra.
Yes.
Ska vi, men det syns bra och hörs bra så här.
Jag ska kolla med dem. Det tror jag du gör.
Ja, annars vet jag inte vad jag ska göra.
Ja, men det verkar bra.
Ja, det är bra. Ja, men jag är good to go när vi säger till.
Ja, de håller på att fixa med någonting här. Så att så fort de är klara så kör vi.
Ja, men det är lugnt. Jag kör en skuggprestation på min egen skärm så jag hänger med vart vi är någonstans liksom.
Nu tar de redo här.
Ja, super.
Welcome back, everyone, to the Introduce Investor Days. Like I mentioned before, my name is Jesper Birch-Jensen, and I work as an equity research analyst here at ABG. Next up, we have Lithium and the CEO, Patrick Settlin, who's going to present the company. So without further ado, please go ahead, Patrick.
Thank you, Jesper, and hi all of you guys out there listening in. Great to be here. Great to be able to tell you a little about Lithium and what we do and what we see lies ahead for this company and opportunity. So let's get going and dive right into next slide, please. Jesper already introduced me, but I'm going to give you a little bit more color on who I am. So I'm the CEO of Lithium. I've been in Lithium for a year now, and prior to joining Lithium, I had a long career in e-commerce companies, leading ones in the Nordics. I've been the MD, managing director at Komplett in Sweden and Denmark. And Komplett, for those of you who don't know it, is the largest e-tailer in the Nordics on the consumer side, Norwegian company. And after that, I've been the CEO at CDON while we started a transition to becoming a marketplace, going from regular e-tailer to marketplace back in 2014-15. And today, CDON is very much full-blown marketplace in the Nordics. And just before joining Lithium, I was 4 years at Visma. Visma is today one of the leading software SaaS companies in Europe, and I was at the largest subsidiary in Sweden called Visma SPCS in accounting and HR and ERP systems. I had a CPO role there where I worked a lot with product development, business development, and a bit of M&A and so forth. So, and now since a year back, I'm at Lithium. For me, that's pretty much a dream job, getting to combine the e-commerce parts of my experience with building software companies. So, couldn't be better really, and it's really inspiring for me. So, click please. So, Lithium. We are a tech company within e-commerce, and we are on a mission to make our customers outperform their clients in digital commerce. And if you go to the next one, please. And we do this by providing our customers with the tech tools needed to drive sales of products in scale, in volume, and to build their brands in the market spaces they're operating in, and drive excellent customer experiences. And we also allow them to scale fast their business to various channels or various markets. Click, please. So our product is a digital commerce platform. The main components in it is, in business terms or tech terms, it's the CMS, PIM, and commerce components. CMS is the presentation layer, with what you usually see when you go into a shop. The PIM handle all things product, and the commerce handle all things orders and campaigns. We deliver this through the cloud, and it's available to our customers through a SaaS business model. So you subscribe to the solution, to the platform. We go to market with a scalable partner network or a scalable business model. We go to the market through partners, solution partners, customizing the platform to whatever needs the customers want to cater to. Our target market is Scandinavia, but the solution as such is global, and many of our customers use our platform to sell products all over the world globally. So next slide, please. We've been doing this for a while now, all the way back to '98, actually, when Lithium was formed. Back then, it was a consultancy firm within e-commerce, doing customized solutions for customers. But it's important to note that from 2013, this is a whole new company. That's when the consultancy part was carved out and sold to a company called iStone, later bought by Columbus, who is now one of our largest solution partners. So circles are closing. But from 2013, the Lithium today, as we know it, is very much a product company or a full-blown product company. And that journey started back in 2013. Since then, we've been adding capabilities to the company, both on the tech side and business side. And the latest milestone for us was joining NASDAQ First North, where we were listed in December of last year. Next one, please, Jesper. And looking at business parts, we are a bit over 200 customers, pretty evenly split between business to business and business to consumer customers. The partner network contains of over 40 solution partners, the best and brightest one when it comes to e-commerce in the Scandinavian market space. And the platform is today the transactions in the platform have surpassed 10 billion SEK, Swedish kronor. Next one. And if we look at the financial KPIs of the company or such, like I said, we are delivering the product through cloud and with a subscription model. We've reached the most important financial KPI for us is annual recurring revenue, ARR. And we are now just north of 50 million in ARR in last quarter and fourth quarter. And that was a growth of 23% year over year. It's almost all of our revenue comes from recurring sources. So we are today, I think it was 97% actually in Q4 of our revenue is stemming from ARR. We are operating this business with a high gross margin. It's over 70%. In the last 2 years running, we've been at an average of about 73% in gross margin, which is of course important to us because that gives us a lot of room to maneuver and work with this good gross margin going forward. Next slide, please, Jesper. The market as such, probably no news here, but the shift to digital commerce is strong and was of course accelerating right now in the pandemic, and for the last 12 months we've had a big jump. But I mean the development of the shift was strong even before that, and the PostNord figures for Sweden just came out last week, and they showed a 40% growth in business to consumer digital commerce growth last year, which was very much over the expected number of coming in around 100 billion SEK. So of course driven by the pandemic then. A little bit less in the spotlight is the business market space, where we are having a good position as well. And there's not as much available public data in the business sector, but we are doing our own surveys. We got the Scandinavian B2B commerce survey coming out every year, and there is the data available to us shows us that the business-to-business market is growing even faster. At least we believe it will do in the coming years. So next one, please. So far, we've had pretty good traction in the market. Like I said, we got over 200 customers today, evenly split between B2B, B2C. We got a few well-known logotypes with us, which we are very proud of. Probably for those of you who know the Scandinavian market, the ones on the right side on your picture is more well known to you. But Lithium as such is not a household brand exactly, but if you've been maybe you've been shopping beauty products at Nordic Feel or Eleven, or kids product at Jolly Room, or some cool outdoor stuff at Revolution Race or Houdini, or fashion at Lindex, then you've been using the lithium platform, so you've been using the lithium product. Our churn is low. We've never been public with the specific numbers, but when you've invested in a lithium platform, it's usually quite a substantial investment, and as long as you're happy, at least we can just see that the customers tend to stay a long time with us, and so we'll just say that our churn is low. Next one, please. Regardless if you are a business to B2B or a B2C player, you're faced today with a pretty big challenge in the digital landscape. It's moving very, very fast, and the opportunities available to you is plentiful. So it's constantly changing the way you can sell products online. It's new channels popping up, closing down, not by the minute exactly, but it's moving really fast, and it's hard for actors out there to address all this uncertainty and all the possibilities out there. And it's moving very fast, and the competition is fierce, and everything is transparent. So what organizations need, if you click once again, Jesper, sorry, there's an animation there, is to face all this uncertainty. It's flexibility, it's speed, and ability to drive growth, drive sales. And if you click again, then the last piece of the puzzle comes in, which is, of course, then the lithium, because we provide all these things to our customers. Next one. Drilling down a bit more in the value proposition of the product as such. This is a pretty talky slide. What it describes is the product, the setup, our product strategy, basically. So this is you could also describe it as a blueprint for digital sales machines at scale. But in the middle there, you got the CMS, the PIM, the commerce part, the core of our product, and outside there's a layer we call the accelerator, where we take best practices of everything we've learned and put into the platform, so that you can use, and it will be available to for us customer, and it's all delivered through Cloud. And around us, we got the ecosystem of other things you probably need in your tech stack if you're going to run digital commerce at an advanced level, which pretty much all our clients do or want to do. So you, for example, you need connections to the ERP, to logistics, to sales channels, personalization, search in the site, payments, and so forth. But if you run it like this, and we, through our partners and with the platform, we provide all these opportunities for customers to customize the sort of unique solution they need to win their races. And if you click to the next one, Jesper, we position this value proposition in the market we aim it towards companies, what we call mid-market, of course, selling products then, doing that at a level of, somewhere around 10 million Swedish kronor up till 10 billion. There's no stop in the platform as such, but this is the target market we're focusing on firsthand. And there's some capabilities in our client characteristics on the right side there. What customers we are targeting more, but the best product market fit we see is clients with advanced needs in digital commerce. So they've got complexity in using a lot of channels, complex products or many products, many customers in many different markets, want to scale up fast, want to move fast globally. That's when our product is the strongest. Because we combine the speed of smaller solutions, which are more boxed in and will be constraining to you when you need more flexibility to move. We combine the speed of that with the flexibility of larger solutions that is totally custom made. So it's a nice sweet spot for us in the market there with the mid-market companies moving on up in digital commerce. We estimated the number of companies in Scandinavia to be somewhere around 15,000 companies, and we got 200 plus customers. So there's a lot of room to grow in Scandinavia. Right, the next slide, Jesper. The value proposition, we are using a customer acquisition model, as you probably understood from what I said already, that are separated in two major pipelines. We got the partner lead generation, and then we do our own lead generation as well. So we got our own sales and marketing force in place as well to control our own destiny when it comes to business. But of course, we want to go hand in hand with partners all the way from first awareness to closing deals, and regardless of where the source of the lead is from, we always go hand in hand the last mile up to the deal, and then when the deal is done, the partner implements and customizes the solution for the customer, and then we go live after the build time is usually 3 to 6 months. And then we'll do joint customer success activities, and the partner supports the customer with the platform. It's a scalable model, and of course it's very important for leverage to get the partner pipeline going, and we are on our way and doing pretty good there. Next one, please, Jesper. And we are working with what we see as the real aces within e-commerce in Scandinavia. These are the most skilled and the best consultancy houses in the Scandinavian. We would like maybe a few more names, but pretty much we're set in a very good place. And also we got a large number of tech consultants certified on the Lithium platform, which is important, of course, because there's a strong correlation between how many partners, how many tech consultants certified, and how much business we see coming through these channels. So very important for us, and we are working with the best, and we got very good cooperations in place, and also growing here. So this last quarter we passed the 40 plus line there. Next one, Jesper, please. So looking forward a little bit, the financial targets for the company, we are aiming to grow organically in the ARR with 20 to 40% in that corridor. We've been doing so for many quarters. We're looking back, and like I said initially, the growth in fourth quarter was 23%. So, and if you take the next one now, it's an animated slide there, Jesper. So if you click the first one. So growth potential going forward, the opportunity that we see for ourselves is, of course, keep capturing this fast-growing market. The shift to digital commerce has really taken off now, of course, driven by Corona, but it was disruptive and very strong transformation before that as well. And B2B is coming in a strong fashion. Click. We got a very good position, a leverage position within B2B. We are strong, and to our experience, we are pretty much in all of the interesting business opportunities in the B2B sector, definitely in Sweden and also in the rest of Scandinavia. So keep on catching that one. Next one. Of course, add new partners and increase the penetration. The important thing with the partner network and the cooperation there is that we are that good that they want to lift Lithium as a preferred platform when being in their customer interactions. So, and that's what we are able to achieve today, and also there's potential for us to do this in an even better way, of course. Next. Nothing new under the sun there, but keep on doing what we're doing. Develop the product. We invest quite a lot in product development, and keep building the core product and our best of breed strategy. And we are very much about flexibility and speed combined. So the modular architecture is definitely the way for us going forward. We also got headless. You can use the platform as headless, but the strength of the platform is the combination of fast and flexible. So we're gonna keep on going for that. Next, please. And market penetration, of course, we got strong position, strong standing within the Swedish marketplace. We've entered Norway and Denmark in the last couple of years, and we are making progress. And then, of course, there's always the possibility of penetration or going beyond those markets. The solution as such is global, so there's no constraints there. But rolling it with the go-to-market model that we do with partners, it also takes some other abilities to support the partner network when you roll out globally. So we are looking into that, but right now our focus is very much on Scandinavia and growing organically. Right, next slide, please. Last one. So to sum it all up, when you think of lithium, the key takeaways, it's a scalable, highly scalable e-commerce platform, and we've got a scalable business model as well. Next one. We are in strong growth in recurring revenue, and we got a high gross margin, over 70%, giving us a lot of room to maneuver going forward. And the last one. As we see it, we are very well positioned and in the market space we're acting in, and we are also investing to capture this further growth potential that we see for ourselves. So we've all in all, we are aiming to build a value machine, so to speak, building continuous value for customers, for partners, for shareholders, and I mean, we've come a pretty long way so far, but we've only just begun. So this is a journey that's just started. So lithium is rising, and if you're thinking of joining in, please do. We're gonna have we are aiming for a lot of success in the future. That was it. Thanks for your attention. And if there, I don't know, I'm not sure how we are on time, but if there's any time for questions, I'll be happy to answer them. So back to you, Jesper.
Thank you, Patrik. We do have time for some questions. Like you mentioned, an investment into lithium is usually a larger type of investment for your customers, and as such, I'd imagine that the Corona pandemic has had an effect on customers being willing to invest in such a quite a large project. How do you feel? What's the customer investment interest or demand right now versus perhaps Q2 last year at the height of the Corona pandemic?
It's much better. The will to invest is, I would say, is back. Definitely, I mean, the demand for digital commerce solutions are high, and also been so for quite some time. But we got the full spectrum between business to business companies maybe haven't moved into the digital space yet at all, from retailers with a large traditional network of stores to the pure players and direct to consumer. So I mean, depending on what sort of business you're running, you ran into different scenarios back there a year ago, right? So, but the first Q2 in 2020 was everybody was just doing pretty much damage control and trying to figure out the way to move. So the willingness to invest wasn't that great then, unless if you were, of course, a pure player and direct to consumer, or something that you've already had a large footprint digitally. Then it was just full gas, right? But today, I think I would say the willingness to invest in the general terms are back to normal, if there's the new normal, or in our case with digital commerce, it's the willingness to invest is I would describe it as pretty high.
Thank you. And I thought it was interesting you mentioned that in Sweden alone there's around 10,000 potential customers for you, where you have 200 as of right now. And I was just, would it be perhaps such that you could be able to grow your 20 to 40% organically for a lot of years in Sweden alone without expanding into the Nordic neighbors?
It was 15,000.
15,000.
I meant all of Scandinavia, and I'm not sure I said that, but it was the Scandinavian marketplace spaces together. So in Sweden, they're about half of that number. So not that far off. But yeah, there's a lot of room to grow for, of course. And I mean, many businesses in the target group are already on some sort of digital commerce solution. So, but just doing the math and thinking you probably change your platform at least like every 10 years or so, there should be around, somewhere around 1,000, 1,500 opportunities for us every year. So, yeah, it's we definitely got room to grow. It's in Scandinavia, yeah, for sure.
Thank you. And just the last question here. You obviously, the last few quarters, you've added on quite some personnel in terms of sales and marketing. But I was wondering, do you see an opportunity to scale that further in order to improve, Litium's own lead generation?
Yeah, we could, of course, but we've been doing quite a few investments in that area last 2 years, I'd say. And today we are in a good position. We got capability to scale from to higher levels with the resources we got on board already. So now it's more about getting the full effect out of the investments we've made in the last 2 years when it comes to sales and marketing. So I'd say we are in a good place there. Yeah.
Thank you. I think that's all the time we had. But thank you, Patrick, for joining us today and telling us more about Litium.
My pleasure. All right. Thank you.
Thank you.
Bye-bye.
Ja, men jag käkar lite mackor och ägg till frukost som vanligt.
Som vanligt?
Jajamän.
Det blir inte mycket. Nej, tyvärr. Jag måste nog byta.
Ja, jag käkade ägg och mackor till frukost. Ulrika, är du där?
Ja, jag är här. Hörs det bra? Hallå?
Ja, jag testar bara ljudet lite. Vi kommer... Räknar ni ner eller? Hello and welcome everyone to today's presentation of Polygene. My name is Stefan Knutsson and I'm an analyst covering the name here at ABG. And with me today I have the CEO of Polygene, Ulrika Björk. Welcome.
Thank you. My name is Ulrika Björk and I'm the CEO of Polygene. I would like to introduce you to Polygene and I will concentrate on the Q4, but I will make a short introduction for you who never heard about us. So Polygene have a vision of transforming consumables to durables. We are operating in the textile industry, and as you might know, this industry is facing a lot of challenges. There are long-term goals in United Nations that they should halve the carbon emissions in a 10-year period, starting by 2020 to 2030. And for that to happen, we need to do some disruptive innovations to make this curve break. And Polygene have a solution for this. We know that about 60% of the potential for saving is in the upstream production phase in the textile industry. We know that 20% could be affected by the brands and the company who place products in the market. And then we have 20% where actually the end consumer can make a huge difference by changing their behavior. Next slide, please. Polygene, we are a lean and focused company. We started out back in 2006 when the SARS epidemic was raging in China back in 2004. And we are a spin-off of the Perstorp Group, which is a chemical company from Sweden. And they found out that they had a product that showed to be very effective against bacteria and viruses. So Polygene was created to commercialize this product. And we started out in the hard surfaces, but after a couple of years, we decided to continue and move into the textile industry to prevent odor in mainly training clothes at that time. And since then, we have been focused in the textile apparel market, focused on sport and outdoor, but also moved into fashion, lifestyle, home textiles, shoes, and other areas. We are working together with premium brand partners. That means that our technology could add a certain value to their products. And if they communicate this right, this will have extremely value and demand from the end consumer. So that is what you have when you're building ingredient brands, when you are selling something that you can't see, but you need to be explained. In the Polygene organization, we have 27 headcounts. We are a global company, so we have people everywhere around the world on strategic places where we have customers or production. We also have a very large network of distributors and agents working for Polygene. And the next slide, please. So how does it work? Polygene is working with different technologies to enable and prolong lifetime of garments. That means without treatment, you can actually keep clothes odor-free, or you can keep them clean from viruses, and also take these smelly odors out of textiles. And that makes that you can wear more and wash less, and therefore the lifetime of this product will last longer, and that is good for the environment. So we have three technologies. The first one is an antibacterial. It means that it prevents bacteria to grow. And it's the bacteria who causes the odor. And then we have a product that was launched last year in 2020. It's an antiviral technology that actually makes the textile self-cleaning, that the virus will disappear within a certain amount of time, according to ISO standard. And then we have odor crunch, that is also odor technology that capsules odor molecules and they break them down so you can't smell them anymore. And odor crunch could easily be combined with the other ones to have a comprehensive technology to prevent odor. Next slide, please. And the Polygiene offer contains of three very important parts. It's first the technology itself, of course. This is the chemical who makes the function be applied into the textile. And then we have this marketing. It's a very important part of building the ingredient brand. It is the communication around the function. So actually the end consumer knows what this is and what the features and benefits are by using Polygiene treated garments. And then the last thing, but it's very important too, is our support. We have a global support team of technical people and marketing people who can help our brands to sell through. And we have a support all the way from the day we sign the contract until the products are in the store. So that is Polygiene's brand offering. Next slide, please. And we add values in many categories. We started out in sport and outdoor, but then moving into everyday clothing like fashion and lifestyle. And we also see other kind of products now in bags, for instance, and home textiles, gloves and masks. So actually you can treat Polygiene's products in any kind of textile materials. Next slide, please. So now moving on to the highlights from the quarterly report. We had a new record sales again. We had, I think the third quarter was also a record and we beat that again. We see that the Stays Fresh antibacterial is recovering. We had problems during the 2020. As many other companies, our partners were suffering really hard from the lockdowns, when they have overstocks and they need to cancel productions. And in some of these production, Polygiene was supposed to be applied. But now we can see in the quarter four that this is recovering, which is really, really nice. We also have an updated version of Viral Off, the antiviral technology, where we actually could promise 30 washes, that we still have the effective after 30 washes according to the standard. And that is ready to ship out now. And then we also had 29 new agreements in place. This is the same pace that we've seen during all of 2020. A huge interest, mainly of Viral Off, but also of the other technologies. And then, of course, the year ended with acquisition of Addmaster, and I will come back to talk a little bit more about that. Next slide, please. Some key figures. We had the sales of 26.6 million SEK, and that was a growth of 40%. If we consider the exchange effect of the dollar, it was more than 55% growth. That's really good numbers. The gross margins were slightly lower than the last year. That's mainly because of two things. First is there was a mix between the royalty and chemical that could hit the margin a little bit. And then we also saw the freight cost has been quite high. I know that is a fact in all industries now, where we can see 3, 4, 5 double of the freight cost because of lack of containers going to China. But this is just temporary. We are still aiming for a margin around 68 to 70% on a full year basis. And on the EBIT, we had minus 2.4, but that is actually caused by one-time cost for the acquisition. So consider that we are on a plus in the quarter compared to minus 2.2 last year. And next slide, please. And this is a slide of the full year. We ended up at almost 84 million SEK, and that was a growth of 22. If we adjust for the exchange rate, it was 27%. And the gross margin in the full year was 68.6, slightly lower than last year, but it's around this area where we are aiming to have in a full year. And the EBIT was minus 1.1, but if we again consider the one-time cost for the acquisition, we actually had a plus of 1.5, and that should be compared to minus 6.6, where 2020 ended up. So it's a huge improvement, and I can really feel that Polygiene has made a really good turnaround now. After 5 years, we are on a plus result on a full year level, and that's really, really good. Next slide. This is just to show the different segments in the quarter, how they moved. We can see that sport and outdoor is still the biggest one, but the growth is minus 5%. So we still have a long way back to where we were before. Lifestyle is growing very good. We had a growth of 117%, and it's a share of 31%. Home textile too is also having very nice growth. And home textiles, it's mainly towels and bed linens, but it could be any textiles you have at home. And then footwear is still a very small segment for us, but it adds huge value to the end consumer. So we need to continue to penetrate this area because we know there is a huge potential there. They have a good growth, but it's actually because of the agreement with Dr. Scholl now coming in. But we're working on it because we know that footwear is as I said, a huge potential. Next slide, please. Yes, and just some short notes on the different technologies. We had a nice recovery, as I said. The year-to-date drop was minus 20% in this field. But in Q4, we saw it was back on plus on 3%. So it's really, really nice to see. We can see that many of the existing brand partners, they start to produce again after skipped 1 or 2 collections. And the pipe of new brands coming in is very promising too. We were a bit afraid for how long this will last, but now we can see that actually they are coming back and new customers as well are interested in bacterias. And then, of course, to still continue to focus on the sustainability benefits by using Polygiene. We attract a lot of fashion customers and a lot of lifestyle customers because of this storytelling we have with the environmental benefits of using Polygiene. Next slide, please. And viral off, we still see a strong demand for antiviral technology. It won't be over because we have a vaccine. I think it's actually opposite. When we open up and start to travel again, to go back to work, we start to have events, you would like to have this feature with antiviral technologies in the surfaces. So I think this is not an end because of the vaccines here. We can't see anything that shows that and support that. Yes, the Viral Off Plus ready to ship. And it's been a quite long process to develop this updated formula, but it's because of the testing procedures has been, I mean, the lead times are crazy. You can wait 6 to 8 weeks until you get a test back. And you don't want to send 100 tests at once because maybe you only need to pay 3 because you have a good result. So it's like a balance when you develop this. Yes, the new agreements that I said, 29, and all in 2020, we signed almost 100 new agreements, and that is also a new record for Polygiene. We're never onboarding so many new customers. And of these 100, around half we've seen that they have placed orders. Some of them are just one order, but some of them are recurring business that will come back. And many of them are still test orders because there are some huge contracts and they haven't really get started yet. So there are all different kinds of orders here, but it's good to see it's coming. We can see, for instance, that Diesel, like you see in the picture here, it's from their spring collection. They have started to place order now and will launch soon. And this is an example of how it could look when they launch this collection. And then we have the sprays, Milano Colori, that also started to place orders. Next slide, please. Odor Crunch, as I said, the demand is growing. It's quite small still. But 2020 has been about bacteria and viruses and other antimicrobial technologies, not so much about Odor Crunch. But we can see that something has happened with the demand for these technologies as well. We have 23 brands working with Odor Crunch now, compared to only 1 in Q4 last year. And you can see we have Diesel launching a combination with Viral Off. We have this Mosh Mosh, it's a Danish brand that you see in the picture. And Dr. Scholl is also featuring with Odor Crunch. And Introsport, who was the first customer coming on board with Crunch, they come back now and want to continue to do more collections. Next slide, please. And this is just a list of some of the new partners we had in Q4 to show that it's really, really good partners coming in. We have Marks and Spencer's that all you know, they started with one kitchen towel. Now they come back to us and want to expand the collection. And we are in their core collection, so that's really good. Bed Gears, it's bed linens in US. They are in a testing phase right now. Hanse Shopping is cleaning materials, where we can treat these sponges and cleaning material with textile inside. A lot of face masks. We had Armani. They're going for a travel collection end of the spring. Caterpillar, as you can see in the picture, they already launched and they sold this collection, and they come back and want to expand to do more with us in 2021. And then we have the backpacks. That is Gregory, who is a really, really premium brand when it comes to backpacks, and it's actually in the Armani group, in the Samsonite group. So that makes us also good opportunities to move into the group. Next slide, please. And now to the acquisition of Admaster. This was finalized the completion date was in January, but this was signed and the agreement was signed in December. The price was £33 million, cash and debt free, and it was paid both in cash and in shares. So we had this fundraising process that was very, very successful. And the owner, Paul Morris, the founder, and he will stay in the company as an advisor. And we have Sandrine, who is the managing director. She will also continue in her role. Next slide, please. So the background to this acquisition is actually Polygiene and Admaster has been partners for more than 12 years. They have been the main supplier for us in our additives. And back in 2018, Polygiene sold the remains of our hard surface business to them. So we always had this divided between us, that Polygiene is focusing on textiles and Admaster is doing hard surfaces, and we were never interfering with each other in the market. But now, since the COVID hit, we felt a lot of times this year 2020 when we actually went to the same partners because they wanted to treat everything. They wanted to treat with textiles and hard surfaces, and that was, okay, what do we do with these hybrid customers? Is it a Polygiene customer or is it Admaster customers? So we started to discuss this, that could actually be very, very interesting to be one player in the market and to strengthen ourselves and to be a bigger part in the market. So there is huge synergies between us. There are so many benefits for working together. So I think this will strengthen the position. Polygiene's position and Admaster's position will actually be stronger together, like 1 + 1 is 3. Next slide, please. Okay, so since Admaster will not be in the group until January, the first quarter, I will not talk a lot about them, but we will see in the reports coming where we will integrate them, of course, into their quarterly report and be a part of our group. But Admaster was a private held company. It was founded in 2000 by Paul Morris. It's a UK company, only with 12 employees. They don't have any team globally like Polygiene have. And they are actually doing all kind of antimicrobial treatments that is not textile. That's the perfect fit. They do papers, they would do glass, paints, coatings, plastics, everything that we can't do in Polygiene. They have a lot of global customers, and they are building the brand Biomaster for their antimicrobial technology, and they can do tailor-made formulation, and that is different from Polygiene, where we have like standard recipes. And they work through distributors around the world, and they also have 3 other very, very interesting technologies in the portfolio that might be something that Polygiene can commercialize. Next slide, please. And this is the pro forma with the group together. The last 12-month Q3 was the numbers where we bought the company on, and the full year 2020 was when we added another quarter on a rolling 12 basis. And as you can see, we have a really good momentum now. The net sales will be 145 million, and this is when the intercompany transactions are deleted out. So it's 145 million. We have a gross profit of 98 million, a gross margin of 68%. That will give us an EBIT of 32.1 million and the EBIT margin of 22%. So this is like really nice, healthy numbers. And I can also say that the first month of the Q1 in January has started really well. We are like around 70% up after just 1 month in 2021. Next slide, please. So what we are doing right now, we are working on the integration phase, of course, get to know each other, meetings, a lot of company webinars. Unfortunately, we can't meet yet. Education and knowledge sharing. And then we started with the cross-selling synergies immediately. That means that Polygiene now have a bigger portfolio to present to our customers when we are out there selling. And Addmaster, in the same way, they can offer textiles now to their customer and their industry. And we are not interfering in the same kind of customers. We're not in the same kind of products. So we're still quite different in the market at this point. So here is a good opportunity for cross-selling. And then, of course, we also see synergies in the back end, in the finance. We can see in the supply chain where we try to align to make it more streamlined now. So give us more flexibility, and that's really good. And also in other areas where we can see that we can work really well together. Next slide, please. That was my last one. So now I'm open for if you have any questions.
Thank you, Ulrika. I will follow up with some questions from my own. Firstly, from Viral Off, obviously a huge success during 2020, but how do you make sure that this is not just a short-term boost by the pandemic, but that you can benefit from it also long-term, going like 21, 22 and so on?
Yeah, first we can see in the kind of agreements we have been signed up. It's long-term agreements. We can also see that many of the reports and the experts, you can see they made surveys. The demand for this has increased tremendously during this year. The customers or the end consumers, they are so aware of bacteria and viruses than never before. So the interest is very good on all levels. And we haven't seen, of course, it's not like crazy as last April when we started, but it's still a lot of demand for antiviral technologies. It's we can't see that it will decline.
Okay, perfect. And then if we look on the Stays Fresh technology, in the fourth quarter we saw a bounce back to growth here. How confident are you with the demand picture going into 21, and how do you think that the pandemic has affected this business area long term?
For the Stays Fresh antibacterial, we know why we have this decrease in sales. It's because of actually we had collections that were skipped. There were just no production. I'm quite confident that we will come back. I don't know if there will be third waves or lockdown again, but if there will be no major lockdowns again, I'm sure this will be growing very fast again. And as I said, the sustainability angle of wear more and wash less and have this antibacterial treatment, this demand was there even before the pandemic. I mean, it was the core business of Polygiene. Now, as I said, people are more aware, it will definitely be long-term.
Okay, perfect. And then, Ulrika, if you would like to summarize, what will be your main focus for 2021?
First of all, it's integration, of course. We work a lot on that just to get the two companies together and to squeeze out the synergies that we have been calculating on, of course. And then, of course, it's growth. As always, we focus on the top line growth. Yeah, I think that's enough, at least for the first half. And then we will see what happens in the autumn.
Okay, perfect. Then I would like to thank you, Ulrika, for today's presentation, and also for all you listeners to listen in.
Okay, thank you. Bye.
Hi, and welcome to this next presentation here at ABG Investor Day. Myself, my name is Simon Granat, and I work as an equity analyst at ABG, covering IT and tech stocks. With us today, we have the pleasure of welcoming Axel Lundvall, who is the CEO of Rolling Optics, and he will present the company for about 20 minutes, and then we will follow up with a smaller Q&A session. With that said, Axel, please go ahead and present the company.
Thank you very much. And before I present the company, just present myself again. So I'm Axel Lundvall. I'm the CEO and founder of Rolling Optics. I'm also the inventor behind the technology that we have developed. Can we change slide? So before we go into the details, I just want to give you a brief introduction to the company. We consider ourselves to be world leading in what we call micro-optic security solutions. We are developing, manufacturing and selling such solutions, including 3D effects. The company is a spin-off from Uppsala University, and we have more than 15 years and 200 million Swedish krona invested into the development of the technology. We are today around 20 employees, and we have our own production facility in Solna and around 50 patents to protect the technology. And as you can see from the logotypes below, we have customers and partners all over the world, and we'll get back to those a little bit later. Next slide. Starting with some highlights from last year. Up until May, we were not listed, but through a reverse takeover, we entered the Nasdaq First North Stock Exchange. And then all the news started coming. In July, we announced that we went into a distribution agreement together with Shenzhen Yuto Packaging Technology, one of China's leading suppliers of premium packaging. And the following month in August, our partner, CCL Secure, the world's largest manufacturer of polymer banknote substrates, launched a new security feature, which is called Cinema. And this security feature is completely Rolling Optics technology. We'll get back to that a little bit later. We did also a rights share issue in October of about 30 million Swedish krona, and this to further increase our pace in developing our commercial activities, sales activities, and to accelerate investments in R&D and IP rights. And eventually, in December last year, the first banknote, the first commercial banknote, a commemorative banknote that included the cinema feature, was launched, and this was a milestone in the company's history. Next slide, please. If we have a quick look at the figures from 2020 and compare with 2019, we can see that the revenues and total income almost doubled from 2019 to 2020. This is primarily due to revenues from our business area, brand security. We can also see that we have plenty of cash in order to carry out all the investments that we would like to do during the coming year. Next slide, please. And this is what it is all about. Counterfeit goods have become a big problem in the world. Maybe we usually tend to think about counterfeit products as luxury goods or brands sold on streets in exotic countries, but the fact is that this has now moved into the shops and onto the shelves, and not only in the exotic countries, but also here in Europe. Across the globe, it is a huge problem, and the total value of the trade in counterfeit goods is estimated by the OECD to be somewhere around $500 billion. But it's not just values in general, it is also a danger for health and life. So there are figures saying that about 15 to 30% of all antibiotics sold in Africa and Southeast Asia that are fake. And this is, of course, a very dangerous situation. And Interpol estimates that about 1 million people die every year due to fake pharmaceuticals. And in countries like India, about 1/3 of all FMCG is supposed to be fake products. And the problem is that consumers want to see the difference between genuine and fake products, but they cannot do. Now we have a solution to that. Next slide, please. So what we have invented is a new micro-optic 3D technology. It comes like this in a very thin substrate, primarily as a label. If I can ask you to click one more time, then hopefully there will be an animation starting. Yes, there we can see. So you can see on the label on the pharmaceutical package that there are 3D effects built into this thin polymer substrate. And this is a signal to the consumer that then can verify the authenticity of the product. Now, this technology can also be integrated into banknotes, passports, and ID cards. And this will hopefully replace the easily copied conventional holograms that we used to see on packages before. So that would be the rainbow shimmering metallic labels. So with the help of our technology, the consumers can quickly and easily recognize and tell if there is a genuine product or not. Next slide, please. Now we are active in 3 business areas. The first one would be high security, which is primarily banknotes for us. The second is brand security, and this is where we have the most of our revenues today. And this is, of course, protecting brands from counterfeiting. And the third segment would be brand identity. This is a little bit new segment to us that we're opening up right now. Here, the brand owners want to make use of the security aspect that we can bring, but also the visually attractiveness that we can bring to a package or a product by applying our technology to it. Next slide. So high security, as I said, is primarily banknotes for us. Normally, when we talk about banknotes here in Sweden, at least, we think about paper money, banknotes made out of cotton. But there are also polymer banknotes, which is essentially plastic substrates, and hybrid banknotes, which is a combination of plastic and paper. The market is huge, and there are about 200 billion banknotes produced every year. And opposite to what we might think here in Sweden, this is actually a growing market, and it's growing with about 3 to 4% per year. However, during the pandemic, there is a trend that this is increasing even more. There were figures coming out short before Christmas from Bank of England saying that between March and November last year, the total volume of cash, sterling pounds, increased with about 10%. So it's a lucrative market for those who are in it. Now, what can we earn in this context? Well, what we bring is considered to be a security component, and security components can earn about 1 to 15 Swedish öre per component, depending on if it's a high-end or low-end product and the business model, of course. Next slide, please. Now we have several activities in the high security field, but most of them we cannot talk about until they are formally launched. Now this is the one we can talk about today, and this is the partnership that we have with CCL Secure. As I mentioned before, CCL Secure is the biggest producer of polymer banknotes in the world, with about 80% of the market. They produce banknotes today for about 30 countries and over 160 denominations. All in total, they have produced about 60 billion banknotes, and they are growing. The 2 most recent customers that they acquired is Canada and the UK, which has converted completely from paper money to polymer banknotes. And there are more countries that will follow this trend. Next slide, please. Now, as I told you before, CCL Secure launched this cinema feature in August last year. and it came in the shape of this house note. A house note is a complete banknote produced in millions and millions, and it has passed all the durability tests that are required for a banknote. However, it's just a fake banknote to demonstrate the features. And as you can see here in this blue field, there are 3D effects built into the substrate itself. Now, it doesn't look very impressive in the camera as I present here, but live, it's magic. Now, short before Christmas, the first commercial banknote in terms of a commemorative banknote was launched. And it is this a Lebanese 100,000 livre banknote. And this is also a milestone for the company. And hopefully this will render into volume projects where we think that there will be revenues coming in from commercial banknotes on regular denominations within 2 years. The business model that we have with CCL Secure is a license model where we get a royalty for each banknote produced and sold containing the cinema effect. And as you can see on the quotes in blue, this is the words that CCL use when selling this new security feature, which is essentially the dominant feature that they are promoting when selling their polymer banknotes today. Next slide, please. When it comes to brand security, we have our own production in-house in Solna, Sweden. And as you can see on the picture to the left, it comes in large rolls. These rolls are then converted into labels primarily, just like the one I'm holding here. However, it is rolled up on these reels and then sent to the brand owners, which apply them in their filling lines. If you can click one more time, there will be some more images to show how these labels can be applied on various goods. It could be packaging, sealing labels, bottleneck labels, etc. Next slide, please. So the market for brand security components is huge, and it goes across all product areas, more or less, unfortunately. The market value in 2026 is estimated to be around $240 billion US, and it's increasing with about 10 to 11% per year. Now, the typical volumes when we sell labels is somewhere between 100,000 labels and 100 million labels per client and year. So what can we earn on a label? Well, depending on the size and the complexity of the label, we can charge somewhere between 5 öre and 2 krona per label. And as you might understand, the growing markets have the biggest problems with fake products, and therefore they will be focus for us. Next slide, please. So the core markets for us would be China, Asia, and Middle East, to some extent also North Africa. We work with direct sales towards end customers, primarily to get reference customers in remote geographies. But then we also work together with distributors to get even closer to the clients. And this has been a very good strategy during the pandemic due to the fact that we can't travel so much. We're still handling customers via our distributors in different regions. These distributors could be security solution providers, it could be share agents, but also label manufacturers or packaging manufacturers. And here you can see again some of the reference customers, and some of these that I would like to underline is Supariwala Exports, for example. This is the largest tobacco manufacturer in India, the privately owned. And to the right below, you can see also the seal of China Banknote Printing and Minting. It is the state-owned entity that use our labels to authenticate the genuinity of all their commemorate coins and commemorate banknotes. And this is an important reference when we do business in China. Next slide, please. So how does this work, and does it really work? Well, here is an example that we would like to tell you about. Most of our clients, they're very silent about their problems and they don't really want to communicate. But in this case, we have all the figures and can tell the story. So this brand, Sultana, it's a chewing tobacco brand in Algeria. They had huge problems with counterfeit products. These pouches are sold on the street in Algeria for about 5 to 10 Swedish krona. So it's not an expensive product. It's not a luxury product, but still we can bring a lot of value for the customer. So they started with trying with conventional holograms, which I talked about previously, i.e. Metallic shimmering rainbow colored holograms, but these were also copied. So it didn't really work. But then they started using our labels, and all of a sudden the counterfeits disappeared from the market because the consumers wanted to tell the difference, and now they finally could tell the difference between the genuine and the fake products. It turned out that the counterfeiters had about 50% of the market. So this means also that the brand owner could increase their own sales with about 100%. Now this was good, of course, for the brand, but it is also good for Rolling Optics because the rumor spread, and now we have 3 more clients in the chewing tobacco segment in Algeria, because their customers also wanted to be able to tell the difference of genuine and fake products. And this, of course, generates repeat orders several times a year, and year in and year out, so to say. And during 2020, we sold about 80 million labels to the chewing tobacco brands in Algeria. So this work shows how it works and that it works. Next slide, please. So the last business area that I told you about is what we call brand identity. Now, in this segment, the customers might want to use the fact that we can bring security to the products, but we can also bring a new tool when it comes to differentiation in packaging and product and building brand identity. It has also turned out, when we have done so-called eye tracking studies, that products carrying our technology would render much more attention on the shelf. It turned out that a product with Rolling Optics labels on gave about 70% more attention compared to a product without Rolling Optics 3D labels on. So this is a segment that we are now exploring and hope to open up primarily in Asia during next year. Next slide, please. One important partnership is the one in the brand identity context is the partnership that we announced in July 2020 with Yito of China. They are one of the leading packaging producers in premium packaging in China. And together with Yito, we have an aggressive agenda when it comes to integrating these new type of materials into packaging, primarily as a brand identity application, but also for security reasons, of course. Next slide, please. Looking a little bit into the future, summarizing what I have mentioned to you here now, with this in the security field, high security field, we look forward to the first volume banknotes to be launched, and hopefully we can also tell you about more collaborations that we will establish in the high security arena within short. On the brand security and brand identity area, we're going to further enhance our partner network and grow continuously together with our customers and partners, primarily in Asia and Middle East. And hopefully we can also tell you about the first clients in the brand identity segment before the end of the year. We're also building some new production capacity, a new production system, this to build more capacity, but also to make production even more effective and to stimulate our R&D activities. We will also invest further in R&D and IP in order to keep and maintain our position as world leading in this micro-optics technology. And this, I think, is the final slide. If we go to the next, I'd like to say thank you for your attention.
Thank you, Axel. Let's continue with with a few questions from my side. Initially, you mentioned that you have 3 different areas that you focus on and that you divide your business in. Which area do you see most potential in the long run?
Today, we have most of our revenues in the brand security area. And as you saw, we grew, we almost doubled the revenues during last year compared to 2019. We expect that business area to grow steadily. However, when it comes to banknotes, today, we don't have any significant revenues, but these will, of course, come with the launch of this new security feature and other projects as they will come out. And here, there will be significant revenues from the very start. So we expect that within a few years, the high security segment will be larger than the brand security segment. This goes also for the brand identity business area. This is also about larger areas, so to say. The brand security area is primarily about labels this size. If we use our material for brand identity purposes, it will be much larger labels or whole laminates, and as soon as the brand owners will start using this, the volumes become very big, and so will the revenues. So looking forward 5 years or something, I would expect that both the high security segment and the brand identity segment will actually be larger than the brand security segment.
Thank you. CCL, it sounds like a very reputable customer to contract. What's in it for a large player like this to actually sign an agreement with you? What's the dynamic around that? Is it to increase their market share, to increase their competitiveness? Is it so they may increase their prices to their customers? Could you explain to us the dynamics behind that?
Well, everybody needs to differentiate, so to say, and if you want to maintain or create a position where you consider yourself to be world leading, you have to come up a fairly small player compared to the paper substrate manufacturers. However, as I mentioned, there is this trend that the central banks are moving from paper banknotes to polymer banknotes for different reasons. And they just want to give them one extra reason, also the more attractive, good-looking reason, but also the more secure reason. Other arguments for moving from paper banknotes to polymer banknotes would be the hygiene factor, but I think the most dominant argument would be sustainability and durability. The polymer banknotes, they last about 5 times longer than the paper banknotes. So it's an economic question for the central banks.
Thank you, Axel. Unfortunately, we have run out of time, but just as a final remark, you mentioned that you have an action plan going forward, but if we could just focus on 2020, what would your key objectives be for that year in just a short time?
For 2021, as I said, we are building this new production system that we'll put into action at the end of the year. We are also hoping to get the first customers in the brand identity sector. We're building our partnership together with Ito in China and expect a lot from that. And of course, we're focusing on building volumes on the brand security business area with some steady growth there.
Thank you, Axel. A pleasure hosting you.
Okay, thank you very much. Bye.
Bye.
Welcome back to the ABG Investor Day. My name is Johan Brown, a retail analyst here at ABG. We now have the pleasure to welcome Håkan Lagerberg, the CEO of Swedencare. The floor is yours, Håkan.
Thank you so much, Johan. Nice to be here, and I will make a short presentation of Swedencare, where we are right now, and some views going forward, and then Johan will have some questions for me. So please, next slide. Swedencare is a company working globally in the pet care market, and as you probably heard about the situation for pets during COVID, that's been a major impact, and lots of people have been talking about it. And it's clear that people there's a bigger demand for pets, both cats and dogs, and since people stay more at home, it's nicer to have a pet at home. And if you do, then of course you spend more time with them and would like to take really good care of them. So that's really has been a process for the last 10-15 years, that people take better care, the pets live longer, and there's some bigger demand for let's say pet healthcare products because of course if they live longer they get some symptoms and problems when age comes around, and like for humans. And it's also very much about the perception of treating your dog as a family member, really taking good care and having the same values. If you're a vegan yourself, then you would like to have vegan food for your pet. If you're into some different other things, then you're really focusing on your pet as a family member. So that's really a big driver for the, let's say, increased spend that has been taking on in basically every market around the world. Next slide, please. Pet market, always difficult to get really good numbers here, but you could say in general, you could say that the number of pets in the US and Europe is fairly alike, but there's a completely different pattern when it comes to spending. In the US market, the average spend is basically twice as high as in Europe, and then that is if you take Europe as a whole. If you look at Northern Europeans, then they spend a bit more than Southern Europeans, but the difference is quite significant. Looking at growth markets, since this COVID year, all markets have basically grown in number of pets. I would say that both Europe and US have been, let's say, increase in lower digit the last 10 years, but this year it's really been an increase and the demand. No more, let's say adoption dogs are available. There's a queue for all the breeders, and I read some figures saying that last year over 10% of newly registered dogs was in Sweden, and I guess it's basically all around the world. Asia has been the last five years been growing a lot. Haven't heard any numbers from Asia about this COVID year yet, but I do think that the increase still continues there. When looking at the market where we in pet nutraceuticals, it's really an area that's been growing faster than the market for the last 10 years, about double digits, and we've been growing faster than that. And that's mainly because we've been in a very special niche of the market for many years in pet oral care, and oral care has been really a focus area for pet owners, specifically dog owners. Next slide, please. So, looking at us right now, we are completely different when looking at us today, compared to last year at the same period of time, since we made 4 major acquisitions last year. I will come back to those, but we're really it's still a let's say small company in numbers of employees, around 85, spread out in over 11 country offices. So we have offices, sales offices primarily in Sweden, UK. There we have 2. Ireland, we have both our own factory production site and also a sales office. We have offices in Spain, France, and Greece in Europe. Oh, now we changed. Okay, bye. And then we actually have 4 offices in the US, 4 different companies. We are in the process of let's say streamlining some of the operations there. So we won't have 4 offices going forward, but still 4 different entities. We really focus on premium products. We have a wide range of products that I will show in the next slide, and we have products for dogs, cats, and also equine in some markets, not in all markets that we sell. We are really sales-focused company, having expanded our sales in over 50 plus countries. Have had strong growth combined with really strong profitability, and that's the essence of Swedencare. We want to continue having really strong growth, but with keeping the bottom line strong as well. Next slide, please. So Swedencare started off with the one product line. That was really the basis for Swedencare, called ProDen PlaqueOff. It's an all-natural product, algae-based product, where the original product was really a powder-based product that you sprinkle over the food daily to your pet, and that will change the composition of the saliva, and within a couple of weeks you will notice that the plaque formation have stopped. And how do you notice that? You really notice it on the breath of your dog. It gets better after a couple of weeks, and if there's visible tartar buildup, that will also go away, but takes a bit longer. But I would say in a couple of months' time, you will notice a very significant change. Then we listed a company in 2016 with the aim of taking part of the consolidation of the pet healthcare market, and we bought NutriScience, an Irish-based company with both production and a wider range of nutraceutical products. So that was the time when we also got the equine products. And then we built the company from 2016, growing the company steadily, and as I said, with a very healthy profit margin going forward. Then it actually took a couple of years. We were engaged in a couple of acquisitions processes, but never managed to complete in between 2018 and 19, depending on different things. But really in 2020 there was a big change for us. We started off when we acquired Stratford Pharmaceuticals, a nutraceutical company focused on veterinarian side, selling from Florida, US, and we actually tried to buy them 2 years previously, but lost in the end bidding. But for different reasons, that company came out on the market again, and we managed to get exclusivity for that deal immediately, and that was due to the wish from the management that they really wanted to join Swedencare. So and we're very thankful for that. We have really, that was the basis for us going forward to making more acquisitions, that we really have a good operations within the Stratford company. We added Animal Pharmaceuticals, a very similar company to Stratford when it comes to product. What we did get with Stratford Animal Pharmaceuticals was a really strong offering within the dermatology sector. That was the one area where we didn't have any offering at all. And those two companies are very similar, focused on a couple of different main customers. So now we feel that we really have a really comprehensive coverage of the veterinary sector in the US, and they've really started working together when attacking the market. We also acquired a standout company called Nutravet, a UK-based company, the number one company in UK, really strong vet-only company, and have been focusing on the UK. But one of the reasons why the Nutravet owner and founder Matthew chose to sell to Swedencare was really that he liked the structure of our company, how we run it, that he would stay on and work basically as before, but with the help of our international side, getting Nutravet brand out in the world. And then end of 2020, we bought a company called Holden 2 with one really major brand called Pet MD, sold exclusively online, and that was really the reason why we bought Holden, was really to get the online capabilities, knowledge, and presence. So really strong sales on Amazon and Chewy.com in the US. But as you see here, we really have a wide range of products. We have a wide range of channels where we sell. We sell to veterinary side, physical clinics. We sell to pet shops, pet specialty shops, physical stores. And then, of course, lots of focus on the online sales now. So we're basically on all major platforms all around the world. But there's still lots of things to be done there, both from our side as regards of what brands and what products that we offer online in different markets, but also how we work with the marketing and sales online, and that's really the big focus going forward. Next slide, please. Just some more things about our newly acquisitions, as I've said. Stratford, vet and online, really strong focus on dermatology, really strong relationships with big buy-in groups and focus on big veterinary clinic chains. Only 19 employees, no production, but with very strong partners on the production side. The production side is really a challenge in the US. Lots of companies in the business have been struggling for a couple of years, and specifically last year, to get products. It's really strong demand from the production side, and we've managed to secure long-term deals with all of our major suppliers. Animal Farm, very similar, as I said. They have one major customer that Stratford didn't sell to, so now we really have a strong presence on the veterinary side. What we are doing with Animal Farm is that it's a really strong brand, and they have not been selling anything on, let's say, the big platforms, Amazon and Chewy. So that will be launched in Q2 2021, and we are really excited about that. Nutravet, vet only physical stores, and despite COVID, if you take out the Q2, as also we in Swedencare Group had we were hit by the lockdowns, but after Q2, it's really been really strong sales. And Nutravet, since they do not sell anything online, it's really impressive that we really could notice the pull from the end consumer wanting to get Nutravet products instead of any other similar products that they could find online. As you see here, pretty not too big companies as it comes to headcounts. 19 in Stratford, only 4 in animal pharmaceuticals, but they had a business model where they have outsourced a lot, and lots of those areas they outsourced finance, fulfillment, and some other things. Those assignments we're really transferring over to Stratford Care. Nutravet, 18 employees, mainly in let's say some sales, and also they handle all of the fulfillment in-house, and really effective fulfillment services in the UK, being able to ship products to all of the clinics in the UK. If an order gets in by 4 o'clock in the afternoon, they get the products the day after. Next slide, please. And then finally, Holden, really exceptional online company. We acquire the state-of-the-art competence within sales on Amazon, and that's really a focus for us since we've been growing on Amazon in Europe, basically without having that niche competence ourselves. So it's really going to be exciting to see what we can do with Holden. We are also going to introduce PetMD in Amazon Europe, and that's also really exciting for us. They've been growing really fast the last years, and of course last year with COVID, the online sales booming, they grew with basically 100%. Only 8 employees. We have hired a couple of more now in Q1 2021, and looking forward to continued really strong growth for Holden. And then there's some question marks, and that's really just emphasizing that even though we made 4 acquisitions last year, we still are on an acquisition path. So we are on the lookout, and there are opportunities out there. Next slide, please. Just looking at the pro forma 2020, adding the new acquisitions, you can see that that the consolidated numbers would be 527 million Swedish kronor with an EBITDA margin of 27%. And that's including acquisition costs that we did last year. Next slide, please. 2020 highlights. Strong growth, 89%, including the acquisitions that were added at half year and the end of last quarter. But the organic growth was 19% despite the hit in Q2 where we had basically no growth. So it was really nice to see that Q3 was strong, and in Q4 we actually had 32% organic growth, and the year 2021 has started strong. So it's really, we have good momentum. The acquisitions I've talked about. Then of course we started directly with the integration project and new product launches. It's even though we haven't been able to meet physically, it's really a thrill to see the organization working together from day one with all of these new acquisitions, still focusing on running the business, growing the business by themselves, but just looking for opportunities to cross-selling and synergies where we can help each other. It's really a really entrepreneurial organization, and that's what we've always been that, and that's really our focus when acquiring companies, so that we get the people with the same mentality and the same will to develop. We have presented new financial targets that I will present later on, and then acquisition of Holden in January 2021. Next slide, please. Sales per region here, comparing 19 with 20. It's of course big growth when looking at North America. Looking all of the regions, we grew in 2020, but of course when adding acquisitions, it makes the numbers a bit different. So North America 45%, rest of Europe 16%, UK Ireland 23%, and then we have Asia 6%, still having excellent growth, but when we're adding these acquisitions, it's tough to keep up the numbers. China going from 11% to 6%, but still had a flat year due to China. We ship once a quarter basically, and there was one canceled order in Q1, but then from Q2 the sales has picked up really nicely. So looking forward to 2021. Next slide, please. Sales per product. Here you really see the where we are transforming. It's really 2019 we had over 80% of sales was in the ProDen PlaqueOff line, where we have different products all based with the active ingredient that helps with the oral health. And now in 2020 it went down to 54, and adding the new important area, topical dermatology, that we didn't have in 2019. But going forward, I would say since we added these acquisitions half year or last quarter, I would say my projection is that we will have basically 1/3 of ProDen PlaqueOff, nutraceuticals, and topical dermatology. That it will be fairly evenly spread out with 1/3 each. Next slide, please. KPIs for 2020, 240 million Swedish kronor, growth of 89%, and the earnings was nice, 25%, 27% if you take out the acquisition costs. So and of course ending the year really strong cash position with 284 million, but then we bought Holden, but we still have a nice cash position. Next slide, please. Rolling 4 quarters, it's you see the big leap here, and that will keep on doing that, since as you saw the performance figures that we had for 2020 was actually over 500 million, and we do expect to have growth from that in 2021. So there will be big change in these numbers. Next slide, please. Priorities going forward, of course, integration, but as I would like to underline, is really the integration is done very, very cautiously, so that we do not drop the ball on the entrepreneurial spirit in the companies that we bought. So, but it's been lots of projects going on, and they will keep on developing over 2021 and adding new ones. Increased marketing, that's really one thing that we are emphasizing on. We did it in 2020. We did lots of, let's say, brand building activities, remodeling the specifically the ProDen PlaqueOff, but also increasing marketing activities, primarily online, social media, and also with the big platforms, and that will keep on increasing. We have not really touched the sales and marketing spend that we have targeted. That it should be around 10%. We didn't come up to that figure last year, but still we don't spend if we don't think that it's really good and worthwhile doing it. So that's also the spirit that we want to keep. Business development projects, we have lots of projects going on internally, but also with the external partners and customers. They are, of course, very interested in what we are creating now with completely new and wider product offerings. So there's both product development and also, for example, looking at what products from the US can we produce in our Irish production site, and also we are starting our own production site in the US, mainly for the powder filling for our ProDen PlaqueOff product in the US. So that's exciting, and hopefully we will ship some product from there within a month or two. Asia and North America will be, let's say, the areas where we are going to see the biggest growth in percentage wise, but still Europe is really exciting times for us there as well. Next slide, please. Yes, finally, the financial goals. We had older financial goals that we would reach 500 million by 2024, but that was basically not including any acquisitions. And since we made loads of acquisitions in 2020, we sat down within the board and discussed. So we have just presented the new financial targets that we will reach 2 billion SEK in sales with an EBIT margin over 30% by 2025, and primarily through organic growth. We see really strong growth going forward for all of our group companies, but as I said in the beginning, we still are very much interested in acquiring more companies. So we do see that to reach the 2 billion, we would need to add 1 or 2 smaller additions to the group, but we will be fairly close with the current setup to reaching the 2 billion SEK. And that, I think, was the last slide.
Thank you very much, Håkan. So we are pretty short on time, but I'll do some questions about your M&A practices, and how do you think the M&A market looks at the moment? How does the multiples look? Are there many opportunities out there?
Yes, many opportunities. We get lots of let's say contacts now since we've been active on the market. So there's lots of let's say M&A firms contacting us. But so I would say that the multiples that we have acquired and what we would like to acquire on is basically between 8 and 12, and the focus for us is really to find companies that can show really good let's say growth potential. We aim to acquire fairly similar companies to ourselves, so there needs to be the potential for double-digit growth and definitely double-digit profit margins as well. But there are still opportunities. In many markets, it's still very unconsolidated.
Thank you very much, Håkan. With that, we are unfortunately out of time. I thank you very much, Håkan, for the presentation and everybody for listening in. Thank you very much.
Bye-bye.
Okay, let's get going with the next company here presenting at our Investor Day. We have the honor to have CEO Jesper Söderqvist at Boule Diagnostics. Welcome, Jesper, to this day, and please go ahead with your presentation.
Thank you, Victor, and thank you all for joining us here today to learn more about Boule Diagnostics. My name is Jesper Söderqvist, and I am the CEO. I will talk about what makes Boule unique, our priorities going forward, and why the future looks bright. But I will also cover briefly our financial results for 2020 and how we managed a very challenging year with the COVID pandemic. So please, next slide. So Boule is a global niche player that provides near-patient hematology diagnostics or blood testing that allow physicians to directly consult the patients without the need to wait for central laboratory test results. Diagnostics in general is an essential tool to discover, monitor, and treat patients with the relevant care. Blood testing can really help address accelerating healthcare costs by monitoring health and also discover a range of common diseases, including infections. Boule was listed on the Stockholm Stock Exchange in 2010, but our roots go back a long way. Our original products are based on the Swedish automatic blood cell counter that was invented by Erik Uhlin in the 50s. We sell instruments and consumables used in the human and veterinary market. We are globally present in over 100 countries with a strong distributor network. We have multiple products, brands, but our brands are based on the same technology platform, which means that we have several parallel sales channels in several important markets. About 30% of our sales are in the US, while Europe and Asia account for about a quarter each. We have a large installed base of Boule instruments, which means that which is the main driver for our strong and recurring aftermarket sales. In addition, we also sell consumables to other hematology manufacturers. We will start looking at the business and financials in 2020. So please switch to the next slide. So on the top graph, you see the installation of instruments and recurring revenue. During the last 5 years, the growth of the install base has driven the recurring sales of reagents and calibrators. That is the green line in the top graph. But as you can see, in the last year, we have been severely disadvantaged by COVID-19. As many markets closed down, patients' visits stopped and testing basically wasn't there. And that also meant lower sales for us. However, I am convinced that when restrictions are eased, we expect to fairly quickly see a growing revenues again. Also, instrument sales has been difficult last year in spite of new digital sales method. The demand wasn't there in 2020, but we managed to sell around 3,000 instruments, which is about 1,500 instruments less than in 2019. This means that our installed base of active instruments remains stable at around 29,000 instruments. So this said, we still have a very strong position, and once the market gets back to preventive care and normal testing procedures, we could see our sales coming back. So if we switch to the next slide. So to summarize, last year, it was a very tough year with regards to both sales, and we also had a few one-off items affecting our results. And the growth trend we had in 2019 was broken after 3 quarters with large COVID-19 effects. However, less sales and travels have opened up for internal improvements, and we have used this year to strengthen the organization and advance, several, important initiatives for our future. Most importantly, our new platform project. The development of a new instrument platform is the largest investment in Boule's history, and I will come back to this later. Very positive was that we passed a major milestone for this development. With the technology choices we made for that milestone, the technology that we acquired in 2018 became obsolete because it didn't meet our high quality standards, which triggered a write-down of 40 million in the fourth quarter, which glooms our financial results for last fiscal year. During the year, we also increased our presence in Russia, and we will soon start local manufacturing there. So if we now take the next slide and look more in detail, how products and regions were affected by the pandemic. And you can see that all products and all regions were affected. And it started with a large dip in the second quarter. We saw some recovery in the third quarter, but the optimism, I think, that we all felt disappeared when the second, or in some cases, third wave of COVID hit many markets. And sales actually dropped in the fourth quarter compared to the third quarter. But yeah, we have seen the same pattern, among our competitors. So this is really an effect of that. Many of the clinics that use our equipment are closed. If you switch to the next slide, we can also look at our profitability. So as a consequence of low sales, EBIT was impacted, and that's the big effect, is the lower volume. But we also did this write-down due to scrapping of the technology we bought in 2018 that didn't meet our high standards of quality. So that hit our result with 40 million. Adjusted for the one-off items, we reached 8.5% EBIT margin in this very tough year. I would also say that included in the result is also the US payroll protection support that we received to keep all our staff throughout the pandemic. I mean, clearly, we're not meeting our full potential, and we're not satisfied. But I think it shows the resilience of our business model, and I feel confident we will recover quite strongly once COVID-19 is gone. If you switch to the next slide, you can look at our cash flow and our financial position. So in summary, you can say that we have a strong financial position. The business, in spite of drop in sales, generated a positive operating cash flow of 75 million for the full year, with about 1/3 in the fourth quarter. So, and actually, our available liquidity increased by 5 million compared to a year earlier. So I think we should be satisfied with that. So going forward, what is our key differentiators? What makes Boule unique? So let's zoom out on Boule's business and our key differentiators. Boule has 4 key differentiators that can really drive the value of the company. We offer blood diagnostics for near patients, both human and animal care market. We have built strong brands offering very user-friendly and reliable systems. We have a scalable virtual organization allowing us to grow a lot without large increases in investments and personnel, thanks to our indirect sales and service model. And a normal year we have more than 60% in recurring revenue, thanks to our installed base of more than 29,000 instruments. And that has give us reach also across the globe. So what are we doing? So if you take the next slide. So we're in the near patient testing. So in vitro diagnostics is a large growing market. We are, however, a focused niche player, and we offer solutions for near patient diagnostics, which means that we do not compete with the largest companies in hematology that provide equipment for the large central laboratories. Our equipment is available in physician office lab, health centers, and smaller hospitals. And in Sweden, we call them vårdcentraler. We service customers who are in the countryside in emerging economies where they need and depend on robust and reliable instruments. And it's a dynamic market. And I personally believe that the new requirements and new technology will mean that this market will continue to increase in relevance and continue to grow. Continued digitalization and more online doctor will, for example, increase the demand for more local testing, and also maybe at perhaps at location that we're not at all used to today. So let's zoom out on the market. The human market for decentralized near patient diagnostics has a total market value of approximately $650 million, and is expected to grow about 5% per year. The growth drivers are the usual macro factors for healthcare and medical devices, an aging population globally, increased standard of living in emerging economies, so both supply and demand for healthcare increase. We expect the market for near patient diagnostics to have a structural demand-driven growth for many years to come, as it encompasses a lot of benefits, both for the patients and for the healthcare systems. On top of that, new technology create new opportunities for efficiency, which in turn leads to an increase in test volumes. If you look at the veterinary market, when you include both hematology and clinical chemistry, it's almost as large as the human market. That market is now growing rapidly as many people acquire companion animals, and that's been a strong trend, particularly during the pandemic. I heard from one source that the dog population in Stockholm alone grew by 25% last year. Also, access to insurance provides an increasing demand for veterinary services and testing, and there's a great demand for fast test results. So The veterinary market differs from the human market as the regulatory requirements are much lower. Despite this, the competition is actually less in the veterinary market than in the human market. So what do we do? So we provide CBC, so complete blood count, which means that whole blood is taken from the patients and can, without any pre-treatment, be analyzed by the instrument. The test that the Bull solution performs is called complete blood count, which is in Swedish is usually called blodstatus. The test is one of the more common tests performed and is an effective and inexpensive tool to get quick health data, and is therefore used in both yearly health examinations and diagnosis and follow-up of sick patients. So what our instruments do is that they count the different cell components in the blood, the red and the white blood cells and the platelets, and parameters related to the blood cells. We can also measure hemoglobin. So in total, we get a test result with about 22 parameters in less than a minute. That gives a good idea on the person's health. The test results can, for example, help diagnose anemia by looking at the red blood cells. It can look at the various types of infections, etc., by looking at the white blood cells as they control our immune system. And coagulation disorder can be identified by looking at the platelet distribution. You can read the results directly on the instrument, get the printout at the same time as it is entered into the laboratory information systems that most labs have. And the doctor gets an immediate test result that can consult the patients during the visit without the need to schedule the patients for additional visits. So it's a very efficient and effective test procedure. So this is what we do. We have a very strong product portfolio of 3-part and also 5-part instruments. But now we are developing a new hematology product platform. So if you switch slide. So I said we passed a major milestone in the fourth quarter, and that was thanks to that we during the last year strengthened our organization and really helped to make significant progress on the development on the platform. And with the milestone passed in December, we made all the technology choices and we could firm up our timeline for the first release. The first release on this platform will be an advanced 5-part human instruments that will be launched by end of 2022. It's a 5-part differential, which means that it has the capability to differentiate the blood cells in 5 different groups. Bull already have a lower end 5-part instrument, and with this new instrument, we get a broader, more competitive portfolio. The 3-part market is bigger, and that's the major revenue source for us. But the 5-part market grows faster, and the prices for both instruments and tests are higher for 5 parts. So clearly, this addition to our product portfolio will really help our growth and profitability going forward. And over time, we will introduce more products based on this platform and also replace existing products. So we are very pleased, with the development and the progress we made on this. So what makes Bull unique? I think Bull is unique in that we have full control over the entire value chain for analysis of blood, because we develop and manufacture the instruments, but we also develop the consumables such as reagents, but also the blood controls and calibrators, and that makes us truly unique in this market. And we have built a strong reputation, and we have strong brands that is known for robust, reliable solutions of very high quality that always deliver accurate results. We are often more expensive than competitors, but thanks to good quality, we still achieve a low life cycle cost. One recognition of our expertise in quality and efficiency is that we both develop and produce consumables for other bigger hematology companies. Switch slide. So if you look at our operations, so sales and service are done by distributors globally. We are present in more than 100 countries, and we have more than 200 loyal distributors. And thanks to our multi-brand strategy, we have very good penetration. Sales take place via several distributors in many markets. And thanks to this indirect business model, growth and management of fluctuations in demand, as this year, can take place without limited investments on Bull's part. This means that there's a good leverage for growth and introduction of new products. Bull also has an efficient and scalable delivery organizations with R&D in Sweden and in the USA, and production in Sweden, USA, and soon to start also in Russia. So we switch slide. So a large and growing installed base generate growth of recurring revenue. Sales of consumer generate a higher margin than instrument for many years after the initial installation. So our primary focus areas to grow the installed base is to introduce new products, like the new platform, increase our presence in emerging markets, and also address the veterinary market, which is really an untapped potential for Bull. Today, it accounts for about 10% of our revenue. And this business model that have really created a stable recurring revenue. And the installed base has grown every year, during the last 10 years, and 2020 was the only exception, really. And I really look forward to when the world will return more back to normal, so we can see a more steady sales again of new instruments. So if we now, as you can see, longer term, we have an attractive plan to grow our business. So let's look at what we will focus on near term. I think everyone is looking now to see what happened with the pandemic and the market recovery. So for our business to return to normal, we depend on the vaccines to stop the virus spreading, and that we also wait to see the markets open up again. We believe that there are continued uncertainties that we will need to deal with. We expect the market to recover during the second half of 2021, but it may take longer to get full back to the former volumes. And what we see is that during the market recovery, there will be challenges of supplies, in particular for transports, which we have experienced. There's also potential risk for supply chain shortages as global demand from all industries will compete for supplies. We have not really seen it in large scales yet. It has happened, but that's something we will monitor very closely until we see that supply and demand are in balance. We see that there are many opportunities for us to address now, and what we will focus on, the next half year or so, is to further increase our digital marketing, enhance our support to distributors to make sure our installed base get back into operation smoothly. We target to start local production in Russia. It was previously in the first quarter, but due to one of our suppliers that had been obliged by the Russian government to produce COVID-related equipment, that equipment is delayed, and we now target to start in the end of the second quarter instead. Last year, we also announced a new supply agreement for one of our larger OEM customers, and during the spring, we will ramp up production of those new consumable products. And then, of course, a lot of our focus will be on our new platform, and we now are working very hard to industrialize the first release that we plan to launch at the end of 2022. So 2021 will be busy, and we have a very solid plan how to get back to growth and profitability. To switch slide. So to summary, 2020 was a very challenging and really a shitty year for us. Bull is not immune to pandemics, but I think that COVID-19 is really a bump on the road. Bull sales will recover. We have a good market position, an attractive business model, and a large installed base that will generate recurring revenue. So even if we don't hit our financial targets this year, I am convinced that we will soon get back to a profitable and growing company again. I should also say that the board has proposed that we will give a dividend for 2020 of 0.55 SEK per share to be decided on at the general meeting in May. So I think that actually concludes my presentation, and I thank you for your attention and interest in Bull, and I welcome questions.
Okay, thank you very much, Jesper, for your presentation. Firstly, I think I'll start with a question. You've been into Bull for almost a year now, since you took over as a CEO. I think I asked you this question when you started out as CEO as well, but what do you think that You highlighted some of the achievements you've made during this year, but what has really been a surprise for you now, looking back to the last year about Bull as an organization?
I think everything with the pandemic, I think, has surprised me that it would take so long. And I'm actually say that I'm surprised that things actually work quite well, despite that we haven't been able to travel. I only made one trip, as a CEO of a new company, and that was to US like a month ago. So, but I think we have managed the working digitally very well, and clearly we've been. The loss in sales we saw last year was really because the demand wasn't there, and that's really outside our control. But apart from that, I think we have managed to keep our operations going. We have managed to stay in touch with our distributors. We are developing our sales and training programs digitally. And also I must say that we have started up a manufacturing site in Russia without any possibility to travel at all. So it's, both hiring, setting up, everything has been done, using Teams. So I think that's a great achievement. And I think so. I'm surprised about that the pandemic has lasted so long, but still that we have managed so well, despite some of the challenges.
Yeah, that's good to hear, and very interesting to see your comments in conjunction with the Q4 result about the new platform that you intend to launch by the end of 22. Could you give us perhaps some more indications, and it would be interested to see or hear from you the main highlights of the new platform, what you see of a long-term potential from this specific platform into the future for Bull?
Well, I think if you look at take first from the market perspective, I think it's our three-part instruments are market leaders in many of the markets and are very well positioned. And I think many of our distributors have asked us to make sure that we widen our product portfolio also with 5-part instruments. So I think there is a demand for those 5-part instruments. And we see that it's a market that grows faster than our 3-part market. So there is a demand. It gives us access to a bigger market. So I think that's important. It's an advanced instrument, meaning that we're working a lot with the user experience, user interfaces, modern software. Also making sure that we improve connectivity from remote service, etc. So, and it's a really future-proof instrument. And also bear in mind that this is not just about one release. This is a product platform which is very modular, which will enable us to develop further, other type of instruments using the same platform in a very cost-effective way. So I'm very very pleased and to see the progress. And I think it's also it will be very good for Bull also to have a new modern product platform for the future.
Yeah. No, thanks, Jesper. That sounds very promising. Just touching upon the competitive landscape also now after a year with the pandemic surrounding us. Have you seen any increased competition moving towards your own niche? From, let's say, larger players out there within diagnostics, or how would you describe the current situation, the current here now, 1 year after the pandemic has been with us?
Yeah, I mean it's a little bit difficult to compare ourselves with our product portfolio because with other companies, but I would say that we haven't seen any shift in market shares in any of the markets. I would say I think it's same kind of, we were down about 20% in revenue. And for comparable businesses or for our competitors, we have seen similar figures. So I think it would be 2021 that really, will make the difference. Because I think it's clear that the world is not going back to normal. I mean, the big trade shows, traveling to see clients, etc., is not the way that you will do marketing and sales. So we are investing now and really moving forward with our digital efforts to to reach out, both in terms marketing, sales, but it's also very importantly training to our distributors and also to end users. So we're launching something we call the Bull Academy. So I think 2021 will be the year that where you can gain or lose market share.
Yeah. I think time is running out, Jesper, for this time. Thank you very much for participating today, and stay safe.
Thank you very much. Thank you all for listening and your interest in Bull. Take care. Bye-bye.
Thanks.
Hello and welcome to this presentation with Elos Medtech. My name is Eric Castle, analyst here at ABG, covering Elos Medtech among others. Today I have the pleasure of hosting this presentation with Eva Lindsäter, the CFO of Elos Medtech. So Eva will give about a 20-minute presentation and we'll do a short Q&A after. So without further ado, please go ahead, Eva. The floor is yours.
Thank you very much. It's a pleasure to have the opportunity to present Elos Medtech here for you today. My name is Eva Lindsäter and I work as CFO for Elos Medtech. Next, please. First, a disclaimer. I think you all were familiar with that one. The agenda for today is that I will present Elos Medtech, our business and our offerings. Then I will continue with our Q4 development and the result for the full year. And I will end up with the strategy and the focus areas for 2021. Next, please. Elos Medtech. We are a multinational company with a turnover in 2020 of about 600 million SEK. Our head office is in Gothenburg and we are listed on the stock exchange. We have 5 sites on 3 continents. We have 2 in Sweden, one in Denmark, 1 in Memphis in the US, and 1 in Tianjin, outside of Beijing in China. All our business is divided into 3 business areas, and all business we do is within medtech. And that means that every market that we are on are regulated, and we are following rules in all aspects. We are ISO certified 13485 and 14001. Next, please. Elos Medtech, it started a long time ago, already in 1923. It was a small blacksmith in the woods in the middle of Sweden. Then the company grew, and in 1989, it was put on the stock exchange for the first time under the name of Västergyllen. I think maybe some of you recognize that name. In 2012, Elos Medtech changed its name to actually Elos Medtech. And by then, it had moved from a conglomerate to a medical technology company. We have grown both via acquisitions, but also organically. And since 2016, we have grown organically by extending our premises 3 times. Thank you. We are divided into 3 business areas, as I said before. It's dental, orthopedics, and life science. They have one thing in common, and that is that we have a key account strategy as a global partner in all of these areas. Let's start with dental. Next. In dental, we do implants, prosthetics, and dental instruments. This we do as a contract manufacturer. An implant is a screw that you put into your mouth. On top of the implant, you put the prosthetics, and on top of this, you put the crown. So we can produce both the implant and the prosthetics, but we do not do the crown. We mainly do this as contract manufacturer, but we also have our own products mainly under the name of Elos Accurate. And this is products within the digital dentistry. And what is digital dentistry? I think you all have been to the dentist. I hope you all have been to the dentist. And maybe you have also had to chew on clay, maybe to put in an implant or to get braces. When you use digital dentistry, you instead use your scanning abutment. You put the scanning abutment in your mouth. And with this, you scan your mouth as you scan grocery at the grocery store. Based on this scanning, you can make a CAD/CAM picture of where the implant should be. And on that, with that picture, you can make a perfect prosthetics and implant on your first try. Our aim is to open up the digital dentistry, and our products can actually be used on all implants. Today, in Q4, our own products stood for 14% of our total turnover. Who are our customers for our own Eolus Accurate? It is our OEM customers, but also we sell to the distributors and via our own web shop. Next, please. The second business area is orthopedics. Here we do drills, pins, and wires, and this is mainly done from our Memphis site in the US. These products are made for trauma surgeries, but they can also be made for robotic-assisted surgery. Robotic-assisted surgery is something that is growing very rapidly right now, mainly in the US, and our pins and wires are actually seen as disposals. So they are just used in one surgery and then they are thrown away. So that means with a nice growth for robotic surgery, the drills, pins and wires have a good growth. We also do plates and orthopedic instruments, and this is mainly done from our site in Timmerstala. Next, please. Our third business area is life science. This is our most diversified area, and we work both in polymer and metal. Polymer we do from our site in Skara. It's everything that we do is injection molded with very high automated processes. Here we do plastic components for IVF treatment, pacemakers, and products within the diagnostics. We also do products in metal. We do, for example, bone-anchored hearing devices. These are very similar. They should go into your bone exactly as an implant. So the technique is very similar to an implant. But we also do insulin pens, for example, that comes from our site in China. One thing all our business areas have in common is how we work with the customers. Next, please. We would like to be seen as a global solution partner within the medical device market. Even though we are a contract manufacturer, we like to be a part of our customers' process as early as possible. We would like to be involved in the manufacturing, design for manufacturing, because then we can make sure that the product is possible to produce and still keep a good quality. Quality is something that is a part of everything that we do. It's in the design for manufacturing, it's quality inspections during our manufacturing phase, but also in the inspection and when we register products after the manufacturing. We register both our own products and our customer products. We can also offer logistic solutions. We can keep the products in the warehouse for our customers. We can pack, we can label, and we can do the final quality inspections and before the products are sent to the end customer. By this, we can offer an unbroken value chain from development to prototypes, testing, serial manufacturing, and the logistics. And this is what we mean with a complete performance. So let's move into Q4. This year has been a very up and down year for a lot of us. We could see in dental in Q2, we almost came to a full stop. In Q4 and Q3 already, we saw a really rapid recovery, and that continued in Q4. With the increased volumes, we also saw increased result. We had a strong growth, our own products, mainly within Eolus Accurate, and the own products stood for 14.5% of our total net sales in Q4. And this is a growth of 49%, which is a really good figure for us. We should be humble enough to say that Q4 in 2019 was a little bit slower than previous quarters. So we do compare to a weaker quarter, but the growth is still very significant. And we can see that it is mainly within the digital workflow. We can see now we are having this presentation on Teams. We are having meetings, and we are changing our way of doing things, and so are also the dentists. So we can see that it's the digital workflow that has pushed our own products to increase. Yes, next please. In orthopedics, we are preparing for our new volumes for products within robotic assisted surgery. So we have invested in Q4 both in new personnel and in increased machinery capacity. This is to, I think maybe you have read our press release from November that we will hope to increase our turnover with 100 million SEK compared to 2020 due to the new possibilities that we have within robotic assisted surgery. We also have good business opportunities in China and Europe. So even if we have a corona out there, we see a lot of business ongoing. Next, please. Polymer or our life science is, as I said before, our most diversified area. And here is also where we see some customers are up, others customers are down. And that has had a positive or negative effect on our result. But overall, we can see that it has been stable during all the quarters. Our expansion in the Skara is going according to plan, and we have just taken the decision to make the whole new production site to a clean room, and that has already given us some new business already in Q3 and in Q4, mainly within diagnostics. Next, please. Here you see our business areas quarter by quarter in 2020, and if we start with dental, we can see that we had a really strong beginning of the year. And then to come almost to a full stop for 2 months in Q2. If you go to the right hand side, you can see that the result in Q2 is following very much the downturn in the turnover, and we did a loss. We had to let 200 people on furlough, and we received a lot of government grants in Q2 from Sweden and Denmark due to these decrease in volumes. Then we saw a very V-shaped recovery in Q3. Volumes came back, and so also did the result. In orthopedics, we see a more U-curve of the recovery. We had a smaller hit in Q2, and we have seen improvements Q3 and Q4, even if the recovery in local currencies is a little bit higher here, as the main is derived from US dollars, and as the US dollars has weakened in Q4 compared to the beginning of the year. If we look at the right hand side on the EBIT development on orthopedics, this does not follow the same volume trend. We can see here that we have a really strong result in Q2, and that is thanks to the PPP money that we received from the US government, not to close down the premises. We had the demand was there during the whole COVID period, and by receiving that money, we could continue operations, have all the people coming to work, and then the government paid for our costs, and that made us a boost in the results. And then for Q3 and Q4, we can see that the volumes are coming back slightly, and the result is also coming back mainly based on the volumes without any grants by then. Life science is actually the business area that went into COVID-19 the first. As we have a site in China, we had to close the site almost for 2 weeks in Q1. But when we could open again, the demand was there immediately. So here we see some up and downs. We have the opportunity to make products for ventilators, and this volume has of course boosted this year. And we have other products which have declined, but overall the life science business area has been very stable, and we can see that also the result for the year has been stable around 15%. Next please. So by summing it up, we can see that we had 155 million SEK as turnover in Q4. This is actually in local currency a growth of 2.7%. If we look at the operating profit or the EBIT, we can see that that has increased or improved Q1, Q2, Q3, and Q4. And Q4 was stronger than Q4 last year. So we have a very good trend here. We see a positive product mix. We have also worked a lot with efficiency, our operation excellence, and we have had high cost control during the whole year. But if we go to the full year, our turnover was 580 million SEK, which is of course 60% lower than in 2019. However, as the result has been improving quarter by quarter, our operating margin is 11% for the year. In 2019, it was 9.5, and that by 19, that was our strongest year ever. So I think 2020 came out really well after all. If we go over to our KPIs on the next slide, please. We can see that we have been, as everybody else, safeguarding our cash. And we actually go out stronger in 2020 than we did in 2019. And this will give us opportunity to continue to build on the future. If we look at the net debt has decreased, and it's mainly two reasons. We have invested less and continue to amortize on our loans on a normal basis. And also a lot of our loans are in US dollars. As the US dollars has declined during the end of the year, so did our net debt. If we compare our investments, it was 56.5 million for 2020 to compare with 100 million in 19. And almost half of this came out of Q4. So we put a stop on the investments when we did not really know what would happen with our markets. And in Q4, when we saw that we were back more or less on normal levels, we have, of course, during the whole year invested in our facility in Skara. But we then also started to invest in orthopedics, some in China, but mainly in Memphis, to get ready for the increased volume with C for robotic assisted surgery. Let's go over to our long-term targets. Here we can see that we have a target of 13% for share of own products. And this is a target that we actually exceed now in Q4 with 14.5%. Our long-term EBIT is 13%, and our EBIT for Q4 was 12.2%. So we are closing up to this goal. Two targets, the growth, organic growth of over 10%, and the 1 billion target of turnover. Here we are further away, of course, as our turnover declined in 2020, but we still think these are relevant targets for Eolus Medtech going forward. If we then go over to the strategy, our strong cash flow or improved cash by the end of 2020 gives us a good opportunity to invest in the future. We will continue to focus on our operation excellence, and we have cross-border teams set up during 2020, for example, and they meet on a regular basis every week to share experiences to make sure that we work in the best possible way on all sides. Specialization is very important for us, and we think by specialization in our business areas, but also on each site, we will strengthen our offering, and that will make us prepare us for even faster growth in the future. And we will continue to build value-creating partnership with our customers. And here we would like to be a part of the customer's process already in the design for manufacturing phase, because we think that by that we can give the most to our customers. So if we look into growth potentials for the coming period, on the next slide, please. We can see that we have identified 3 main areas. It's within our extended facility in Skara, with the clean room in the whole new production hall. And this makes the possibility to grow within high-tech polymer products in Skara. And mainly we see the opportunity with diagnostics, where we also had some new orders in Q4 and Q3. We will also continue to specialize on our robotic surgery in orthopedics to get ready for our customers' global launches. And we see a very big potential in our own Eolus Accurate products to continue to simplify the digital workflow for the dentist, and by that increase our growth in the future. So on the next slide, we can see that the focus areas for 2021 is about the same as our growth potentials. We see high demand within orthopedics and assisted robotic surgery, and that was something that we will continue to focus and build, so that we will be able to meet the increased volumes that we see there. If we look at the global expansion within dental, our products were approved in the US in the beginning of 2020, and we will continue to penetrate that market with the help of our distributors, but also with help of our OEM customers. If we look at the outsourcing market within medtech, and mainly within orthopedics, we see that the outsourcing market is actually growing faster than the medtech market in general. And we think by specializing and on the things that we are really good at, we have the possibility to take a larger share of this growth going forward. That was everything that I had, so thank you very much. And now I'm free for questions.
Thank you very much for the good presentation, Eva. And I'll jump right into questions. And as you said here, own products was extremely strong both in Q3 and Q4, growing at about 50%. And as you said, also you launched the products here in the US during 2020. But could you perhaps go into some more detail on the traction it has gained already, and sort of the long-term potential when it comes to penetration and such?
If we look at as we are, main part of our products are the Eolus Accurate brand, and that is digital dentistry. And I would say that about 30% of the dentistry is today digital, and they are transforming over to a digital workflow instead of this old way of doing things. So I would say the potential out there is larger, and in that sense, COVID has in a way helped to transform the business a little bit more rapidly than before.
Okay, perfect. Thank you. And then I have to talk about robotic surgery, of course, as you announced and talked about here. And I kind of see long-term potential of 30% CAGR here in this market. But is there any obstacles for you that maybe you wouldn't be able to keep up with this market growth, or do you expect that you can be able to kind of grow in line with the market?
I think it's, of course, when you have to increase and take in new products in manufacturing, in a complex manufacturing, that can have hurdles, obstacles, which can make you not grow as fast as you would like. But I think we have great potentials here to actually grow. We also have more than one site today. We are making the pins and wires mainly in our site in Memphis, but we also have a site in Timmersdala and Tianjin, for where we now are looking into to see that we can have more than one site making these products. This is also going to help us going forward, both for growth, and if something would happen in one site, we have the capabilities to ramp up in another site.
Okay, perfect. And then you have a rather small market share in so-called regular orthopedics right now, and
Yes.
robotics is gaining penetration all the time. But firstly, how are these robotic products different from, say, the regular products within orthopedics?
Oh, now we should need a technician. And they are not really. They are not very different. I would say it's just. I think it's the. I don't even know if I know these words in English. It's the pins are used to put in. The robotic is putting it in for a knee, for example, into your body to fixate while they're doing the surgery. And I think these are a little bit different from normal surgical procedures. But I'm not really. We do have pins and wires also in normal procedures. I cannot say exactly what the differences are, but there are differences, but they are not main.
Okay, thank you.
Yeah.
And then secondly, how is sort of the competition within the robotic surgical area, and do you expect that you can have a higher market share within robotics than regular orthopedics?
We are still a very small player on the orthopedic market. I think that's something that you have to remember. I think there is potential for more players to be on the robotic assisted surgery market. I think we are specialized and we have a good name out there on making these products. So yes, I think we can take market shares, but I think there are room for more players.
Okay, perfect. And then despite lower volumes, you, as you said, managed to have good profitability in 2020, partly to government support, of course, but it's also to a large extent due to lower operational costs. Could you perhaps go into some more detail what you have done to reduce overall costs, and then also if investments in automation has significantly switched or kind of changed the mix of fixed costs and kind of variable costs?
Yes, I think we have in the past years invested in automation, and that has changed our way of doing things. And already in the autumn 2019, times is flying, we were actually reducing our staff a little bit. So we had already started to decrease our staff, and we continue to do that in 2020 in the spring, somehow in different sites, due to that we are doing things differently, thanks to automation, but also thanks to the general work that we do within operation excellence. And on top of this, as we have our site in China, we were hit by the COVID-19 very, very early, already in mid-January. That made us learn from that experience, and we escalated that into all the plants in the US, Sweden, and Denmark. So we had a very strict cost control. As you know, we had no salary increases, there was no bonuses, and so on. We have not been able to travel. We have not had any conventions this year. So small pieces like that has helped us. And then everybody has been very cost conscious this year.
Thank you.
Yes.
And I think I have time for one last question. And you had good cash flow this year, and the balance sheet is looking healthy. And previously you have acquired companies, but sort of, is this on the agenda now as well, or are capacity investments and kind of development of own products offering better returns right now?
I think growth is on our agenda, and I think it's important that we look into both opportunities. We have, as I explained here, our growth potentials we see are very valid, and they are organically. But we also are, as I said, a small player on the market, and I think it's important for us to grow. And by then, we are also open to acquisitions.
Okay, perfect. I think it's about time to wrap up now. But thank you very, very much for doing this with us today, and also thank you to everyone listening in.
Thank you very much for having me.
Hi, and welcome to today's presentation with Stockvik, presented by CEO and co-founder David Andreasson. Myself, my name is Max Bacco, and I am an equity research analyst here with ABG within the industrial team. And with that said, David, please go ahead with the presentation.
Thank you very much. Welcome everyone, and thank you for listening in. So why would Stockvik be an interesting proposition? Well, I would say that we are a fast-growing company with a low operational risk. And in essence, we are actually what I would describe as a counter-cyclical company. That is, our propositions to grow actually increase in weaker economic circumstances. At slide number 3, we have myself and my colleague, Andreas Sävstrand. Andreas has a background within legal and specifically mergers and acquisitions, which of course is very handy within our line of business. And my background is within investment banking, where I've led the small cap equity research on a Nordic basis for various investment banks, among them ABG Sundal Collier. Let's move forward to slide number 4. And to date, you can see that our portfolio companies and our group in total has held up very well during the difficulties in 2020 related to the pandemic. Actually, 2020 proved to be Stockvik's best year ever so far. We completed 2 major acquisitions, Run Communications within data storage, and also Admit Economy within accounting. So our portfolio companies held up very well. They proved to be stable, which is our main objective when investing in targets. And we could prove that we could continue to grow even though times were trying. If we move forward to slide number 5, there is an overview of our group as of now. And as you can see, there are 15 portfolio companies, each selected on their non-cyclical nature. And they are divided into 4 business segments as of now. And I would like to describe them just briefly, but you can all later on look through the presentation with more details on the different companies. Team is operating within healthcare, providing all sorts of services to primarily businesses and insurance companies. They have a solid track record for over 30 years. But of course, they were to some extent impacted by the restrictions due to the coronavirus last year. A bit ironically, because they have the longest and most solid track record of all our companies. We have 3 companies within business services, accounting, data storage, and procurement consultancy, which we acquired just recently in January. These companies all actually grew during 2020. And just to explain a bit more about SOCAB, they help authorities to comply with the legislation surrounding procurement, and they also help businesses to comply and offer accordingly to these legislative rules. Within industry, we are very focused on tires, not only for cars, but also for trucks and buses. The main company there is Galdax, which is a rethreading business, rethreading tires for trucks and lorries and buses. And we've also found that to be an interesting niche where we can expand that business by acquiring smaller tire shops, which we have 3 of so far. Within property services, we made our first acquisition in 2014 of Bergfast, which is focused on landscaping. And that is, of course, mostly driven by photosynthesis rather than the cycle. And they also, as a group of companies, have proven to be very stable over the years. MBF had some effects due to municipalities being a bit reluctant to buy the services last year, but in all, they managed quite well. So as a whole, I think you can see that we have a handful of companies, or 15 companies, that all have been selected on the criteria of being non-cyclical and also to have a very strong and positive business culture, which is also very important for us. So in all, they comprise a very well-diversified portfolio. So let's move forward to slide number 6. When evaluating potential targets, we typically start by looking at how they performed in the years 2007 and 2008. If they fared well then, they typically have a solid track record also after that. Going forward, we will of course look at how companies have fared during 2020. But as you can see, the companies we have acquired and in total Stockvik as a group has a very solid track record. So let's move forward to slide number 7. And this slide, I think the most important thing about this is that we can show that we have acquired companies at a very interesting, attractive multiples. The average is 4.4 times enterprise value EBITDA. And that is something of an anomaly, I would say, in this world, because everything seems to be priced in the same range of 4 to 6 times EBITDA. And that's an interesting observation, I believe, because nothing else is works like that. I would say typically things are correlated and you get what you pay for. But in this world of small enterprises that we can acquire, we can see very large differences in quality, but they all cost the same, 4 to 6 times. So what we do, of course, we look for the qualities in the companies we want and acquire them. Let's move forward to slide number 8. And this is a very important slide, I would say, because these are our core values. And we like to think that we invest in people primarily. We really spend time to get to know people representing the companies we are interested in. And if we get along well and we share the same ways of looking at business and how to create value, then we are sure to find the same spirit and the same culture in the company. This is very important because this provides the resilience and in the companies we acquire. If we invest in the right kind of culture, the culture stays when the seller eventually leaves. So this is one of the true core denominators for the investments we make together with the companies being non-cyclical. And this also relates to slide number 9, where we would like to illustrate that Stockvik is also founded on trying to create something good in our society. We want to be a good new owner for the businesses we acquire. That is something that is really important to some sellers, not everyone. But if you really care about your business and perhaps you're selling your lifetime achievement or even a company that your father or grandfather once started, it's really important for you how the new owner takes care of the company. And of course, that's not the case with all companies or all sellers, but that's the kind of sellers we are looking for and the kind of companies we want to invest in. We also want to take good care of the employees. So we spend a lot of time getting to know the companies and have a true belief in the employees and that they are the ones that know the companies best. And we try to look for their energy and their release of competence and creativity together with the new ownership. And that we think has been very successful this far. A very strong foundation for Stockvik being a publicly traded company is also the belief that we want to enable or create an opportunity for every investor who wants to get an economic exposure into the Swedish small cap companies. That is typically very hard. If you want to directly invest in companies, you have to have a lot of money, time, energy, and the right competence. And most people simply don't have that. But instead, they can invest in Swedish companies through the Stockvik share. So that was also one of the core foundations for Stockvik. Finally, we also want to provide our financiers with a good opportunity to get a decent return on a very low risk business. Let's move forward to slide number 11. Transition of leadership is also very interesting. We have learned to be somewhat less afraid of that transition now than we were initially. We can see that there is a lot of creativity that comes alive when we change the leadership in our companies. And we've also seen the limitations that some founders and owners of companies have when they've reached a certain level. We have a great example in Bergfast where the original founder did an excellent job, but in the end, when we brought in a new CEO with experience from larger structures in a similar business, we could really expand Bergfast's business and more than doubled the revenue. So we are simply less afraid of that transition nowadays. Let's move forward to slide number 12. Of course, a lot of inspiration on my part comes from companies like AdTech and Indutrade, companies which I got very well acquainted with during my time as an equity research analyst monitoring these companies. They prove that this is a concept that works very well, and Stockvik now has the opportunity to grow very fast due to us not being so large yet. Let's move forward to slide number 17. ESG, I would like to say, is fundamental to Stockvik's operations. It has to be, because we invest in companies without an exit strategy. When we invest, we do it with the aim of keeping the companies forever. So they have to be stable on their own merits. And we, of course, need to take care of them and nurture them and make sure that they continue to prosper forever. That's our aim. We also like to invest in companies with the belief that they should contribute in some form with something good to the society. And we believe that our companies do so in general. And some very good examples of that is, of course, Team within healthcare, provide better health for people, and also Galdax with retreading of tires. They also save some 20 liters of oil for each tire they rethread instead of producing a new tire. So that is also something very good. And within property services, we take care of buildings that need some renovation, refurbishing, and some sort of additional work to continue to be functional over the coming years. So some form of good the companies should provide to the society in general. So we believe that this is core DNA for Stockvik to invest in companies providing some form of good to the society. Okay, to summarize, as I've spent the 20 minutes I was admitted now, we are a responsible owner in every aspect in the companies we acquire. We are investing in sustainable companies, and our portfolio companies, as they are non-cyclical, and Stockvik's opportunities to invest in new companies are actually made better in weaker economic conditions due to the due diligence being easier. It's easier to see if the companies really are resilient to weaker conditions. In good economic times, everyone believes that they are going to be strong forever, but it's the trying times that really proves which companies are have what it takes to pull through. We also see that the financing opportunities are better with a little weaker economic environments, and the sellers of the companies are a bit more keen in weaker economic circumstances. So in all, with a very well diversified non-cyclical group of companies and Stockvik's opportunities to grow, I would describe ourselves and our business as counter-cyclical. So thank you very much for this opportunity for me to present. Please look through the presentation. There are 40 slides, so a lot of information if you want more detailed information on Stockvik. So I believe, Max, you have some questions?
Yes, that is correct. Thank you very much, David, for the presentation and the very large deck that you sent us. So to begin with, when looking at your balance sheet, we can see that your net debt EBITDA was 6.8 last year, or in the end of last year. Meanwhile, your interest coverage has come down from 2.2 in 2019 to 1.4 in 2020. So my question is, how should one think about these numbers, since they might look a bit stretched at first glance?
Well, I think the picture will be more fair if you take into account the companies we have acquired. The numbers you're referring to are the legal numbers, but if we look at the pro forma figures, we can see that the net debt is 4.1, I believe, and that the net interest rate coverage is 3, or rather above 3. So that taking into account all the companies we have acquired to date gives you a better picture.
Perfect. And you have already acquired 2 companies this year with an aggregated revenue of approximately 60 million SEK. How much M&A firepower do you have left for the next, let's say, 1 to 2 years?
Well, if you roughly do the maths, I would say that since we did the bond issue last year in the autumn, we issued 300 million Swedish kronor with a framework of up to 450 million kronor. We haven't used any of the frame yet, so there is an additional 150 million Swedish kronor, together with the earnings you could assume that we will post during the coming year. That will make some maybe 200 million Swedish kronor. And with the average EBITDA transaction multiples of 4.4, which we have made, one can assume that we will add an additional 40 million Swedish kronor to our EBITDA over the coming year or 2. So that would take our run rate EBITDA from about, we posted 66 for the last 12 months, so about 100 million kronor in EBITDA with the financing which we have on hand currently and the coming earnings, which we are likely to post.
Okay, thank you. And when you acquire new companies, you look at the financial history, as you said during the presentation, but also the company culture. Could you perhaps elaborate a bit on why it is important with a good company culture and what good company culture is according to you and Stockvik?
Well, of course, this is very important to me, and there's a simple reason for it. It's because that when the owner seller eventually leaves, the company culture is what stays, and it stays for a very long time. So it's easier to buy companies that are well run from the start with. And I could also, I mean, it's my own experience from picking small cap investments that the turnaround cases always took longer time to turn around if they ever eventually did turn around. But the companies that always performed well were those within the earnings growth group. So that's my own experience. And it's also very simple that I like to work with nice people. So that is important for me.
Yes, perfect. I think that was all that we had time for today. Thank you very much, David. And we will see you sometime in the future, I guess.
I hope so. Thank you very much.
Bye.
Bye-bye.
Bye.
Yes. Well, I guess I can just start. The clock is 12:30 here in Oslo. So good afternoon, everyone, and welcome to today's Aktier presentation. My name is Jonas Lien. I work as a research analyst at ABG Sundal Collier, both on the equity and credit sides. I've been following this company and the debt collection industry for some 3 years now. And we are lucky enough today to have the CEO of Aktier, Johnny Solis, with us today. So with that, I think I'll just hand the word over to Johnny. So the floor is yours, guys.
Thank you very much, Jonas, and good afternoon and welcome to this Aktier company presentation. For those of you that doesn't know us that well, I would like to start by giving a short introduction to the company. Then I will give a few highlights from our Q4 presentation, which we announced just a couple of weeks ago. And after that, I will briefly describe the transaction we announced in December, where we basically refinanced the total balance sheet. And I will also give a teaser of our strategy update that we performed in the second half of last year. And then we round it off with an outlook summary, and also we will make sure to have time for a Q&A session. So if we could please move on to slide 3 for a short introduction of Aktier. Aktier was established in late 2015, and we have a headquarters in Oslo. Our main focus is on collection and acquisition of non-performing loans from financial institutions. So we are both buying non-performing loans and we do collection on non-performing loans on behalf of third-party clients. We operate in 6 European countries, Spain, Germany, Italy, Norway, Sweden, and Finland. And currently we are just about 1,100 FTEs. We have been one of the largest NPL unsecured debt purchasers in Europe over the last few years. And we have done portfolio acquisitions north of 600 million euros for 2019 and 2020 combined. The company is listed as Oslo Stock Exchange, and our main shareholder, Geveran, owns just north of 40% of the company. If we could please move to the next slide for more details on our strategic positioning. So when we started Aktier back in 2015, we had a clear idea regarding our strategic positioning. In brief, it was cost leadership. That was a clear strategic target. We carefully selected the 6 markets where we believed to have the best risk reward, and main focus were on fresh business to consumer unsecured debt with the bank and finance segment, within the bank and finance segments. The approach was almost just as simple: acquisition of a relatively small platform company as bridgehead into a new market. We immediately replaced main systems and processes to the unified One Aktier platform, and we used our strong balance sheet to scale the business organically in both NPLs and 3PC. And as you can see here on the right side of this slide, the result when it comes to the cost position has been satisfying. Here it is important to focus on the trend, as we obviously have higher cost to collect versus income the first years of operations due to scale disadvantages. And we expect the ratio to continue to go down over time as we continue to gain more scale effects. And we consider our cost position to be one of our key competitive advantages also in the future. If we could please move to slide 6 for some key financial highlights. If we look at the main financial figures, they were in line with our expectations for the quarter. For Q4, we delivered 95 million euros of gross revenue, a total income of 58 million, cash EBITDA of 64, and a reported EBITDA of 21 million. The annualized return on equity to shareholders were 4%. Even though 2020 was a very challenging year, we still managed to deliver a gross revenue close to 330 million euros and a total income of about 200 million euros. Cash EBITDA also about 200 million, 213. The reported EBITDA was obviously highly affected by portfolio revaluations done in Q1 and Q4 and ended up at 36 million. The return on equity to shareholders ended, unfortunately, in negative territory for the year at -5%. Let's move on to the next slide, where we look closer at the gross revenue development per business segment. All our business segment had a positive gross revenue development in Q4 compared to last quarter. If we look at the three segments, starting with NPL, we did achieve a gross revenue of 69 million euros. This was mainly a result of normalization towards pre-pandemic levels, and we did invest north of 200 million euros in new portfolios during the year. In other words, we are still in investment mode with increasing book values on portfolios, although at a lower level than previous years. For third-party collection, or 3PC as we also call it, the gross revenue increased substantially from Q3, up from 11 to 14 million euros. But unfortunately, we are not back at pre-pandemic levels yet. We have experienced that closing of new 3PC contract has taken longer time than what we consider normal, as some customers are postponing the decision regarding new collection partners. Other customers have been holding back on volumes sent to collection, but we now see that these effects are diminishing, and we expect 3PC volumes to pick up during 2021 and onwards. For our runoff segment REOs, the sales came in at 12 million euros, which was a positive surprise in our view. The trend from Q3 continued, with higher volumes at better prices than anticipated. However, REOs is only accounting for a small part of our balance sheet, some 3% of the total book value exposure on portfolios. On the next slide, we can see that the positive gross revenue trend is also translating into margin expansion. In this graph, we focus on our core business segments, NPL and third-party collection. Hence, the REO figures are excluded in the illustration. The gross revenue for the business areas increased by 7% combined for Q4 2020 compared to same quarter last year. Even more interesting is the development in personnel expenses. For the same comparison period, the personnel expenses are down to close to 1.5 million euros or 9%. This is crucial for Axactor, as one of our main strategic goals is to be industry leading on cost to collect, and personnel costs are a significant part of that equation. Operating expenses are also down, but only a moderate 1%. In Axactor, we are constantly focusing on our cost position, and we expect to be able to push for further margin expansion going forward. Let's now look a bit more into detail on each of the business segments, starting with NPL on the next slide. As you have already seen, the NPL collections has continued to normalize. For Q4, the contribution margin is down 10% points compared to Q3, from 78 to 68%. But here it is important to note that the regular amortization level is back to a normalized level of 40% for the quarter, compared to 34% in Q3. Furthermore, Axactor did take a negative revaluation on the NPL book of 8.9 million euros in Q4, which takes the total income down to 33 million. As some of you maybe know, we also did a negative revaluation of the NPL book of 27 million euros in Q2 last year, and we commented that we assume curves to be back at pre-COVID levels from the start of this year. This last negative revaluation is primarily a result of us not being entirely back at that levels, as we did anticipate when we set the new curves in June last year. Hence, we have now also adjusted the curves for 2021 and second half of 2022 through the 8.9 million revaluation. We obviously regret the latest revaluation, but the fact is that the pandemic situation has lasted longer than what we assumed when we revised the curves in the second quarter of last year. On the next page, we will give more details on which assumptions we are taking regarding the collection curves going forward. As you can see from the graph, our cash collected did not meet our active forecast for the fourth quarter, which is shown as the difference between the blue bar marked as Q4 and the green curve line. Our new active forecast, being the curves presented after the negative revaluation of 8.9 million, are now aligned with current performance and is shown as the orange curve line. There are different ways of implementing curve adjustments. Axactor takes a prudent approach, and accounting-wise, we are assuming historical underperformance as lost. This is a more conservative approach than the one assuming that all or parts of the underperformance can be recaptured in the future. However, it is worth mentioning that this does not necessarily mean that the collections are actually lost, as there are not made any adjustments to the claim against the debtors, and the debt can still be partly or fully repaid. Now please turn to the next slide for more in-depth comments on the 3PC development. As already mentioned, the 3PC revenue reached 14 million euros for the quarter, showing that the recapture after the first COVID wave is well underway. However, the business segment is still burdened by the pandemic, as we are down 11% year over year. On the positive note, we are recording the highest contribution margin since the second quarter 2019 of 44%. The margin expansion is primarily driven by cost reductions, and over time, we also expect scale effects to be a positive contributor to further margin expansions for the segment. Let's move to the next slide for more details on our run-off segment, REOs. For those of you that don't know us that well from before, REOs stands for Real Estate Owned Assets and relates to a few but large portfolios we did in Spain back in 2018 and 19. In a nutshell, these are small apartments and some commercial properties that, for the most cases, are ready to sell to end users. Just to underline, Axactor will not invest in new REO portfolios, and this is considered a non-core area for us. We are now in the tail of the portfolio. You have already seen the REO financial performance for the quarter, so I will not repeat that. But as you probably remember, Axactor did an impairment accrual of 27 million euros in the first half of 2020. This was based on the prices and sales volumes that we experienced at the time. In Q3, we released approximately 5 million of this accrual due to higher sales volumes and better prices than first anticipated. External valuations has been conducted during second half of 2020, and they support a higher valuation than what we used in our accrual calculations. This is further backed by the prices and volumes we have seen over the last 2 quarters. So based on this, we did book a final impairment of 16 million euros for 2020, and hence we released another 6 million of the initial accrual done in the first half of last year. The fully consolidated book value at year end was 79 million euros, and Axactor's exposure is approximately 40% of this amount due to minority interests in the structure. On the next slide, we will present more details on the reported financials. If we start with the total income, it was obviously burdened with the 8.9 million negative revaluation on NPL, ending up at 58 million euros for the quarter. The reported EBITDA margin came in at 36%, also burdened with the same negative revaluation, but 5.9 million accrual release on REOs pulls the EBITDA in the opposite direction. Cash EBITDA came in at 64 million for the quarter. And I think given the pandemic situation, these are pretty robust figures, especially on cash EBITDA. So in the interest of time, I would like that we skip slide 14 and move directly to page 16, where I will briefly go through main elements of our balance sheet restructuring that we have just finalized. As many of you are probably aware of, in December 2020, we announced a major multi-step financial transaction to improve our competitive position. The transaction consisted of following main elements: total equity issue of 50 million euros, refinancing of unsecured bond and RCF facilities, and roll-up of Axactor Invest and refinancing of the loans in that vehicle as well. The main motivation for the transaction was to simplify the structure, extend the maturity on our credit lines, and increase investment capacity. We obviously also wanted to reduce our funding cost, and this was achieved through better terms and improved structure on the RCF facility. The roll-up of the SPV triggered a mandatory offer from Geveran for 100% of the shares in Axactor. This transaction is now finalized, and Geveran ended up at 40.6% ownership after receiving very few shares in the mandatory offer as anticipated. The offer was also not recommended by the board of directors in Axactor. On the next slide, we can see more details on our new debt maturity profile. I think, as you know, all the major credit facilities were refinanced and maturities extended. The RCFs in Axactor and Axactor Invest was merged into one credit facility of 620 million euros, with the 75 million being an accordion option. And the result is that we have no major maturities of any significance until January 24. On the next slide, you can see, on slide 18, you can see more details on pro forma balance sheet effects from the transaction. But again, however, I would like us to, in the interest of time, skip this slide and move directly to slide 20 for more details on the strategic update that we did the second half of last year. Even though Axactor has revised the strategy, you will recognize most of the elements from before. For us, strategy is simply explain the tool for us to decide where and how to compete. The three pillars in our strategy remains unchanged, but we are doing certain adjustments to meet them in a better way. And I will give you a short recap of the three. So first one, Axactor shall focus on bank and finance sector. We would like to be the preferred partner for banks and financial institutions when it comes to collection services and sale of non-performing loans. Secondly, we shall pursue profitable organic growth and exploit economies of scale. And finally, we are using the concept One Axactor, where we emphasize on building the best collection platform in the industry, and key elements are how to take maximum advantage of the already standardized IT systems and infrastructure that all our countries are operating on, cross-country collaboration and competence sharing. If we can move to the next slide, please, we will give some more flavor on how to pursue this profitable growth. There are, of course, several ways to approach this target. When we have evaluated what is important for Axactor, the idea of maximizing the risk reward has been key. So when we have concluded on where to compete, it has always been with the risk reward thinking as a foundation. That is also the reasoning behind our geographical presence. We have chosen the countries that we believe will give the best risk reward over time. All the countries has well-functioning legal systems, large volumes of NPL transactions, and the customers are also outsourcing 3PC volumes at a decent margin in our core segments. This is why we believe that Axactor should target organic growth in existing markets. We still need to increase scale in several of our countries to further reduce our cost to collect, and we don't see any other markets in Europe that could offer more attractive opportunities than what we see in our current markets. Axactor will obviously focus on purchasing of non-performing loans, but at the same time, we need to capitalize more on our high-quality debt collection platform. This means more focus on 3PC and capital-light business. This will increase volume and bring our contribution margin up over time. This is also why we are putting more efforts into partnerships, where we both service and buy claims from a few banks in every market. Finally, we will strengthen our focus on the bank finance segment. Previously, we have had a broader target in our 3PC sales efforts, but going forward, the focus shall be on bank finance, in addition to medium and large accounts in SME space, where the profitability is attractive. Furthermore, we will focus on business to consumer unsecured and have less focused on secured portfolios. Already today, secured NPLs are a very small part of Axactor's balance sheet, as you can see if we move to the next slide, slide 22. So to continue at the same note, 94% of Axactor's portfolio book value exposure is within our strategic core unsecured non-performing loans. The vast majority of these unsecured loans are related to business to consumers. The remaining 6% is equally split between NPL secured and REOs. The 48 million euros nominated as non-Axactor exposure is related to minority interest in the REOLUX structure. If we turn to the next slide, we will show a pro forma graph on how return on equity would have looked like excluding the REOs. So there's no big secret that the profitability on REOs has been disappointing since the acquisitions back in 2018 and 19. But if I can draw your attention to the difference between return on equity in 2019, you will see that the difference between reported consolidated return on equity and return on equity excluding REOs is 4 percentage points in Q4 2019. Even more interesting was the underlying development in return on equity for the core segments, with strong improvements for several quarters in a row. Now, unfortunately, the pandemic destroyed that trend, but we strongly believe that we'll get back to the same trend as the situation further normalizes. Axactor also has a clear goal to start paying dividends as the return on equity increases. We also continue to see factors that should push the return on equity in the right direction, and on page 25 we will discuss this a little bit more in detail. As always, we see positive and negative drivers for return on equity, and luckily the negative factors are of a more short-term nature, while the positive has a more sustainable character. On the positive side, we see vaccination normalize working conditions for our employees and normalize debtors' willingness and ability to resolve their debt. We expect increased 3PC volumes and expect lower NPL prices as part of the COVID-19 aftermath. Continued margin expansion as ongoing performance improvement initiatives materialize is expected. We will have reduced financing costs and increased investment capacity following the refinancing and the equity raises. And finally, we expect a gradual normalization of the tax rate towards an estimate of 25%. On the more challenging side, we see COVID-19 increased pressure on our employees working on home office. We also experience that the pandemic increases pressure on our debtors' short-term willingness to and ability to repay debt. And these elements has obviously led to some operational performance issues during last year. So with that, I think it's time to open up for Q&As, Jonas.
Yes, I'm not sure if you guys in Stockholm have any questions on the web. If so, let me know. If not, I'll just kick off with my questions. I have a few. So just give it a few seconds here, but I can kick off. I know this is sort of an open question, but I think it will be interesting for the audience to hear your thoughts on this. And it's basically your thoughts on how the climate for NPL investments look today versus how it has looked, let's say, 2 to 3 years ago when the NPL prices peaked in, I think it was early 2018.
Yeah, sure, I can do that. Yeah, no, but I think you're completely right. It's I share that view. The prices peaked in 2018. I think the prices on portfolios went quite rapidly up from I would say a long-term industry average for at least the unsecured part has been around plus minus 13 IRR. If you look at the last 10-15 years. But then something happened around 2014 as the industry gained more access to capital. So starting to use the bond market much more actively, a lot of capital flowed into the industry. I think that that was probably the main reason why the prices on portfolios started to go up, and also probably the sell side became much more professional in those same years after the financial crisis. But I think it turned in 2018 as we saw that the industry became, I would say, a little bit more out of favor. The players in the industry has not been able to, I would say very few has raised new capital the last few years. It has been more about refinancing current debt structure. So the capacity has not increased. And at the same time, the supply part of the value chain has increased as we have seen new regulations coming to the market with prudential backstop and capital weights and so on. So banks has an incentive to clean up their balance sheets, and this is a long-term trend. So a lot of banks have already outsourced their 3PC collection and also are very eager to sell. And on top of this, you saw especially in the Nordics and some European markets that the consumer banks were increasing quite a lot in scale, and they have been very, I would say, very eager to continuously offload their balance sheet. So that is kind of a little bit a history lesson, maybe, Jonas. But the fact is now that the industry has been a little bit short on investment capacity, and high volumes did come to the market in 18 and 19, but I think what is actually happening right now is that we have an overhang. So there's still 19 batches not sold. A lot we have seen a new debt piling up on their balance sheets in 2020, and the market has at the same time been very, I would say, not completely frozen or inactive, but very few deals has taken place during 2020. We see that this is now changing. I wouldn't say dramatically, but we see that there are now a climate where it's possible to do deals again. So a few deals has taken place, and also we see that the Nordic consumer banks are eager to prolong forward flow contracts.
Yeah, it's very interesting, quite clear, and sort of related to what you just talked about. I'm just wondering what's your thought on risk reward in the NPL market going forward? Where do you see in terms of the markets the best risk reward, and also in terms of asset classes, NPL secured versus unsecured? etc.?
Yeah. I think first of all, if you start with the unsecured, which is a kind of our specialty, I think it's quite clear that we believe that the Nordic market is currently the most attractive to invest in, and I think that has to do with the fact that it's not so easy for other players than the debt collection companies to actually buy debt, especially in Norway, where you have a certain set of rules which makes it very difficult for investment companies, for example, to buy NPLs. So we see that the competition is less here in the Nordics, and at the same time, I think all the Nordic countries has been very robust during the pandemic. So when you ask like the risk reward, I think that has been that the Nordics is currently the most attractive. But we also see that prices are coming substantially down on portfolios in Italy and Spain. Germany is still a little bit, it hasn't been any deals, or at least no large deals lately. But we believe that all the prices will come down in all our 6 markets. So on NPL, Nordics most attractive for us currently. When it comes to the different asset classes, I should be a little bit careful with what I say, because we have done a few secured portfolios. What I can say is that we have only done it in Spain, and you have to be very, very good at doing the pricing correctly. And what we have seen is that it's not so suitable for our cash flow profile, because often you start with a relatively long legal process where you have a lot of expenses basically in the legal process, which you have to book continuously, and then you have to wait several years basically to settle the claim. And now I'm assuming that you don't get repaid amicable, because a lot of these claims are not repaid amicable in the short term. You need to go into a lengthy legal process, and in very many cases you actually end up with the collateral. And this is something that you need to be very cautious about, because the plan was not to end up with the collateral, and if you do, you need to have a really good evaluation on the collateral. And you don't see the negative effects until you actually have been through the process, ending up with the collateral and actually realizing the collateral. That is when you see the real effect, and that could take years. So that is why we have decided to be very cautious and not invest in secured portfolios, at least not to a broad extent.
Thank you. I guess we have time for at least one additional question. I could at least ask one here. During 2020, we saw a lot of banks, especially in Southern Europe, introduce debt moratoriums, meaning that they essentially held back on cases sent to collection, both for third party and also portfolios for sale. And I'm just curious to what you guys have seen so far in 2021, and what your thoughts are going forward in terms of when we can see probably an increased activity level here.
Yeah, I think for all practical purposes, the claims are now flowing into the system again. There's still a few banks holding a little bit back, but I would say for all practical purposes, we are back to a normalized situation when it comes to inflow from the banks. But you have to remember that some of these effects are initiated by the government, and some of it initiated by the banks from a more, say, reputational point of view. So it's a little bit mixed, but it looks now like the flow is coming back, but it will take time before you will see it through the books. And as I mentioned earlier in my presentation, we have seen that it takes longer time to sign up new third-party clients.
Thank you. We have about 30 seconds left here. If there are no questions from the web, I think we could wrap up there. So thank you so much for your time, guys, and thank you to everyone who listened in to this, watch this presentation, and I wish you all a nice day.
Thank you so much, Jonas, and thank you everyone for attending. Bye bye.
Cheers. Bye.
Bye.
smaller companies. We are inspired by the well-established larger compounders on the Stockholm Stock Exchange, such as Indutrade and Adtech, Lagercrantz and Lifco, for example. We are growing preferably by buying well-run companies, and we implement them into our company group. We focus on companies that have a stable history of low-risk businesses, and of course, we love positive cash flows. We are a happy team of managers that have been doing this for a very long time. We love our jobs and we love to build something, and the feeling is that we are in the beginning of something that will hopefully be very big in the future. Please give us the next slide. Thank you. Short history about Teqnion. It was founded by myself and a friend in 2006. And as I mentioned, it's with a lot of inspiration from the bigger compounders. And we've been following some examples that several of us have, which is that we are running our subsidiaries as decentralized units with where you focus, you keep your own brand, and we don't promote Teqnion as something that our customers see. Every subsidiary have their own entity, and they should be autonomous in what they do. All their functions are within the subsidiary. We are growing constantly, both organically. We try to not only maintain our subsidiaries, we also drive them towards growth. But the big growth of the group is coming from acquisitions, and we are constantly on the search and scouting for good businesses to acquire. We value relations very much, both, of course, with our most important asset, which is our co-workers and employees, but also with our suppliers and with our customers. We love long relations, and we love the mutual benefit of an ongoing business deal. We like the win-win-win situation in everything we do. We listed our company in April of 2019 on Nasdaq First North. We are today approximately 230 co-workers in the group, and we have 15 companies, and they are organized in 3 different business areas. Up until now, we're focusing on Sweden. All our subsidiaries are here, except for a few. We have representation in China, but that's still very small. We're hoping in the future to expand geographically, hopefully, or most likely in the near geographical region, such as the Nordic countries, to start with. Yeah, please give us the next slide. Why you should invest in Teqnion? Yeah, that's a question that we have several answers to. Maybe the most fun is that we are constantly growing, and that we are growing with good margins, keeping our margins high. We love to earn money, and normally we earn money before we invest anything else, and we try to invest wise and for the long term. And we have, as I mentioned before, we believe that we are in the beginning of something, even though that we've been doing this for 15 years. We are constantly searching for good companies to acquire, and we are looking for niche companies. Some companies that might seem very unsexy when you look at them, but companies that fulfill their customers' needs, and often in a way that in a niche where there's a lot of regulation or a lot of difficult standards to follow, where it's hard. There's a big threshold for a competitor to get in. Those places we love, and we are focusing on always making decisions that in the long run will be profitable and sustainable. We are telling each other that we will be here for at least 100 years, and if you think like that, you have to really be careful on how to which type of decisions you make all the time. Please give us the next slide. A little bit about the operations last year, from January to December 2020. We increased our sales with 14%. Most of that came from acquisitions. We had a small organic growth, as you see. We were affected by that. We are a very small mother company, I should say. We are today 6 people employed. We were a little bit down in force during 2020 for different reasons, which meant that we couldn't acquire so many companies maybe as we could have done if we had been a few more people here. We acquired two really nice companies, Rima Propulsion, which are focusing on maintenance of gas turbines, and Inga Kraftteknik, which is supplying measuring transformers to the with the power supply industry. We were also a little slow on the acquisitions due to the fact that we had the pandemic going on, so it was hard to meet with new prospects. We increased our results quite a bit, and we are getting up to those EBITDA margins where we would like to be. We are not happy with 2019. But we are very happy with everything we've been doing during last year, and of course continue doing. We love our margins and we love to earn money. Please give us the next slide. How we run our operations. We love the strength and the robustness of working in a company group. Since we are looking at smaller niche companies that are supplying some sort of industrial products, we constantly seek the uniqueness, and we educate ourselves that always be in these niche areas. We are trying to stay away from the commodity things, and we don't like to sell things based on price. We love to sell things based on knowledge and expertise. As I mentioned before, we really value our long-term customer and supplier relations. We have companies that were founded in the 1950s, and our oldest companies are from the 1950s and 1960s, and we have actually few suppliers from that time still in our portfolio, and also some customers, which is something that we really appreciate. Important for us is also that we are organized in a way where all subsidiaries are run by people that see their company as their own. It's entrepreneurial driven, and we make sure that the decisions are made out close to the customers all the time, which makes us more competitive, and of course hopefully gives our customers the best service that they can get. We like the simpleness of a business where all parties can see that they gain from it. We don't like to be complicated. We like to be straightforward. We like to be sustainable because we would like to be here for 100 years or more, and we like to earn money. Please give us the next slide. here to the right, you see some of the logos from the subsidiaries, and they work under their own brand name towards their market. We from the Technion and from the mother company try to help these companies and support them. We don't try to run them or control them. We are very certain that the knowledge and know-how is located within these subsidiaries, and we just from the mother company try to support them the best we can. We do that by applying an active board of directors for each subsidiary, where we help the subsidiary CEO with a straight strategic long-term goal for the company, and then we also can be a resource when it comes to things that are out of the normal everyday operations. We are always involved in the recruitment of key roles, for especially when it comes to applying the CEO of a subsidiary. This is something that is key for doing a successful business group like this. You have to be really good at recruiting good people, because it's good people that do this possible. We also help training them, and we also help them inspire each other. We have meetings where all these great people can come together and talk to each other, getting to know each other, and also be inspired by each other. It's a very dynamic and fun workplace. I think we can go to the next slide, please. We are divided into 3 different business areas, as you can see on this picture. We call them industry, growth, and niche. We are constantly overlooking this and looking for the future on how to be organized. This is something that we did for the IPO project in 2019. I think when we are growing with a few more acquisitions, maybe we will look over this and maybe we come to a conclusion that we need perhaps a 4th leg, or divide these 3 legs into something new. But for the moment, we have the industry leg, where we have some metal working companies, also a couple of home wood producing companies. Then we have the growth area, where we have a few companies that we believe can over time become much bigger than what they are today. And then we have the niche companies, where we see the biggest amount of companies, and they are also as they are named, they are very niche within themselves. It's a very broad spectrum of different market niches within that group. We love that, and it's the niches that make the uniqueness and make us it's possible for us to keep up high margins when we are in very niche different business areas. Thank you. Next slide, please. When it comes to acquisitions, which is a very important part of what we do, we love the low risk strategy, meaning that if we find a company that has been well established and earning money for many years, when we find it, we also believe that it will be profitable in the future. And so we're looking for companies that have a very they have their niche, and they have the ability to have a good cash flow, and they have the knowledge within their staff on how to remain in their competitiveness in their specific industrial niche. We are also looking for companies that are in a different in a specific size. As you see in this table, we're looking for companies from approximately 20 million in turnover or sales up to maybe 100 or a little bit more. And it depends on what they do. If they're very niche and they have their own brand name and their own products, maybe we can go down a little bit as to 20 million in turnover. And if they're a little more like they have some more type of not so niche, or how to describe it. We can look at a little bit bigger companies. We try to get back the price. We say we need to get our money back in approximately 5 years. Of course, that will also differ a little bit between if they own their own products, or if they are producing for someone else, or if they are an agent for another company. But approximately 5 years payback time. Normally we pay from our own cash, and we borrow half of it from the bank, and that's how we've been growing since the beginning in 2006. We never put any money into this company up until 2018, where we did a pre-IPO, and then we did the IPO in 2019. We buy companies both for expansion, meaning that we're not looking for something that we already have or that we are familiar with. We're looking for companies that have that we can judge have a low risk and a good history with good cash flow, that looks that it will be sustainable for the future as well, and of course that they are run by good people that would love to drive the company forward together with us. Good people is key. And what type of companies we're looking for? Yeah, we're almost exclusively doing business-to-business companies, which all of them should have something that is unique or something that stands out from the rest of the competitors. It should be sustainable. It should definitely be understandable. We don't want to go into something where we don't see how we earn money. And as up until now, we are looking at companies that sell products, but we are also have some parts of our companies also sell some sort of service, but they are linked to products in that case. Please take the next slide. This thing with buying good companies is something that is the fundamental of Teqnion. This is something that we will continue doing, and we like the proven concepts that I've been talking about, and here are written down sound people, and that's so important for us. When we meet a new company and talk to the management, we judge if they judge us, of course, as takers, but we judge them as future co-workers and people that can help us to build this company strong and better over time. We have today a very good pipeline of prospects, and what we love to do is scout by ourselves, cold call companies that might not be for sale right now, but as we getting to know the owners, finally we can turn them into sellers, and hopefully in the future also, if we buy their company, co-workers. We also get, of course, prospect from company brokers, and since we've been around for 15 years now, we also starting to get different kind of acquisition prospects from the reputation of Teqnion being a good taker of industrial companies, which we of course are very happy for. We constantly have an ongoing talk with a handful of prospects. It's increasing a little bit now because our management group has grown a little bit. So before it was mainly me doing this type of tasks, but now we are 3 heads that do this, so we can do so much more right now. It feels great. We're aiming to do approximately a handful of acquisitions per year for the coming years before we hopefully can increase that and accelerate a bit when it comes to acquisitions. Please give us the next slide. A little bit about the shareholders. Here you see the 10 largest shareholders. This is from the last of December, so it's not really up to date, but we haven't seen so much change in this. Vixar, as is just the top there, they have been with us since 2008. They came in during the financial crisis and helped us to downsize because we had a really, really thin. We we had a really thin balance sheet and we needed help to downsize. And they came in and said that they were long term. Perhaps we didn't believe them back then, but now we all have to believe them. Then in 2018, Spiltan came in, and they are today the second biggest owner. Yes. Then you see some of the, I'm there in the middle, and Erik Syrén also is one of the founders and still a big owner and work operationally in the company. Yes, please give us the next slide. Here you see the technical management team, and when it comes to acquisition, it's myself and Daniel and Susanna that work with that. And when it comes to manning all the board of directors as chairman of the boards, it's Anna-Karin, myself, and Mona. And taking care of all of us, and especially the bookkeeping, is Maria. She's been with me since 2008, and she knows Teqnion as well as anyone. From yesterday, we are actually one more member of this team. It's Jenny, and she will be working with Maria with the accounting. We have very fun at work, and we love to challenge each other to be our best. We hate being bad, and we really enjoy doing this company built together. Please give us the next slide. Short summary, what we are. Teqnion is a constantly growing industrial group where we acquire niche companies, we develop them, and we focus on clear, understandable business models where it's easy to see how to earn money and how our suppliers benefits from it and how our customers will benefit from it and continue to be competitive. We do sustainable businesses, which means that we have an equality between supplier and customer. We grow with profitable margins and with good cash flow, so we can buy new companies constantly. We run our companies or our operations decentralized and entrepreneurial. Every CEO of a subsidiary should have the feeling that it's their own company and they should drive it towards the future as that. We are a compounding machine, and we are only in the beginning of this build. Thank you. Next slide, which should be the questions and answers. Thank you.
Yes, thank you very much, Johan. Very nice. And to start off the Q&A, I think perhaps run for be nice. You're not only known as the CEO of Teqnion, but also as an outstanding long-distance runner.
You're very stubborn, yes.
Yeah, you set, for example, a new world record at Backyard Ultra, where you ran for 455 kilometers non-stop, more or less. So how does the mentality necessary for such an achievement translate into the business world?
I think it can translate somehow, at least if you try to explain it. I don't know if you stretch it a little bit. I mean, it's the distance running is a very simple task. You put one foot in front of the other and you do it until you've finished. You need patience, because if you're gonna last for the long run, you have to do it in a pace that's sustainable, and that's the same with businesses. I think we've been doing Teqnion for 15 years, and we're only in the beginning. You need to be you need to take all the steps to get to where you want to go, and that's the same with the long distance running, I think. And then of course you need to be a little bit stupid and a little bit stubborn, and yeah, you need to be able to take some punishment, and I think that's also something that you need in the business world, at least to some extent. I think it's good to, if you take it more on a healthy perspective, I think it's just good also to be moving, use your body, not only your head. I think too many people today just sit around and use their bright minds. I think they should be so much brighter and healthier if they also use their body a little bit. But that's something we don't have to talk about today.
Yes, it sounds very good, Johan. Unfortunately, we are running out of time here. So I have to thank you very much for the presentation.
Absolutely.
And we will hopefully see you in the future sometime.
Looking forward to that. Thank you so much.
Thank you very much. Bye.
Bye.
Hi and good afternoon. My name is Patrik Brattelius and I'm an analyst here at ABG covering the financial sector. With us today we have the CEO of TF Bank, Mattias Karlsson, and he's now going to do a presentation. So take it away, Mattias.
Thank you very much, Patrik, and welcome to all listeners. We can start with flipping to the second page. Just to frame the presentation and the company, I would just like to start to say that we, TF Bank, we are a Swedish domiciled consumer finance bank domiciled in Sweden. Been around since more than 30 years in this industry. And that sort of sets the backdrop to the rest of the presentation. If we look back at the fourth quarter for TF Bank, we had very good and strong underlying growth, 8% in local currencies compared to the third quarter. We have an initiative to issue credit cards in Germany that I will come back to, that we have been aggressively pursuing now for a few quarters. And we booked more than 53,000 cards by the end of Q4 2020. We will look more into that in detail. The last quarter of 2020 also saw record volumes for our third segment, which is e-commerce solutions, where we provide buy now, pay later services for merchants. And we also mentioned that we have had an intention to sign new forward flow contracts to sell non-performing receivables in Finland and Norway during the beginning of 2021. And now I can confirm that we have entered into those contracts. So the market for selling non-performing loans, I would say, has mostly recovered, at least when it comes to our types of receivable. And last but not the least, the board proposed resumed dividends of 1 Swedish crown for the fiscal year of 2020. So next slide, please. As I mentioned, we have three segments. Consumer lending, which is exactly what it reads like. It's non-secured loans. It's by far the biggest asset class of TF Bank. It's 73% of the assets and 72% of the operating income. It's a diversified portfolio, but with a strong Nordic base. And we have a tailored product offering for each market. But if you take the whole segment, the average loan size on book is around 55,000 Swedish crowns. So in this market, it's a relatively small ticket, which we think is prudent risk management, and it's also prudent in terms of consumer protection, because it's much easier to repay a smaller loan than a bigger one. Another example of our prudent risk thinking is that we try to keep tenors short. Typically, they are between 12 and 60 months. So it's a short repayment time, which sort of fits the criteria for a consumer loan, that it's not an investment loan. Marketing, we do all kind of marketing channels. In Nordics, it's predominantly loan brokers to originate new volume. If you look outside the Nordics to the Central Eastern Europe, it's more and more own marketing through traditional channels and electronic channels. For the ones who followed us, we have seen a margin drop in this segment that has had an impact on the whole loan book of TF Bank. What we now see in the bottom right-hand corner is that the new originations we've been doing now has been with a very stable APR. Even though we see a small drop in the Central Eastern European volume weighted for the last month. But that's more a mix effect where we saw Lithuania picking up. So all in all, we can now say that we are mostly through the price pressure. Predominantly, it has been driven by the Finnish market, where we have rate caps that has been introduced with the pandemic. But I think we are mostly over that, which is very, very good, because we will see a lot more of the new volumes generating bottom line effect. Also interesting here is that the pandemic have been from a credit quality perspective very, very I would say positive. We have seen the trends that we saw before the pandemic of improving credit quality continue throughout the period. Patrick, next slide, please. Our next segment, which is e-commerce solutions. And as I mentioned, it's an offering where we provide payment solutions and especially buy now, pay later solutions to Nordic merchants and also in Estonia and in Poland. We saw record buy now, pay later volume in the quarter, and we had very strong Black Week and also Christmas sales, also very strong. and the increase in the transaction volume Q4 compared to the Q4 the year before, it was almost doubled. So we handled transactions worth more than 1 billion in the fourth quarter. So it's growing rather quickly. If you take it by assets, you see that the assets are 17% of the loan book, but it's 21% of the operating income. We also see a tendency here to go to more off-balance income. And with that, I mean that we do smaller purchases that necessarily don't stick to the balance sheet, but they generate fees. So hence, it is more a fee-driven and, let's say, off-balance income type of business that we see developing. Here in the coming quarters, we will see quite interesting development. Is our strong belief that we will onboard some new bigger merchants that will continue to propel the growth case of e-commerce solutions in the coming quarters. Patrik, let's go to the next segment, which is credit cards. It's a segment we have already reported through 2020. We offer credit cards in the German and the Norwegian market, and we target only consumers. We offer a very simple product. It's a gold card. We have absolutely no fees, so it's interest only. It's no fees when you go to the ATM, and no fees, no annual fees or no nothing. If you take this product, which is a consumer finance product with a totally different income profile, because when you disperse the card, it comes with no income. So the customer needs to use the card to produce the income, and it's a very slow build-up. It takes months and months before it to reach sort of its potential. So that's a different profile. So if we look at the addressable market now that we see for us in the markets, Germany and Norway, we see in Germany we have 35 million possible customers. Germany is going through a shift from less cash, and that has been accelerated by the pandemic. So we believe that there's a huge market opportunity coming our way. And with this 35 million, we've taken away the top earners, the 15 million of the most interesting customers for the affluent bankers in Germany who targets that segment. We don't believe that they would be our target group. I think they would be more interested in getting lounge access and that sort of thing with their credit card offering. So this is the average German population, and we've absolutely taken away the worst possible credit risk that is very difficult to do credit decisioning in. Norway is 3 million, so it's around a tenth of the German market. Customers in this segment, we have 72,000 active cards, and we had 57,000 by the end of Q3. So we are growing very quickly. And if you take the net assets now, we exited 2020 with closer to 800 million Swedish. So it's growing very, very quickly. If we take the loan book growth, so if the year on year we grew with 177%, so it's quite a quick build-up. So we are adding a lot of customers as we go. And just for an illustrative example, I want you to take a look at the table in the bottom right-hand corner, where we see the unit economics of a card that we see we will reach in this segment in a while. If we take the net banking income, which is nothing strange, so it's income less funding costs. The marketing cost will be around 5% per card, and we take the net loan loss ratio, it will be around 4%, as we see, and operating expenses ratio would be around 3%. So the net operating profit margin should be in the region of 6%, which is translates to a very, very attractive return on equity, well in its 30s. So I think where we see all the figures working out pretty well for us, except for the operating expense ratio, where we have costs relating to the very, very fast growth. So Patrick, you can take the next slide. Just a summary picture of the past year's growth. If we take the actual growth in Swedish crowns in Q4, it was 5%. 3% was related to the stronger Swedish crown. The year-on-year growth in 2020 was 22. We had a negative impact of 8% depending on the Swedish crown's appreciation. And here you see the respective segments. I don't think we need to spend too much time on that. Just to point out that the credit card in Q4 grew with 31%, and there was a 5% negative impact from currency. Patrick, next slide, please. Just a brief look at our geographic footprint. Swedish market, we are active in the consumer lending and the e-commerce space. We have since quite many years been rather defensive when it comes to the consumer loans in Sweden. We think it's overly competitive, and the return levels you could expect from a growing loan book would be very low. So we believe that e-commerce is the best option for us in Sweden, where we see some healthy growth coming, and we also saw some healthy growth in 2020, and it's less competitive when it comes to margins and less risky, is our belief. If we take Norway, which is by far the biggest market for us when it comes to assets, we have a strong positive belief in the long-term ability of the Norwegian economy to support its citizens and have high employment, and therefore very good payment behavior. So we see a very, very good opportunity to continue the successful journey we started a few years back. Finland, we are active in the segments of consumer loans and e-commerce. I think both are good. We have a rate cap in the consumer lending segment of 10%. And the news we know today is that it will be in force until Q3 2021, and it's a cap of 10%. That takes away some of the addressable market that we saw with a pre-pandemic cap, but we have fully adjusted to this, so we have no issues if it stays or if it will go away in Q3. The Baltic states, we see a very, very good profitability, and despite pandemic, very stable losses so far. We are pushing the e-commerce agenda that we consider to be a very good risk, a very good asset class. So we will continue to push that agenda through the Baltic region, where we have, I would say, maybe not the first mover advantage, but the competitive situation compared to the Nordics is very, very limited. Although the markets are also much smaller, but the margins are even more healthier than you can expect in the Nordic region. If we take Poland, we have only now e-commerce as our business line. We discontinued the consumer lending because of little hope to see good growth and profitability in the near future. Germany, I mentioned it before, credit card product in high demand. Card spending is significantly lower since the lockdown started mid-December or just before Christmas. We see some tendencies now the past week that consumer confidence is going up, and we see spending going back up. But we have some way to go until we have normal consumer behavior in the German market. Patrik, you can flip the chart. And just to sum up the profit statements. Here you see Q4. We had 75 and we lost 4 million in the credit card segment. So, and then we had Q2 2020. We had 70 million with a 9 million in losses for credit cards. So if you take out the credit card segment, we would have done 79. And if we take the last quarter, Q4, we reported 77 million in profits, but with a smaller loss on the credit card segment of 5.2. So the credit card segment has been a drag for TF Bank. It's becoming less and less so. So we have a very positive trend. And if we look at Q4 by itself, we had return on equity of 24%, and the earnings per share came in at 2.67 Swedish crowns. So we believe that we will close the gap even further. So Patrik, next slide, please. If we look ahead in 2021, we can see quite well into Q2 already. So we see no credit-related issues with COVID-19. So we believe that if it's going to be adverse developments in the credit portfolio, it will be let's say late Q2 or beyond. What is more interesting with COVID-19 right now is that we have lockdown in several of our markets, and it's severe lockdown, and it's leading to short-term reduced customer demand. So the trend line, we don't expect that to continue for Q1. So we have a sort of a lag in when it comes to the growth. We have been able to report many quarters before this one. So I think customer demand is not back yet. I think we had to see an end of the lockdowns. And also we can say that we have an intention to announce new financial targets in the second half of the year. And this is, of course, dependent on that we see an end to the pandemic, so we get a better view of the future. The second bullet point I already mentioned, we can report that the market is open for selling non-performing loans, and we can continue to keep our books clean and the stage 3 levels quite low. More, I would like to also say that we have a total capital ratio of 7.3, so we are well positioned to continue to grow TF Bank in the coming quarters and beyond. So, Patrik.
Yes, thank you so much for that presentation. So I'm now going to go ahead with the Q&A. And if we talk a little bit about the credit card and Germany in particular, what makes that market so special, and why would customers want to choose TF Bank's card and not a competitor in your belief?
I would say we have one thing that is special is that it's quite low competition to be the world's fourth consumer market. We have very few specialists. If you compare it to UK, it's absolutely it's very, very different. I think key, we have two things that I would say are key for customers to choose our credit card. One, we offer a completely digital process, not very commonly offered by German banks. So you can do everything digitally. So I think the German consumer likes that. And German banks have a long tradition of charging a lot of fees. We don't. So I think that combination is really strong.
Thank you. You mentioned that the lockdown in Germany has slowed down the usage of the card, but do you still believe that you will be able to have black numbers on the bottom line for the segment during the end of the year, or will that be hard to achieve given the current circumstances?
I wouldn't say that is not dependent on spending so much. It's more dependent on how fast we decide to grow. So I think it more relates to that. But of course, if spending is really down, but it's not that bad. It's down. Significantly down. So I think that has very little impact if we want to do profit by the end of the year. So more related to growth.
So at which level of the at loan book do you need to reach, do you believe, in order to become break even?
I would say if we stopped growing today, we would be very, very close to breaking even. And then we have built-in growth already because we have a lot of cards that has not reached maturity yet. So I would say if we stopped growing today, we will be profitable very, very soon. So it's much of it is related to variable costs related to the fast growth.
Yeah, thank you. If we turn our eyes to the e-commerce solutions, how many merchants did you onboard during 2020? And is that the expectation of run rate of new merchants we can expect to see being onboarded the coming years? Or will this accelerate the coming years? Or are you facing tough competitions from giants as Klarna and other e-commerce peers? How do you see the market?
I would see the market as first, if I take your question, I can't really say that I know the number. I know that we have significant merchants. We have in excess of 200, and then we have a lot of smaller ones that have let's say insignificant volume. I don't think it's so important to look at the number of merchants. Of course, it takes down the risk. We think the mid-size and occasionally a bigger one would be more meaningful to see that number to increase, because there are a lot of merchants with very, very low turnover out there. And there I must admit that Klarna is a real champion to deal with that tail. That increases the number of merchants. So I would say we don't see higher competition today than we did in 2020. I think it's definitely similar, and I don't see the very aggressive competitors buying market share in the Nordic region, at least not today. So I think it's a level playing field this time, and I think it will be mostly up to the merchants how they want to do this and what they want to buy. Do they want to buy the incumbent with very little possibility to influence and also be a part of a marketing machine that is going on maybe at the expense of their own brand, or do they want something more custom?
Thank you so much. We're unfortunately out of time, so I have to thank you, Matthias, for coming on today and speaking about TF. Thank you.
Thank you. Thank you. Bye-bye.
Bye-bye.
Welcome back to the ABG Investor Days. My name is Johan Brown, a retail analyst here at ABG. We now have the pleasure to welcome Peter Åsberg, the CEO of Midsona. The floor is yours, Peter.
Thank you so much, and thanks for attending this session. I'm very excited to describe Midsona to you. I would like to introduce Midsona and then also go into our current trading. So we can actually go to the next page, I think, and go straight into the introduction. Midsona is a company within health and well-being, so our focus is on healthy food products, mainly organic, natural products, and we're a company committed to growth. And as you can see on the right-hand side of my picture, we have had some very nice growth over the years. And this is really a mix of organic growth for our main brands, which I will present later, but also acquisition-driven growth. The industry that we're in is an industry that is still very fragmented, and we have set out to be a consolidator in this market. And we started this process in the Nordics back in 2012 by basically acquiring Nordic companies and building our brands. Over time, we have become a leader in the Nordics and then continued out in Europe, as you can see. But still, the majority of our business is in the Nordics. When it comes to channels, we're mainly in the grocery trade, the fast-moving consumer goods trade, what we in Swedish call dagligvaruhandel. But we also are represented in pharmacies, specialty stores, and we also have a food service business-to-business leg of the company. The second way of describing Midsona we can look at in the next page. And as I was talking about already in the first page, we are a brand-driven company committed to growing brands that are healthy, sustainable, natural, and organic. And on this slide, you see a select number of our brands. And at least if you are a Swedish investor, I'm sure that you are familiar with some of the brands. Hopefully and probably you all also consume some of the brands yourselves. And as said, we do have iconic, strong brands across a number of categories. We move to the next page. This is a busy slide, but a slide that I would like to spend some time on really, because it really describes our journey and the industry dynamics in the industry that we're working in. And I want to go actually all the way back to when I started in the company. I became CEO already 2007, so I have been around for some time. And the first years were really about restructuring the company. We were very diverse. We did everything from pharmaceuticals to simple shampoos. We were in all parts of the value chain. We had business in the Nordics, but also across Europe. And at that point in time, what we decided to do was to focus on brands in health and well-being in the Nordics. And we had a few of them ourselves, but we also saw that the Nordic market was very fragmented. Few strong brands, few strong players in the industry. It was mainly made up of small and medium-sized family companies. And what we set out to do was to be a consolidator. As said, to build strong brands in the category, but also to acquire good family companies. And that's what we have done since then. Sometime then in 2017, we concluded that the Nordic market was significantly more consolidated. There are still very few companies that we were interested in, and we've actually bought a few companies since then. But we concluded that the majority of the consolidation in the Nordics had been done. So what we did then was to start to look at Europe and the European market, and we took the opportunity to make quite a big study and took help of a major consulting company to do this study. And what we saw then, or observed then, was quite exciting to us, because the situation that we saw in the Nordics back in 2011, 2012, a fragmented market, few strong brands, we saw and still see out in Europe. It's a very fragmented market out there. There are few strong players. A lot of the sales is still done in the specialty stores, and we see a good potential to move products and brands out in the mass market, the grocery stores across Europe. And we have started on this new exciting journey for us. We did one major acquisition in Germany back in 2018, which was a platform in Germany, a company called Detta. And then in 2019, we acquired Alimentation Santé with operations in primarily France and Spain. So we also created a strong platform down south in Europe. So now we have 3 geographical platforms, which are also our divisions: the Nordic division, the North division, which is the DACH countries, and then the South division, which is Southern Europe. So we're starting to create a very strong system across Europe in our product categories. We can move to the next page. I have partly discussed this already, but our vision is to become the leader in health and well-being in Europe, just as we became a leader in the Nordics a few years ago. And we do have 4 major strategies to get there: to build a strong portfolio of own brands, to be very active in terms of acquisitions. We have done at least one, many times 2 or 3 acquisitions every year. As we grow bigger, we have the opportunity to create a strong supply chain and a strong value chain for the company. And this is something that we're working very hard on to get synergies, to get it more efficient over time. And we have a mission, we do have a 4th strategy, which is about creating a healthy and sustainable culture. And sustainability is really at the heart of what we're doing. We're a very sustainable company, have very sustainable products, and this is something that we're very focused on. And our mission is to help people to a healthier life. We turn the page again. Thank you. This is a description of our key categories, but also of our key brands. And as you can see, the better part of the portfolio is an organic product. We do have a very strong position in the Nordics with some market-leading brands, but we also start to create very strong positions in Germany, France, and in Spain. And the good thing about that is that we still see growth in the organic market in the Nordics, with the exception of Sweden, which is a little bit slower. But the growth historically, but also the growth perspectives in the future, we think are much better out in Europe. So we are really excited about this opportunity to build our organic franchise outside the Nordics. Then we have a portfolio of health food products that's conventional food products with a clear health benefit. And then what is really our heritage self-care product, which is basically OTC products, some dietary supplements, vitamins. And depending on what country you reside in, you probably know some of our brands, but we do own and manage market-leading brands as Urtekram in Denmark and Finland, Kung Markatta in Sweden, Davert, which is one of the leading organic brands in Germany, Friggs, a very strong brand in Sweden, but increasingly also so in the other Nordic countries. Earth Control, a brand with a Danish heritage, that's our latest acquisition also. Very strong in nuts and dried fruit in Denmark, but also increasingly in the other Nordic markets. Helios is a leading organic brand in Norway, Selnat in France. Happy Bee is our brand in the grocery trade in both France and Spain. And then Vegetalia is our main brand in plant-based meat alternatives. So a very strong portfolio of brands and a portfolio that we can and will continue to develop further. We go to the next page. In my mind, Midsona have a number of distinct competitive advantages. The first one is our strength in organic. We do have a very strong integrated supply chain when it comes to organic products. At the top of this page, you see employees out in the fields meeting the growers that actually grow our products. We have a very close connection to growers across the globe. We have a number of production units across Europe which cater for different product needs and create a strong web that we can utilize across all our countries. And that's everything from vegetarian products, spreads, plant-based meat alternatives, which is of course something that is very hot nowadays, baby food, but also organic beauty care products. And this is an enormous strength of ours that we have this integrated chain. We move the page and go to the next competitive edge that I think we have. We are a company that has succeeded in building market-leading brands. And when it comes to organic dry products, Kung Markatta is the leading brand in Sweden, Urtekram in both Denmark and Finland, and the Helios brand in Norway. But we have also other market-leading brand like Friggs in the category of corn and rice cakes. So we are very committed in terms of building our brands, because that's the way both to the customer and the consumer. We move to the next page. As said, we have been quite acquisition driven, and this is a big part of our DNA to be consolidated in the market. First, we did this in the Nordics by acquiring a number of good family companies. We have a very good integration model where we integrate the companies into the Midsona family, thereby getting both increasing distribution powers across the retail landscape, but also, as you can see, we have been good at realizing synergies, mainly on the cost side. As we integrate the companies, we always, I would say, have some synergies on the cost side. We're doing two types of acquisitions. Platform acquisitions, where we establish new platforms that might be in a new geography and or in a new category. And then we do small acquisitions, what we call add-on acquisitions, where we add to existing platforms. Those we usually can do at lower multiples, and we usually also get better synergies because we can integrate them into our overall system. We move the page. And as you can see, and as I've already hinted, we still think that we're only at the beginning of this journey in terms of actually consolidating the European market. When we did our analysis back in 2017, we found almost 1,000 companies as potential acquisition targets. Of course, this list might be somewhat theoretical. Some of the companies might be too small, some might not be for sale. But what I think that it hints at is that this industry is an industry that is ripe for consolidation. Since 2017, there has been some consolidation, but I would still say that the market is very fragmented. And the way I'm looking at this is that this will be different in 5 to 10 years from now, and we would like to be one of the consolidators and thereby building a strong position across Europe. We turn the page again. This is the latest acquisition that we made, and it might have come as a surprise to someone that we did a Nordic acquisition. As I said earlier, we think that the majority of the consolidation in the Nordic market is already done. But this was one of the companies that we were interested in. It's a strong Danish company. We have a strong position in dried fruit and nuts, which is a growing category. Very strong and market-leading position in Denmark, but also a good opportunity for us to use our distribution power in Sweden, Finland, and Norway to further drive the company and the brand. They have their own production with quite a lot of spare capacity, so we're now working hard to actually increase sales by utilizing our system. We turn to the next page. This means that we now have a very strong platform in the Nordics across a number of categories with a number of strong brands. A business that pro forma is close to 3 billion Swedish krona. We get a much stronger position in Denmark, where Systemfrugt was almost as big as we were. But as you can see, Systemfrugt has smaller positions in Sweden, Norway, and Finland. And here we see a good opportunity to develop those positions further by using the distribution power that we have. We turn the page again. Thank you. I guess everyone is talking about sustainability today, but I would say that we have been working on this for quite some time, and we think that we are also quite good at it. Of course, we're working in an industry with healthy and sustainable products, plant-based products, and that's a big part of our heritage. In the past, we had done a lot of good things, but what we realized was that it might have not been as coordinated as we wanted to. So a couple of years ago, we started a big project to consolidate and thereby become even more sustainable and really get to the forefront of sustainability within our industry. And the first step of that we will see when we move to the next page. We have about a year ago set some quite ambitious targets when it comes to sustainability. We have said, for example, I won't go through all of them, but I will point at some of the most important ones. By 2030, 100% of our products should be plant-based or vegetarian. We're actually not that far away from that target already today, but this is something that is very important to us. We are true believers in vegan, vegetarian, and plant-based. And as you all know, there is this big debate about us eating too much meat, which is not good for the health of the people, but also not for the health of the planet. And this is something that we're now working very hard on to actually promote our assortment of plant-based products. We're working a lot with our packaging, waste, transportations, and so on. So this is really something that is quite integrated in our business model and something that we work on day in and day out. And that work has actually paid off quite nicely, and we can go to the next page then. We're very proud of the fact that we are a winner in Dagens Industri, which is the major business periodical in Sweden when it comes to sustainable companies 2020. And there were 8 winners in total, and you can see us all on the front page of Dagens Industri. What makes us a little bit more proud is that when this was announced, our market cap was around 4 billion Swedish krona. The second smallest company on that of the winners had a market cap of 40 billion Swedish krona, and the largest of 40 billion Swedish krona, the largest of 400 billion Swedish krona. So even we as a company with relatively limited resources have shown that we can be at the forefront of sustainability, and that's something that we want to continue. We've also been awarded an ISS ESG Prime rating, which is of course a proof of the fact that the work that we have put in really has paid out. We move to the next page. We are running out of time quite quickly now, so I will just do a short current trading update. We did have a very strong fourth quarter. We had both record net sales and record EBITDA, and a very strong organic sales growth. And this is something that, of course, we're very happy about and very proud of. We also acquired Systemfrukt, took control 1st of October in this quarter, and we announced a major investment in plant-based meat alternatives in our plant down in Spain. So this is something that we are really focused on to be even a stronger player in the segment of plant-based meat alternatives. We move the page. This is pretty much a summary, so I won't go so much into the details, but I think that the figure that is important here is that we have continued to increase our EBITDA margin, and it was up from 9.8% last 2019 to 10.5% in Q4 2020. And we continue. And this is then the summary of the year, and just as the fourth quarter was a record quarter, this was a record year for us. It was a very special year with lots of up and downs, considering the COVID crisis. It was a little bit of a roller coaster. We had some very good quarters, some weaker quarters, but overall, we're very happy about what we've achieved. We have continued to grow net sales at very healthy rates, and something that is very important to us, to grow EBITDA faster than net sales, because that shows that we're increasingly becoming more efficient. And as you can see, the EBITDA margin increased from 9.4% in 2019 to 10.5% in 2020. We continue. This is just a summary of the quarter and the year, and as you can see, we do have both structural growth, which is growth from acquisitions, and organic growth. And then we have quite a negative exchange rate effect, and that's due to the fact that the Swedish krona has strengthened significantly versus the euro. We continue. This is just a way to describe the customer landscape right now. And as you can see, we have had some very strong growth in the FMCG trade, so the mass market. Very much driven by the fact that consumers are spending more time at home, also are increasingly interested in healthy products, and the fact that we have focused very much on this channel. So that has been growing at very nice rates. The other channels are back, and that's, I mean, health food retailers and pharmacies, because fewer people have visited those channels, and food service because that type of channel caters for restaurants and hotels, and for obvious reasons that business is then down. But still, overall very healthy growth rates both in the quarter and for the full year. And we go to the next page, which is also the last page and the summary page. We do have a very strong fourth quarter behind us and also a very strong year. It still is a very special situation with COVID, and we do see lots of ups and downs in the business. Very challenging, but as I said, I mean, we're very happy about the way that we have managed the business during 2020. What I didn't talk so much about is the fact that we are very focused on rolling out our brands in the grocery trade in Germany, France, and Spain. And we saw some very good growth in the fourth quarter. And this is something that continues in quarter one, the focus on the grocery trade in those countries. And as we've been growing distribution now, we will step up our marketing investment during the first quarter in those countries. We will continue the integration of Systemfrukt in quarter one. We will actually increase the pace because we did not do so much in quarter four because it was the first quarter, and the fourth quarter around Christmas is the high season for Systemfrukt, so the real integration starts this quarter. I would say that we do have a strong underlying business and we do have some strong trends. We are, however, cycling some very high numbers this quarter due to the fact that the first quarter last year was very special because of the hoarding during the quarter, because that was when COVID hit and consumers pretty much raided the stores to get hold of products. So this quarter is challenging in that aspect. But still, I would say that we do have, I think, a very good business model that has proven successful over a number of years. We do see the opportunity to be part of the consolidation move in Europe, which we think is imminent, and we think that we are very well placed to benefit from that. Thank you so much for your attention, and now I think it's time for questions.
Thank you very much, Peter. So unfortunately, we are out of time, but I think your presentation pretty much answered all my questions. So thank you very much, Peter, for your presentation, and thank you everybody for listening in.
Thank you so much.
Hej allihopa och välkomna till nästa presentation här på ABG Investor Days. Jag heter Simon Granat och jag jobbar som aktieanalytiker på ABG där jag följer IT och techbolag. Med oss idag så har vi Anna Engholm som är vd på Motion Display och hon ska presentera verksamheten i ungefär 20 minuter och så kommer vi därefter att följa upp med ungefär 5 minuter frågestund. Med det sagt, Anna, så får du hemskt gärna påbörja presentationen av företaget.
Ja, hej, tack Simon. Anna Engholm heter jag, alltså vd för Motion Display. Jag tror att du kan byta bild på en gång, Simon. Och Motion Display grundades redan 2005 av Erik Danielsson som också grundade Pricer. Vad vi gör är att vi har utvecklat och tillverkar och marknadsför animerade e-pappersskyltar som i första hand används för att skapa uppmärksamhet och öka försäljning av varor i butik. Med bakgrunden i Pricer och Erik som grundare kan det vara värt att påpeka att just våra produkter är som ett komplement till Pricers prisetiketter som garanterar rätt pris i hyllan. Vi använder också e-papper som teknik, båda bolagen. Men till skillnad från en ESL, en prisdisplay som använder det som en grafisk display, så använder vi e-papper som en segmentbaserad teknologi, vilket möjliggör att vi kan blinka våra skyltar under väldigt lång tid. Våra displayer de drivs med små knappcellsbatterier och typisk tid för blinkning dygnet runt är ett helt år. Vi kan också förlänga den här tiden genom att lägga displayerna i sovläge på natten. Sedan 2014 är vi listade på Spotlight. Då kan vi byta bild. Jag vill visa några exempel på tillämpningar hur våra displayer ser ut i butik. Vanligast är att de sätts på hyllkanten på det här viset. Här ser ni bland annat ett program till vänster här som gjort för PepsiCo som är en återkommande kund till oss. Mer än 70% av våra köpbeslut tar vi i butiken framför produkten. Så därför är det så viktigt för våra kunder, de här varumärkesleverantörerna, att synas. Vi kan byta bild så får ni se lite andra tillämpningar och displayprogram vi har gjort. En display kan också sticka ut i gången på det här viset så att vi ser tydligt när vi kommer gående i gången och blir uppmärksammade på varan. Om vi hoppar till nästa bild så ser vi ytterligare tillämpningsområden. Vi kundanpassar ju våra skyltar både i färg, form, storlek. Och den här typen av displayer som vi har monterat på glasdörrar, det är ju liksom unikt för vår teknologi att man kan göra det med den här rörliga displayen. Hade det varit en liten tv-skärm som suttit där så hade man ju tvingats dra kablar och så vidare. Så att det är lätt att placera våra skyltar precis överallt i butik. Vi kan titta vidare på några ytterligare exempel. Den här skylten som ni ser nu gjorde vi till Philips. Och de satte den helt enkelt i den här detaljistförpackningen där deras produkt finns i butik. Ytterligare exempel har vi på nästa bild om vi hoppar dit. Så ser ni en större display vi gjort till Philips och den hamnade istället på en gavelände. Lite större skylt där vi satt 2 stycken displayer på ett större papperstryck. Så att vi kundanpassar helt enkelt så som kunderna önskar för att öka uppmärksamheten maximalt. På nästa bild så ser ni också lite olika varianter. Jag har gjort en sån här beer badge display eller den här displayen som sitter och blinkar och gör reklam för en pilotpenna, legogubbar med mera. Så att det är där vi är. Vi kan hoppa vidare till nästa bild. Vi har vårt huvudkontor i Uppsala. Där är vi 15 personer idag. 2 av dessa är säljare som då säljer till Sverige och Europa. Och övriga världen utanför USA. I övrigt i Uppsala så har vi ingenjörer. Vi har grafiska designer, vår administration, säljstöd finns också i Uppsala. Och i USA, vi säljer ju de flesta, större delen av vår försäljning sker i USA. Och där har vi sedan 2014 ett säljkontor med i dagsläget 3 säljare. Vi har strategiskt placerat det här kontoret i Bentonville där Walmart har sitt huvudkontor, vilket också gjort att de flesta programmen som vi har implementerat i butik har hamnat i Walmart-butiker. Vi tillverkar våra skyltar i Kina där vi gör det i egen regi, har hyrt in oss och har en dedikerad yta där vi styr över våra arbetare och gör det från Uppsala. Så all konstruktion och design sker i Sverige, tillverkning i Kina. Vi kan hoppa till nästa bild. Låt oss titta lite närmare just på den här enorma marknadspotentialen som finns och just nu USA då. Jag nämnde att de flesta programmen vi har gjort hamnar på Walmart. Och tittar man på antalet Walmart Supercenter som finns så är det cirka 3500 stycken. Vilket gör att om vi får en bra order som ska installeras på Walmart så blir det liksom max 3500 displayer. Därför är det intressant för oss att hamna utanför Walmart. Och tittar man på antalet butiker så bara apotek finns det 67 000 cirka. Tittar man på närbutiker, till exempel 7-Eleven och sådana butiker så är det över 154 000 butiker. Totalt finns det över 2 miljoner butiker i USA. Och det är klart att med bara 3 personer som säljare så har vi verkligen bara skrapat på ytan. Och återigen, det är så viktigt för oss att komma till de här möjligheterna just utanför Walmart. Vi kan hoppa vidare till nästa bild. Alltså vi som kunder, när vi går in i en butik så är det så att vi faktiskt bara ser ett par procent av butikens kompletta sortiment. Och det spelar ingen roll om vi handlar i en riktig butik eller om vi handlar online. Så att om vi byter till nästa bild så utmaningen för våra kunder, återigen våra kunder är i första hand leverantörer, Procter & Gamble, Coca-Cola och så vidare. Deras utmaning är ju att påverka våra kundbeslut. Återigen oavsett om vi sitter och surfar online eller om vi kommer in i en butik. Och digital marknadsföring har ju verkligen stuckit iväg i skyn här och mycket satsas på det. Om vi byter till nästa bild och kikar lite grann på den enorma antalet dollar som satsas på marknadsföring. Faktum är att 225 miljarder dollar satsar man i USA, enbart USA, årligen på marknadsföring. Och trots att det är så viktigt med köpbesluten framför produkten i butiken så är det bara 3% som satsas på marknadsföring i butik. Och anledningen menar vi på att det har liksom inte funnits något riktigt bra sätt att marknadsföra och synliggöra, sticka ut i hyllan. Vi ser ju massor av tryckt pappersmaterial och hyllvippor i butik. Och ska man koppla in en liten tv-skärm eller så kan man visst göra det. Men det är väldigt dyrt, komplicerat. Antingen behöver man dra ström till hyllan eller ha jättelika batterier. Så att vi kommer med en helt ny revolutionerande lösning för att sticka ut. Vi kan byta till nästa bild. Vi menar att vi är sökmotoroptimering inne i en riktig butik. Vi har många fantastiska försäljningsökningar, resultat från kunder som återkommer. Vi skapar uppmärksamhet, produkterna syns i hyllan. Och vi fungerar som en koppling till övrig marknadsföring som våra kunder gör. Det kan vara tv-reklam eller tidningsreklam och så vidare. Och då är det så viktigt att det finns en påminnelse när man går in i den riktiga butiken. Och där verkligen också kan köpa produkten. Så att man talar mycket om antalet visningar när det är digital marknadsföring, number of impressions. Och det är precis det vi gör i butiken. Vi ökar antalet visningar. Vi säkerställer att produkterna syns. Vi kan hoppa till nästa bild. Om vi tittar tillbaka på 2020 så hade vi en svag inledning på året. plötsligt så befann vi oss mitt i en pandemi och vi drabbades ju tidigt av detta eftersom vi har vår fabrik i Kina. Vi var oroliga om arbetare skulle kunna komma tillbaka efter kinesiska nyåret. Det blev en liten trög start med produktion och våra kunder blev plötsligt väldigt, de satt stilla i båten och tog inga beslut. Därför är det jätteglädjande att vi faktiskt har gjort vårt starkaste andra halvår i historien och med ett fantastiskt bra avslutande kvartal där vi omsatte hela 14,4 miljoner kronor och gjorde en vinst på 1,92 miljoner. Ett positivt kassaflöde på nära 3 miljoner. Och värt att notera också är att vi har bibehållit en fin hög marginal hela vägen och även nu detta sista kvartal. Vi kan titta på nästa bild. Där ser ni rullande 12 månader och vi har de senaste åren legat runt 30 miljoner lite drygt i omsättning. Det stack ut ordentligt 2018 då vi omsatte över 50 miljoner. Och det berodde på att vi hade fått en större order från en kund som valde att installera utanför Walmart. Och återigen nu i kvartal 4 så levererar vi till en av våra återkommande kunder som bestämde sig för att också installera produkterna på apotek, alltså utanför Walmart. Så vi ser en positiv trend och kurvan är glädjande på väg uppåt här. Vi kan ta en avslutande bild. Och sammanfattningsvis, vi har en fortsatt stark prospektlista, både återkommande kunder som vi har ett antal nu som har fina resultat och vet att det här fungerar. Men vi lockar även till oss nya kunder som får syn på oss förstås. Det är en enorm möjlighet att nå kunderna för installationer även utanför Walmart. Så det är naturligtvis någonting som vi jobbar på. Glädjande också är att vi har förra året mer än fördubblat försäljningen i resten av världen. Och det har också varit vårt mål förstås. Och när vi gör våra program som är helt kundanpassade så är det lika mycket jobb att ta fram ett program oavsett om vi tillverkar displayen då i 100 exemplar eller 100 000. Så att på så vis är det skalbart. Vi kan med bibehållen personal åstadkomma många program och förhoppningsvis då också i större volymer. Att skala upp produktionen i Kina är någonting som vi inte ser som någon utmaning utan det har vi också gjort och så att det ser vi inte som något problem utan vi är väldigt nöjda med det upplägget vi har. Så sammanfattningsvis så är detta en helt obegränsad marknadspotential vi har med vår unika produkt. Så Simon.
Ja, tack så mycket Anna för den presentationen. Du pratar mycket om kundanpassning och att det är en central komponent i er verksamhet. Hur lång tid tar det ungefär att ta fram en ny produkt när ni pratar med en ny kund?
När vi har bestämt en design som kunden då beställer så kan vi klara av att ta fram alla underlag, producera på någonstans kring 8 veckor. Och vi har varit nere på kortare tider än så att det går riktigt fort tycker vi.
Och hur fungerar prismodellen? Är det alltid per enhet som är såld eller kan det vara några andra komponenter involverade? Berätta lite hur det funkar och hur ligger pris på en display ungefär på?
Ja, alltså priset beror på storlek på displayen, storlek på den animerade ytan och så förstås vilken volym, vilken kvantitet som kunden beställer. Det kan vara mindre displayer i en lite större volym som kostar ett par 100 kronor till displayer som kostar över 1000 kronor, mer komplexa och så vidare. Så att det har varit en varierad prisbild. Och sen så är det klart att vi säljer väldigt, väldigt många så har vi en lite lägre procentmarginal på en sån affär än mot att om vi säljer en mindre volym.
Ja, jag förstår. Historiskt sett så har USA, den nordamerikanska marknaden, varit en viktig marknad för er. Ser ni fortfarande att det kommer vara en primära drivaren för försäljning framöver? Eller ser ni att ni kanske vill bli lite starkare även i andra marknader? Eller vad är det som gör?
Jag skulle säga
USA
både och, absolut. Alltså USA, det är klart att det har den största potentialen med så många butiker och starka, stora varumärken som lägger ner mycket pengar på marknadsföring. Men det är roligt att se att vi har kommit igång bra i Europa också nu, så att vi vill arbeta brett förstås.
Ja. Hur tycker du vi ska se kring fasta kostnader här framöver? De har kommit ner och stabiliserats lite kring nuvarande nivåer. Har ni några stora planer i framtiden? Hur ser det ut där?
Nej, återigen då så hoppas vi på att kunna behålla den här nivån, om det nu inte, det är klart att saker och ting kan ändras. Men återigen, den personalstyrka vi har, så mäktar vi med att ta fram ett stort antal program per år, så att det är snarare att vi siktar på de större volymerna, för att i fabriken är det lättare då att skala upp för att kunna producera mer.
Och ni är ju en liten aktör i en väldigt stor marknad. Vilka konkurrenter finns där ute, om du skulle kunna nämna någon bara, så man har lite att gå på?
Alltså det är ju fortfarande att konkurrens vi ser, det är traditionellt material i hyllan. Och jag nämnde pappersvippor, det kan vara plastramar, det kan vara en blinkande diod, det kan vara... det finns alla möjliga. Om man går in i butik så inser man att det är ganska mycket aktiviteter som görs för att vi ska se produkterna i hyllan. Och vi har någonting helt unikt och det tar tid att bryta mark. Vi börjar bli vi ser ju det på de stora kunder som återkommer till oss. De vet att det här funkar. Så att vi behöver ha fler sådana kunder och nå bredare förstås.
Hur går ni tillväga för att bryta mark? Använder ni partners eller använder ni egen säljstyrka? Hur fungerar det?
I första hand så säljer vi direkt faktiskt. Det gör vi helst.
Och om det skulle vara partners, vad är fördelarna och nackdelarna med att använda partners?
Det skulle vara en partner som tillför ett mervärde. I annat fall så är det klart att om vi gör anpassningar och grafisk design och så vidare, så det är alltid en utmaning att gå via en partner. Om inte vi blir presenterade för slutkunden direkt. Så att de flesta affärer gör vi faktiskt direkt med våra kunder.
Kanske som en avslutande fråga, vad är ert primära fokus här in i 2021 nu när vi har kommit några månader in, och vad ser ni framför er här?
Nej, men det är verkligen vårt primära fokus, är att nå kunderna utanför Walmart. Att följa med våra kunder till butiker, till de här mycket större antalen butiker utanför Walmart. Det är absolut det mest primära fokuset vi har.
Super. Om du har några avslutande ord så får du gärna säga dem. Annars så tackar jag så hjärtligt för att du har deltagit idag på vårt event.
Ja, tack så mycket Simon. Nej, men det är ju intressant att det tar tid att etablera en sån här ny produkt. Det tar tid att bryta mark, men de här stora drakarna som följer oss och återkommer, det är ett bevis på att vi har en produkt som fungerar, och vi ska fortsätta bryta mark och hitta nya kunder.
Tusen tack Anna.
Tack så mycket Simon.
Hello and welcome to this next presentation here at ABG Investor Days. My name is Simon Granat and I work as an equity analyst at ABG covering IT and tech stocks. And with us today we have the pleasure of welcoming Christian Sundin, who is the CEO of Formpipe. We will, for the coming 20 minutes, Christian will present the company, and afterwards we will have a smaller Q&A session. And with that said, Christian, please go ahead and present the company.
Thank you, Simon. As Simon said, I am Christian Sundin, CEO of Formpipe. I've heard that most of you are quite familiar with Formpipe. So if the focus is to introvert, or if there any one of you out there who is not that familiar with Formpipe, please reach out afterwards or at any other time, and I will give you a separate session on getting to know Formpipe. But this presentation will be focused a lot on describing the results of 2020 and our future change of strategy and our financial goals. Can you please, I don't think I can alter slides, can I? So, okay. As I said, very short 1 or 2 slides on Formpipe at a glance, then the highlights of 2020, and then go in a little bit more in detail on the strategy we have just published or announced for growth. Please change slide again. So Formpipe, who are we? Yeah, we are a software company in the area of content services, formerly known as enterprise content management, but Gartner has renamed it. In short, we are bringing order in digital information and creating structures and efficiency in how organizations and companies are managing their digital information. So in very short, you can compare us with ERP systems, but for words instead of figures. We have our background in the public sector in Sweden and Denmark, driven by the regulatory requirements mainly, and how to make digital information made available to the citizens. But we also have approximately a third of our business to the private sector through an international partner network. We're about 245 employees today in Denmark, Sweden, UK, US, and Germany. And a lot of our product development is placed offshore in Ukraine, and about 50 more people there dedicated to us working for product development. And change slides. The turnover in 2020 was a little bit above 400 million Swedish, but the important thing to point out here is the recurring revenue, which stands for 254 million, which is more than 60% of our total revenue is recurring revenue. And we have an EBITDA margin of above 25%. We're listed on Nasdaq Stockholm under the abbreviation of FPIP and have a market cap of a little bit more than 1.5 billion Swedish today. Change slides. So 2020, a challenging year for many. I believe that we have adopted really well in Formpipe. We had the structures, the processes, and the routines and tools to swiftly change to remote working, not only for ourselves, but also to be able to support our customers in a secure way from a distance, working remotely. And that played out quite well for us. But we also sort of took a short pause when the COVID hit us, and looked to, okay, how will this affect us? But quite swiftly we realized that with the high portion of recurring revenue that we have and our strong solid finances, we, instead of hitting the brakes, realized that this might be a good time to really take one step back, but also position ourselves for growth going forward rather than await the pandemic to end. So we set up a new growth strategy and have adopted quite well to the changed circumstances in the world. Coming back to that growth strategy later. We have, as I said, taken one part of that is that we also acquired a company during 2020. We did that completely digitally, made due diligence and acquired a company, and also made all the integration, onboarding of new people. With our strong company culture and structures and processes in place, that could actually be done very efficiently from a distance. And I would say, looking in the rear view mirror and comparing this integration of EFS, a software company that formerly was a partner to us on our product Lasernet, the integration of that part and that company into Formpipe has actually been better than previous integrations when people has by plane or flying around the world or to driving to different cities and having meetings. It has actually been more equal and much faster and better in terms of that everyone is there digitally rather than people flying around and meeting in conference rooms. So it's actually proven to be very efficient to integrate a company in a digital world. I wouldn't be me unless I brought up that the improved revenue mix. We have for many years strived to increase the share of recurring revenue and has been and still are on a journey of transferring our business from having more consultancy and having more traditional license revenue and transforming that into have a higher degree of recurring revenue. And we've continued on that path also during 2020. Please change slide. So coming into on the quarter here, I think I need help to click a few times so we highlight all the bullets and all the circles in here. Stopping in 3 clicks. There, one step back, please. Actually one step more back, thanks. There. Here we can see yet again the recurring revenue that I just brought up, how we're growing that. We're growing SaaS on with 18% compared to Q4 2019. We've grown the recurring revenue with 14% in total, and we are on the quarter when we're closing the year, we are on a level of 65% of recurring revenue. And that, it is some acquired maintenance in it on 4 million from the EFS acquisition I just mentioned, but still strong growth of recurring revenue. Click a few times. For the same reason, the non-recurring revenue, the traditional license sales and deliveries, they are down in line with our strategy. Click. And summing up, we're sort of flat in revenues, but it's much stronger revenue mix now than only a year ago. Please change slide. However, gearing up, as I said, click a few times to get these up. Cost margin. We have recruited. We have seen that better possibilities in recruiting people in the situation with the pandemic, and we're gearing up to both have a broaden and better product portfolio, but also have better partner support in order to drive sales faster going forward. Please click. So we have quite much higher staff cost level now going into 2021 than a year ago. It is both from the acquisition, but also for recruiting people, both in the UK and US, in order to make sure that our partner network gets the support they need in order to get our software into every deal they do. Click. Leading up to for in this investment period, the EBIT is down, both for the reason of transforming the business to more recurring revenue and bringing down the non-recurring revenue, but also due to the higher cost level. Change slide. And as I mentioned, we are on a journey transforming our business to software as a service or subscription. And going into 2017, that ARR number was on just about 10 million, and we're now entering in 2021 on 58 million. A little more than that. Please change slide. And actually, looking on the quarter and the year, it's actually even stronger than the first meets the eye. The strength in Swedish krona compared to other currencies has actually made us revalue the ARR coming into the quarter or coming into the year downwards, since 80% of our SaaS contracts are actually in foreign currency. So the quarter in itself was quite strong on the 4.4 million ACV, but then a little bit negatively affected by currency conversion rates. Please change slide. So we still managed to get quite solid financial performance in a challenging year, even though we also sort of pushed the throttle a little bit in difficult times and increased cost. We're still ending the year on an EBIT better than last year. It's in the 13% EBIT margin. But that is not what I want mainly to highlight. It is the journey we've taken from quite low levels of EBIT a few years back, improving that at the same time that we're shifting from non-recurring revenue to recurring revenue, coming from levels of 140 to 253 million in recurring revenue. Being able to combine that with increasing the EBIT is a balance, because they are of course contradictory and working against each other, these two ambitions, and we've been able to succeed with both. Please change slide. And especially Lasernet, we see a strong positive trend for Lasernet. And we also see on Lasernet alone, the ARR going into the year on 56 million. So then some acquired maintenance on Lasernet, since that is a partner, we then get that into our growth recurring revenue. And then added on ACV of SaaS of 9.5 million, having an ARR on Lasernet alone on 75 million going into 2021. And with the acquisition, we have notably strengthened our position to increase the growth pace of Lasernet even further, and to support even more partners with that within that network. Change slide, please. So that leads me in to the new strategy for growth. Change slide. We see 2021 as the start, even though we pre-started a little bit in 2020, setting up for this growth journey. But we will be very much focusing on growth the coming years. As I pointed out a few slides ago, we have executed on the strategy of improving margins. That has been our main objective, combined with shifting the revenue model to recurring revenue. We've been successful in executing on that strategy. Now we're shifting focus to get faster growth and stronger growth on top line through growth of recurring revenue and SaaS, of course, but with investing in more capacity to drive this growth faster. We have a strong network of certified partners, and we have a high share of recurring revenue as a solid foundation. But and that growth will be coming from the growth of even more software as a service. And the growth journey will be organic to the most part, but we're not excluding the possibility of complementing our organic growth with some strategic acquisitions. Change slide, please. We have a loyal customer base, and this is the foundation for us being able to invest in further growth. And we've been growing quite strongly with the recurring revenue, as I've already pointed out on several slides now. So please change slide. The market is there. It is a predicted number from Gartner that it's a 10% growth on annual level on the content services market. But more importantly, the demand for SaaS is increasing, and it's forecasted that 60% of all software sales in 2024 will be software as a service. And with the offering we have on SaaS, and especially for Lasernet, that really helps us in this transformation and sets the possibility for us to really increase the growth rate that we've been on for a few years to grow faster. Change slide, please. We have two strong parts of Lasernet or Formpipe. We have the public sector, where we have a market leading position in both Denmark and Sweden. We have about 500 existing customers there. There's a strong drive in society right now in digital e-government to do co-creation of new solutions together with the current vendors, and to see what is the next phase of the digital society for e-government, for the citizens and so forth. And we are a trusted advisor in doing that. We will continue to drive that growth journey. We will see growth also in the public sector combined with good profitability. However, it will not be as strong growth in public sector as we see the potential as we have in private sector internationally with Lasernet. We have a strong partnership with Microsoft, where we are complementing Microsoft Dynamics 365 with Lasernet in Azure in a very good way. And Microsoft is gaining a lot of market share in the ERP space in the cloud. We are piggybacking on that success actually, and we will tag along on that growth journey that Microsoft have with Dynamics. And sort of the same thing applies for Temenos. Temenos is a partner within that, or a supplier of software for the bank and finance industry. We have, with the acquisition of EFS last summer, we have come even closer to that partnership. And also Temenos is gaining market share and sees as an upcoming player to the bank and finance industry in Europe, but also with a strong ambition to grow faster in the US. And we will tag along on both of these two growth journeys and focus on those to be the complementing software on all Microsoft Dynamics deals with our partners and all Temenos deals with our partners in that partner network. So we will invest in resources to support and grow that partner network and give our partners success in their implementation projects of Dynamics and Temenos. Change slide, please. We have, but we have not been as transparent with that, but the Lasernet business has been growing quite substantially for a number of years now. We have had more than 12% growth per year in Lasernet since 2016. And that is, as I pointed out, a lot helped by Microsoft and the success of Microsoft Dynamics 365, where we have been part of a lot of the implementations of Dynamics 365 with Lasernet. And we now see a strengthened position on that, as I said, with the acquisition of EFS, to do the same thing with the Temenos. And we will, as pointed out, invest in making sure that we have the capacity to make life easy for our partners out there that is implementing Temenos and Microsoft. Change slide, please. A short for you who doesn't know Formpipe that well and our product portfolio, what is Lasernet? Yep, Lasernet is an add-on software for ERP systems, such as Microsoft Dynamics or SAP or BON or Oracle or whatever, but we are really strong on Microsoft Dynamics. We're helping Dynamics to be better in producing business documents, storing business documents, and making sure that they are distributed in the right layout, format, and whatever digital format the end customer want to receive it in, and so forth. We have already more than 2,000 customers worldwide, and together with Autoform DM, which was the software that was built by EFS, the company we bought last summer, we make the Lasernet offering even stronger, because Lasernet together with Autoform DM has been the success story at Temenos, and that's why we also get even closer to the partner Temenos. So we get the two complement softwares to both of these platforms now. And the global ERP market is also expected to grow quite significantly. It's an even bigger market on the world market than content services, but it's similar growth rates of approximately 10%. And again, more importantly, the same transformation to more and more SaaS is happening in the ERP market space as well. Thanks for that slide. Next slide, please. 2021 will be a year of investment. We are growing capacity, mainly through recruitments, in order to support our partners better. It will have a negative impact on EBIT margins in 2021. And combined with this growth journey internationally, we will continue to have also growth focus on as well in the private sector as well as in the public sectors. Change slide. So when we announced this new growth strategy, we also said, okay, what will this mean to our owners and the company and the KPIs that we are going to produce going forward? Yeah, we will grow with 10% on an average annual growth from 2021 to 2025. In 2025, we will have increased the share of recurring revenue even further. So we will have 70% of our revenue in 2025 will be recurring revenue. We will take a hit on EBIT in 2021, but we will, as we've done before, execute on the strategy and getting the scalability of growing recurring revenue to bring us back to even better margins that we are on today. And by 2025, we will have an EBIT margin about 20%. And over time, we will continue, since the scalability and the cash flow from recurring revenue and how that is, it's actually a negative capital employed, so to say, since it's a lot of it's paid in advance. We will still have a strong cash flow in our business, meaning it's very possible for us to have a dividend policy of paying out more than 50% of our net profit over time. Change slide, please. So in summary, we have a strong track record in executing on the strategy of growth of recurring revenue, combining that with increased profitability. We already have a very strong and balanced customer base with a lot of recurring revenue. We are the market leader within content services within public sector Sweden and Denmark. We have the relationship with Microsoft, very strong, and now added it with Temenos. So those two focus areas will make it possible for us to execute on also these targets and this strategy. It will hurt our margins in 2021. But we will go for this significant expansion potential that we'll see in Lasernet and the rapid conversion towards SaaS, both in the private and in the public sector. Change slide, please. And I think that was all from me. I hope I've been able to keep the time decent anyway. Sorry for running over with a few minutes. Thanks.
No worries. Thank you, Christian. Unfortunately, we only have time for 1 minute or so in terms of Q&A, but I'd like to ask you, because I must say that I like your forward-leaning strategy going forward, but what is it that makes you execute on this strategy right now? Has there been a change in the market dynamics, or why is it so interesting to go for an aggressive growth strategy within private as it is today?
Yeah, we see the opportunity, of course, and there's as I tried to point out, the market demand is there. But also, I think we are, as a company, ready. We've been through a transformation of making sure that we have the structures, the processes, the tools, and the organization in place to really go shifting focus from being a conglomerate, so to say, of a lot of small units within Formpipe. We made one company of it with the two pillars of public sector and private sector, and we have all the possibilities to go for the growth. And yeah, I wouldn't say that we're exploring the pandemic situation, but we see it as might be easier to actually attract and find the right talent in an uncertain world. And we are a safe haven with strong finances and the possibility to go for more recruitments at this time. And yeah, that's why we see an opportunity here.
Thank you. It looks very bright for the future, and it will be, of course, very interesting to follow. I'd like to send you a big thank you also for attending at today's session. Unfortunately, we run out of time, but with that said, thank you, Christian.
Sorry about that. And please, everyone that want follow-up questions, reach out to me, and I will do my best.
Thank you.
Thanks, Simon. Thank you, ABG.
Good afternoon and welcome back to ABGSC Investor Days. My name is Jesper Birch Jensen and I work as an equity research analyst here at ABG. And next up we have iSafe and we have the company's CEO Anders Segerstam presenting. So without further ado, please go ahead Anders.
Ja, tack. Jag kommer ta den här på svenska, men tack för din engelska presentation. Ja, Anders Segerström heter jag och är då vd på iSafe Group. Och vi är ett svenskt life science-företag som utvecklar och marknadsför vår läkemedelsrobot Dosell. Där själva syftet är att vår läkemedelsrobot är navet i ett kommande ekosystem för medicinska och digitala säkerhetslösningar. Vi kan byta till nästa slide där, tack. Lite kort, vi är ett bolag som har haft några turer under den här resans gång. Det är utmanande och roligt att vara ett produktbolag där vi redan 2008 grundade det här bolaget och då hette det med Rätt med vår uppfinnare Göran Sjönell om idén att digitalisera vårdavdelningen i hemmet. Det har varit många turer och många olika prototyper. Men vi har nu slutligen en färdig läkemedelsrobot som då är både patenterad, CE-märkt och medicinsteknisk klass 1-produkt. Och under den här resan så har vi då också förvärvat ett bolag som jag tidigare drev som hette Sensec Personlig Säkerhet som var specialister inom digitalisera personlarm och larmhantering. Och efter det, alltså 2019, så bildade vi om då till att heta iSafe Group AB. Medan vi nu förra året sålde av säkerhetsdelen av bolaget och renodlade för att 100% fokusera på att jobba med life science och då vår produkt Dosell. Och vi har ju nu framåt, vi har gått ut med information om att vi kommer lansera en konsumentversion. Och jag kommer gå in lite mer på det. Men just nu så har vi en läkemedelsrobot för B2B via partnerstrategi och vi kommer lansera en för konsument. Kan byta till nästa slide där, tack. Vi ser ju ett kraftigt ökat intresse för införa digital teknik inom äldreomsorgen. Och vi får nu, det är väldigt roligt, men vi börjar nu få dagliga mejl om intresse för Dosell och senast idag från distriktssjuksköterskor som behöver hjälp med att deras brukare med apodos inte kan sköta sin medicinering och önskar då hjälp med den här typen av läkemedelsrobot som Dosell är. Och då kommer det in till att vi har ju idag cirka 200 000 personer i Sverige som får sin medicin paketerad i dospåsar. Och två leverantörerna som Kronan och Apoteket AB har dessutom valt att satsa på att lansera en konsumentversion av deras dospåsar. Vilket är själva navet i att kunna använda vår produkt som utnyttjar just då de här dospåsarna. Och trenden när det gäller dospåsar ser vi ganska stort internationellt. Vi ser ju att Amazon köpte Pillpack som specialiserat sig just på den delen att leverera medicinen på dospåse. Och de har en otrolig utveckling i deras marknadsandelar där i USA. Vi ser även att den finska marknaden börjar växa kraftigt tack vare vår partner som vi har nu i Finland, Vivago. Och vi börjar märka mer och mer upphandlingar just kring läkemedelsrobotar. Och vi såg också att förra året, så precis när coronan kom, så infördes det en väldigt stor upphandling just kring välfärdsteknologi där läkemedelsrobotar var den del de upphandlade kring det. Den har inte riktigt tagit fart så som vi hade hoppats än och det handlar mycket om att corona slog nog hårdare än vad de kommuner som upphandlade där kunde tänka sig. Men intresset är stort fortfarande där, vilket gör att det är nu när vaccinerna börjar komma ut så skapar det stor möjlighet för oss att börja rulla ut på det. Jag kan byta till nästa slide. Varför har vi det här då? Jo, det är för att vi har ju sett att vi har en åldrande befolkning, vilket är jättebra. Men det innebär också att det är fler personer vi behöver ta hand om. Och andelen äldre som är 80 år kommer öka med ungefär 50% till 2028. Vilket är en kraftig ökning då från 2018. Och för att kunna leverera en bra vård så behövs digitala hjälpmedel för att kunna säkerställa en bra kvalitativ hemtjänst. Där läkemedelsroboten Docell kommer vara en del av detta. Vilket gör också att om vi går till nästa slide och tittar på problematiken då. Och det är ju att vi har en ökad andel läkemedelskonsumtion. Där personer över 80 år konsumerar i snitt då 5,8 läkemedel per person och dag. Vilket innebär att det är 24% av befolkningen som får minst 5 olika receptförskrivna läkemedel utskrivna varje år. Vilket gör ju såklart att det här är ett enormt problem där läkemedelsroboten kan hjälpa detta. Och om vi går till nästa slide. Vad är då utmaningen då? Jo, det är just felmedicineringen. Där då, om vi tittar på fakta, varje år uppskattningsvis 35 000 personer sjuka av läkemedel och måste läggas in på sjukhus. Och kostnaden för felmedicinering uppskattas till ungefär 10 miljarder per år. Det är gigantiska summor. Och då har vi dessutom inte ens tittat på de här problemen med att följsamheten är en extremt viktig faktor där personer glömmer ta medicinerna, tar alla mediciner på kvällen och helt enkelt inte sköter sin medicinering. Vilket gör att det här måste vi råda bot på. Så att därför vill vi införa digitala hjälpmedel genom att använda en läkemedelsrobot. För att minska risken för felmedicinering i hemmet och avlasta den offentliga vården. Samt öka livskvaliteten för patienterna som då skapar en tryggare miljö för anhöriga också. Och om vi går in på nästa slide. Så kommer en video spelas här hur Docell fungerar. Jesper, jag hör inget ljud. Jag vet inte om alla hör det.
Hör han mig? Ja, nej, de sa att det är inget ljud på den. Ska det vara det?
Ja, okej.
Det gör den genom att avläsa dag och tid som står stämplat på påsen.
Så är det så att
när påsen ska användas klipps den av och ramlar ner i ett öppet fack på apparatens framsida.
Och sen så levererar
när dospåsen ligger i facket aktiveras ett ljus- och ljudlarm som påminner patienten eller vårdgivaren
med ljud och ljus
när det är dags att ta sin medicin. Om patienten inte tar sina läkemedel, då larmar Docell vårdpersonal och anhöriga som snabbt kan förhindra att det
vilket gör att man snabbt kan
därmed minskar Docell
hjälpa
risken
dem för att säkerställa att de sköter sin medicinering. Det här är en svensk digital teknologi och vi har designat och utvecklat denna i Sverige. Några delar är viktigt att tänka på är att den klipper upp hela dospåsen, vilket gör att det är extremt enkelt att ta medicinerna. Den är prisvärd med lägre kostnader än konkurrenterna och har en extremt avancerad lösning i bakgrunden. Den har lång driftstid med det nya inbyggda batteriet som jag kommer att prata lite mer om här sen. Och sen är CE-märkt och medicinsteknisk produktklass 1. Kan gå vidare till nästa slide. Vi har ju då valt en partnerstrategi. Och mycket handlar om att vi tror på att digitala hjälpmedel måste integreras i andra välfärdsplattformar. För personal inom hemtjänst och andra vårdinstanser där man idag använder sig av appar och andra system ska inte behöva ytterligare appar eller system för att använda Docell. Vilket gör att vi har valt en strategi där vi letar efter partners som idag levererar trygghetsskapande teknik där de kan integrera läkemedelsroboten Docell som gör att de kan hantera alla typer av larm där påminnelse kring medicineringen blir ett av larmen som kommer. Vi har då nu 3 i Sverige, 3 i Norge, 1 i Finland ett spännande projekt i Italien. Och sen vår senaste partner, Hippo, som har sitt säte i USA, men som är rikstäckande över hela världen. Där första fokuset kommer bli att lansera med en partner inom Europa. Jag kan ta nästa slide. Ja, vi lanserade ju vår dosell för lite mer drygt ett år sedan. Och under den här tiden så har vi haft hundratals tester, intervjuer, pilotprojekt med bland annat Attendo 1000. Och under det här året så har vi lärt oss otroligt mycket för hur vi ska skapa den ultimata läkemedelsroboten. Och med all input vi har fått så har vi nu inom snart dosell 2.0. Och vad är skillnaden då? Det är på designen utvändigt inte stor, invändigt många nya förändringar. Vi har ett inbyggt batteri, vilket förenklar hela processen och införandet och utbildningen. Men den går också till att ha över 48 timmars batteribackup. Vi har nya säkerhetsfunktioner som innebär fler möjligheter att dispensera mediciner på. Bland annat så kommer man kunna ta ut medicin i förtid. Man kan få medicin att bli otillgänglig om man inte tar medicin i tid. Och man kan då leverera den precis som det är tänkt i första utvecklingen, att den levererar när det är dags att ta medicinen. Och det här kan vi individanpassa per brukare och dosell. Vi har gjort en mycket enklare och tydligare förenklad uppstart för en ny användare. Detta är också ett extremt viktigt projekt som vi har gjort i samband med att vi ska göra konsumentversionen, där den behöver vara extremt enkel att använda och komma igång med. Förenklare och snabbare laddning av dosrulle. Någonting som vi tycker är jätteviktigt. Vi har gått från att det tar ungefär 5 minuter ner till 1 minut att ladda en dosrulle. Och varför är det här viktigt? Tänk dig då en kommun, det har 100, 200 eller kanske upp till 1000 läkemedelsrobotar. Tar du att du spar 4 minuter och i snitt 2 besök i veckan, vilket innebär 8 minuter per dosell, så är det extremt många timmar man gör en besparing på den ändringen som vi har gjort här. Så att den känns otroligt bra och kommer tas emot väl där ute. Vi har även utvecklat ett demoläge för att enklare presentera för våra partners där ute. Vi har förbättrat och förenklat sätt att se status på själva dosellen, hur den mår i appen. Det och massa andra små saker där bakom, men det är stora förändringar som kommer vara på den som vi nu lanserar här och kommer skeppa ut mot slutet av mars här i månadsbrytet. Så att vi är extremt taggade på att få leverera den här, och jag vet att våra partners ser fram emot att få denna. Kan byta till nästa slide. Så vad har vi åstadkommit då 2020? Vi har sålt av security-delen. Vi har gjort pilotprojekt med både Attendo och 1000. Vi har kommit igång med 3 pilotprojekt i Finland och gjort valideringar av dospåse. Vi har vunnit tillsammans med Hepro i Norge den största nationella upphandlingen av digitala hjälpmedel. Vi har gjort integrationer till våra partners digitala plattformar. Vi har börjat genomföra pilotprojekt i Norge. Vi har nytt partneravtal med Doro här i Sverige. Vi har då, som jag nämnde, partneravtal med Hippo Technologies. Vi har även intensiv produktutveckling av dosell, som sagt, som vi har gjort. Det har gjort att vi har behövt lägga en hel del kostnader på utveckling. Men vi är också helt övertygade om att det kommer genomföra att vi kommer få ut den till större massa. Det som inte syns här är också att vi är inom snart även klar med den validering eller certifiering som behövs för att gå från MDD till MDR, vilket är ett måste för oss som har en läkemedelsprodukt. Vi har fått 450 förhandsbeställningar för dosell 2.0 som vi ser fram emot att börja leverera i takt med att vi börjar producera våra nya doseller. Vi har även fått in en bra kompetens i form av 2 nya kollegor som har erfarenhet från vårdbolagen och kommer 10 från både 1000 och Attendo. Samt att vi har nu validerat de italienska dospåsarna och vi har kommit extremt långt i de affärsdialoger som vi har gjort med Italien med det spännande projekt som vi har där. Vilket representerar cirka 2000 apotek och vi kommer här nu inom kort få utvärdering på de första 2 piloterna för att genomföra den stora massan därefter. Du kan ta nästa slide. Och som jag nämnde, konsumentversion. Vi kommer vara först i Norden med en konsumentversion av en läkemedelsrobot. Omkring maj-juni så är tanken att vi kommer leverera och lansera en renodlad konsumentversion av Docell. Skillnaden är att vi har kunnat använda många av de produktutvecklingar vi gjort nu, både för B2B men till B2C. Men vi har även behövt förenkla själva larmhanteringen och delar i appen för att anpassa konsumentmarknaden. Där just nu genomför vi piloter på 5 stycken för att därefter ha en andra pilot med 20 stycken personer för att få input hur vi kan säkerställa att den är så enkel och användarvänlig som möjligt. Vi har även i det här följt våra partners Semplifarma i Italien som också kommer vara en konsumentversion av Docell som lanseras där. Och i den italienska marknaden, om vi tittar på den, det har en stor betydelse där motsvarande 8,8 miljoner invånare är över 65 år som konsumerar över 5 läkemedel på dygn. Så vi ser en otrolig potential där, men det kommer ta tid. Därför det finns inte dospåsar där idag och hela konceptet ihop med Semplifarma är både maskin för att producera dospåsar samt Docell för att leverera medicinen med de dospåsar de kommer göra lokalt i apoteken. Kan byta till nästa slide där och tror att vi ska gå igenom och summera. Vad sker här nu i närtid då? Lansering av 2.0. Otroligt viktig milstolpe för oss. Börja leverera Docell 2.0 på de här 450 förhandsbeställningar. Samt lansering av Docell konsument i Sverige. Och lanseringen i Italien. Och marknadsföring och försäljning mot dessa 2000 apotek. Så det är extremt spännande tid här i närhet. Så kan du byta till nästa där jag tror att vi börjar summera. Och det är tack för mig helt enkelt.
Tack Anders. Ett par frågor från mig. Du var inne på det, vi kan börja med den här frågan. Du var inne på det att corona liksom har försenat bland annat upphandlingen i Norge via Hepro. Men märker ni någonstans att det bör kanske lättas upp något när det kommer till upphandlingar från vad ska man säga, den offentliga sektorn? Har det börjat visa sig än med tanke på vaccinen som kommer eller är det fortfarande lite går det fortfarande på lägre takt än vad det gjorde innan corona?
Nej men det går ju, alltså vi lanserar ju nästan produkten precis innan corona så att vi har väl inte så jättemycket information kring innan. Däremot märker vi nu från våra partners i både Sverige, Norge och Finland att det börjar hända extremt mycket där man märker att upphandlingar diskuteras. Där de får även vara med och berätta om hur Docell fungerar för att kunna vara med i kravställningarna då. Så att absolut, det märks att det börjar hända delar och att corona man börjar se att det kommer ta ett slut. Sen så kommer vi fortsätta alltid behöva leva med corona tror jag, men det kommer finnas ett efter helt enkelt.
Tack. Och om vi går vidare till konsumentmodellen av Docell som du har diskuterat en del här. Så att, jag tänkte bara, hur ser liksom behovet i Sverige ut när det kommer till en konsumentversion av Docell? Så hur många människor är det i dagsläget som får sin medicin i dospåsar som hade kunnat använda sig av den här modellen?
Som jag nämnde, det är ungefär 200 till 220 000 i Sverige bara som har sin medicin på dospåsar idag. Och det finns ungefär 500 000 som idag sköter sin medicinering manuellt med dosett eller pillerburkar som också egentligen skulle må bra av att gå över till att få medicinen levererad i både dospåse och sen i Docell.
jag tänkte på hur kommer det här rullas ut i Sverige? Är det liksom framförallt genom apotek eller kommer det säljas på andra källor eller hur ser strategin ut där?
Ja, men precis. Jag kan inte gå in i detalj, men det kommer vara via apotek och likvärdiga försäljningskanaler som är närodlade till egentligen trygghet och medicinering.
Jag förstår. Tack. Sen om vi går
vidare. Det kommer även säljas via vår egen hemsida såklart.
Okej, tack. Sen slutligen, jag tänkte lite på, du har diskuterat den uppdaterade dosellen och du nämnde där att ni har fått en förhandsbeställningar på cirka 450 doseller från era partners. Hur ser liksom schema utrullningen av den ordern ut? När kommer de börja produceras och hamna hos kund och hos era partners och sen eventuellt hos slutkunden då till slut?
Ja, vi hoppas nu att börja liksom skapa den stora produktionen här nu mot slutet av mars. Det är några faktorer kvar, några sista tester. Vi vill säkerställa att vi gjort ordentliga tester så att vi är 100% nöjda med produkten. Det ser lovande ut, så att om allt går som tänkt så någonstans runt vecka 15. Vecka 14-15 där så kommer vi börja leverera och producera. Exakt takt, någonstans 20 om dagen kan vi producera.
Förstår. Tack så mycket. Det var alla frågor för mig. Men tack för att du var med idag och berättade mer om iSafe och vad ni som ligger i korten i framtiden.
Ja, super. Tack för mig.
Tack.
Hello and welcome to this next presentation here at ABG Investor Days. My name is Simon Granat and I will be moderating this presentation, and I work as an equity analyst at ABG covering tech and IT companies. With us today we have Per Holmberg, who is our recurring guest, and he is the CEO of JLT Mobile Computers. He will present the company for about 20 minutes and then we will follow up with a smaller Q&A session. With that said, Per, please go ahead and present the company.
Okay, thank you very much, Simon. And in my presentation, if we go to the next slide, I'm going to cover some key messages. You can click actually the 3 bullets there, Simon. So for you that I haven't spoken to before, I will give a quick introduction of JLT and what we do to empower customers' businesses by enabling hassle-free IT in very challenging environments. I will also reflect on the challenging 2020, but by being proactive, we kind of find a new normal, I call it, and we ended the year fairly strongly. And now we are looking into 2021 and beyond and see kind of the light at the end of the tunnel and are accelerating. So I have some new products to talk about and a software initiative that we will talk about as well. So we can go to the next slide, please. So JLT has been around now for about 25 years, a little bit more, and we have been in the high-tech industry all along. So we are a tech company. We are developing and manufacturing and installing rugged computers. And what is rugged computers? Well, it is regular PC products usually today with or without the keyboard, and some of them have a touchscreen. But the key value with these products is that they are very rugged. They can be used in very tough environments, and they are very reliable. So the customers we target with these products are customers that really depend on their IT infrastructure and that always have to be working in order for them to meet their productivity goals. We have an in-house development team that is located in Växjö, which is the headquarters for JLT. And we have manufacturing of our products only about an hour drive away from Växjö in Ronneby. And currently we are on the 6th generation of products. We have shipped since start over 100,000 units. I think we're up to 110,000 units now. So we are, as far as I can see, the largest PC manufacturer in Sweden throughout the years here. We really pride ourselves by being experts in what we do. We're very focused. We are a little niche. We are really focusing on the hardware today. And we're using this expertise to adapt our solutions to meet customers' needs. And because we have full control over both development, manufacturing, distribution, and also the aftermarket or service and repairs, we can combine all of these hard and soft values into a solution that is really suitable for the customer that we address. So we go to the next slide, please. So our mission is fairly simple. We like to empower our customers' businesses, and we do that by providing IT equipment that is used in very tough environments. So really the core value that we provide is hassle-free IT. When customers buy and install our products, it will run and run and run. That's the goal. And it's really driven. There is a lot of investments and digitalization happening in most industries today. And it's driven by big demands such as online shopping that puts completely different requirements on supply chains and distribution and storage of products and goods. There are environmental requirements that requires shipment and handling of products to be done in a much more efficient way and with less impact on the environment. And then, of course, the ongoing globalization where trade is happening all around the globe, basically. So where do we find some of these challenging environments? Well, the biggest market for JLT is really warehousing and transportation. So in warehouses, our products are usually mounted on a forklift or on a crane or something inside a warehouse. But we're also targeting other segments as well, such as ports, where the requirements are a little bit similar, but in here, our products are sitting in vehicles that moves around outdoors. So it puts different requirements in terms of wireless accessibility. Perhaps they're running 4G instead of Wi-Fi and so on. Other areas are mines, which you can imagine is a very tough environment, agriculture, and transportation and more. So it's a pretty wide spectrum of markets, but these are the biggest. And I would say that the warehousing market for JLT is about 60% of the revenue, and ports and mining are about 20% each. Okay, we can move to the next slide, please. So JLT is headquartered in Växjö, as I said. We have a small satellite office here in Stockholm where I reside together with a couple of sales managers. We have the production with a partner in Ronneby, so only an hour drive away. And from there, we distribute the products across the world, mainly with focus on Europe and US. And to manage the business in the US, we have a wholly owned US subsidiary that resides outside Chandler, outside Phoenix in Arizona. And we have a production partner in Atlanta that is doing the final configuration and customization of the products for the US market. And then we reach our customers mainly through a network of resellers around the world. And again, the focus is really Europe and the US. And as you can see on the pie chart there, about half of the revenue last year came from the US market, and the other half came from the European market, including Nordics there. But we are selling the products outside these big regions as well, and mainly within the segments of either ports or mines, where, for example, ports are usually owned and managed and operated by large company groups that may have ports around the world. So it starts with us getting into a port in Europe or the US perhaps, and that will then bring us into Middle East, Africa, South America, and Australia, and so on. Moving on to the next slide, please. So what is it that makes JLT unique? Well, I would say three things today that we define as our core strength within the company. One is we do have leading products. If you ask customers, JLT is well known for high quality, high performance, and very high reliability. And if we are in a customer where that is doing a pure product evaluation, usually we win in those comparisons. But it's also our expertise and our knowledge, because we had owned our own development and manufacturing of the products since start, basically. We have the in-house resources that are needed to build up the expertise, and our key customers have access to this expertise. So it's not uncommon that a large customer and our engineering team, for example, talks and we develop products and solutions together with the customer. With that also comes what we call a high-touch customer-facing model. So that means that very early in the selling phase, we spend a lot of time with the customers to understand their business operations, their challenges, and their environment in which the computer needs to work. So we can look at the Wi-Fi infrastructure, we can talk about mechanical stress and other things that could impact the computer. And of course, in a time like this, with the pandemic and with the restrictions in travels and physical meetings, that has presented a little challenge for us, because now it's harder for us to go out to a customer and do that analysis before they actually choose JLT's products. So we go to the next slide, please. So we have a growth strategy. JLT has been growing for the last 7 or so years, with the exception now in 2020. We'll talk a little bit more about 2020. And we've been growing profitably along the way as well. And the growth strategy that we keep executing on consists of 3 legs, I would say. So it is continuous product development, which is where we started, 1994, with a hardware product. And that continues. And as I said, we are in the 6th generation of products, and we are very focused on developing our own products, of course, which is the basis of what we offer to customers. But we're also complementing that with source products like accessories or handheld products and scanners and so on, to be able to provide a more complete solution for the customer. The second path there is where we really increased the emphasis on this in 2010, and that is to strengthen and expand the sales channel. And I feel today, with the products we have and the offering we have, that is where we need to focus on marketing and sales to get out there in front of customers and really represent JLT and the solution that we stand for. And then the third leg on the strategy here is services and a bigger services content. And over the time, we started with great products. Today we have great products, but we also have great customer relationships and great customers, long-term customers. And we see big opportunities to work with both existing and new customers to increase the service level and the service content in the offering that we talk about, that we provide to customers. And we'll talk a little bit more about that next as well. So we can go to the next slide, please. So looking back at 2020, and as for everyone, this has been a very challenging year. And but I have to say, though, that we really pulled through. And all things considered, I'm actually very proud and happy with the way the year turned out in the end. We feared much worse than what it turned out to be in the end. So if you go to the next bullet there, please. So the pandemic, of course, impacted us all, both professionally and personally. We have had throughout the year tough restrictions on travels and restrictions on meetings. So we had quickly to adapt to new ways of running both the existing business and the existing customer relationships and the internal communication as well. And we needed to find new ways of finding new customers and to prospect on the market. So if we go to the next slide, please. So the pandemic really hit at the beginning of the year, around February, March, and at the end of Q1, we took a number of measures early to be proactive and to ensure stability throughout the crisis. The focus has always been to keep the staff safe and healthy, of course. So we enabled people to work from home. The tasks that most people within the JLT organization lend themselves pretty well for doing at home, with a few exceptions. So we made sure that we had, or everyone had good home offices set up with not only computers and such, but also with good cameras and sound and similar things to keep the business running. We also implemented a number of cost savings initiatives, and we have been able to manage the cost quite effectively throughout the year to keep that down to minimum. And the third area there was supply capacity, because of course the pandemic not only made it difficult for us, but it made it difficult for our suppliers and our partners as well. And we went through times where we had shortages on components, we had issues getting components shipped and such, but we actually fared pretty well throughout the crisis, and we haven't had any significant issues with supplying products and meeting customers' demand and expectations. So of course, as many others in the business, we established new ways to keep the operation going, and Teams meetings and video meetings has been kind of the standard procedure nowadays. At JLT, everyone is set up to run a good video meeting, but not only that, all our partners, our suppliers, and our customers that before was very rarely actually set up to have a good video meeting. They are now established with that technology as well. So we really fast forward the whole development on using those type of technologies and digitalization that was needed to run the business. Even though we had a number of cost savings and we had to reprioritize projects and initiatives that was going on, we really stayed focused on the most critical projects. And I'm going to talk about one of them in my next couple of slides here. Because the goal has always been to be ready to accelerate when we see signs of the crisis turning to the better again. So go to the next bullet there, please. And I'm very proud to say that the entire organization really pulled through, and it has been a great teamwork, both internally and with the extended team, with partners and such. So people have stayed focused, people have stayed productive, even though it has been very challenging sometimes. Go on to the next bullet, please. And I think we can also be fortunate that our end markets, like distribution, warehousing, production, manufacturing, ports, have done relatively well through the crisis so far. So the financial challenges that has happened in many other segments have not been that bad in our end market segments. The bigger challenge for JLT has been to conduct the business and to prospect and to meet new customers. That has been the big challenge. But financially, our end markets and our end customers are going through the crisis pretty well, actually, so far. And then the last bullet on this slide. So positive year-end result. As I said, we were pretty worried. I was pretty worried when we went into Q2. We wanted to put these proactive measures in place. I'm glad we did. And we created the stability that we were looking for. We had the most critical projects going throughout the year, and we ended the year with a positive result. So I'm very proud of that. Go on to the next slide, please. So in numbers, you can forward both bullets here, please, and the next one too. There we go. So the numbers, you see them there on the slide. You probably read the year-end report as well. So if you look at order intake as a start, order intake was down 11% from the previous year. However, order intake really recovered pretty well in Q4 of last year. And in fact, the order intake in Q4 was stronger than Q4 in 2019, which was a record year. If we look at the revenue, went down 22% compared to previous year. I think we also need to keep in mind that previous year, 2019, was a record year for JLT. So it was an all-time high in sales, basically, or revenues. So heavily characterized by the corona pandemic, as we said, we were able to manage the overhead cost, and it is reduced. Well, one obvious thing is less travel. So there has been very little travel for the company over the year, but we also reprioritized and cut out some cost in the marketing budget. We've been very, very focused on the digital marketing, but there has not been any trade shows or any other marketing events like that. We also decided to reduce the work time. We have not used any of the state-sponsored programs, but we were able, by working with the staff, to reduce time anyway. And one thing to do that was to save vacation time and such to keep the cost down. And we also had to do some reduction in staff, and that was mainly done in the sales organization, where we had geared up in the fourth quarter of 2019. And moving in then to Q1 and Q2, we decided to wait with that increase in sales staff, basically. So we had to let a few people off, unfortunately, at the beginning of the year there. As I mentioned, we were able to keep the strategic projects going. And in the end, we ended the year with an operating profit of 2.1 million Swedish krona. And I also glad to see that one key part of the strategy here is to increase the service content, and that continued on a positive trend. Thank you. So moving on to the next slide, please. So I do think I see the light at the end of the tunnel now. I think through 2021 we will eventually get through with the pandemic. Hopefully the vaccination program is going as planned, and when we come to the summer, I'm hoping that some of the travel restrictions are going to ease up and we can start conducting the business a little bit more aggressive again. So we've decided to execute on a few things that has been put on hold for 2020, and I'll talk a little bit here about the new product that we're rolling out, which were one of the key projects that we kept working on during 2020, and a new initiative that is related to increasing software development and services. So we move on to the next slide, please. Only a couple of weeks ago, we announced the fact that we are opening a pilot program for a new product from JLT, which is based on Android 10. And this is a continuation or further development of the latest generation products from JLT called 6012. We call this version 6012A. It's all new electronics inside, but the form factor and the mechanics is pretty much the same. And why is Android so important? Well, we've seen a significant uptick in interest from our customers on Android as a complement to Windows 10, that is the most common operating system for us today. And if we look at the overall market for Android, about 85% of all consumer products are today Android. And of course, we are not using consumer products in our segments, but our operators are. So the people using our computers are used to the Android operating system, and that is one factor that is driving the interest for Android, even in industrial applications like we are selling into. So Android is definitely emerging as a strong alternative to Windows in our target markets. And with the 6012A product, we feel that we are in a great position to support that growing need. So 6012 was one of the key projects that we continued to develop during the year 2020 without any reductions in, really. So now we are at a point where we're rolling out this to the first couple of customers. We already delivered the first units, and we are now starting real-world testing, so to say, together with those customers. And we're planning a full product rollout with production in volume this summer. Moving on to the next slide, please. So this product is significant in from another angle as well. And this 6012A, together with the existing Windows sibling 6012, really forms a platform for future solutions. And I talked about this a little bit when we launched the 6012 a couple of years ago, because with this hardware, we have integrated a number of sensors and analytic technology that will allow us to leverage the fact that our computer sitting on a forklift, for example, in a warehouse, is used every day, and it's traveling around in the warehouse, and through the computer, you can use this sensor technology to collect data. It could be anything from the vibrations that is happening on the computer, but also on the forklift. It could be temperature changes, it could be humidity, it could be acceleration, speed, positioning, and such. So with all that information, we have a vision where we can collect that and we can analyze that data And by taking decisions on that data, we can help customers to further increase productivity and profitability. So this could be things like predictable and preventable service, where we can predict and perform service even before the computer breaks down. Perhaps even before a forklift breaks down, if we can start measuring the conditions of the forklift. This will maximize the uptime that every customer is so interested in, and it will eliminate interruptions and so on. But it doesn't stop there. It could be preventing accidents. It could be measuring optimal routes in the warehouse, for example, and many other things. But if you click on one more bullet there, please. The key in order to enable this value and these services to customers is to have a software infrastructure around the hardware products. And therefore, we are now starting this venture of building up a software development organization and business. So we go to the next slide, please. So we have started a fully owned subsidiary within the JLT group that we call JLT Software Solutions. And it's dedicated to develop software products. And the reason that we are putting that into a separate company within the group is that I see the vision here is to develop not only software products, but a software business as well, and a services business. So that's why we want to keep it a little bit separate from the development team that we have today, although of course they have to work very, very closely together. So I think if you look at this as an investor, I often get the question, because over the years we've been profitable and we've been growing the business, and we have a pretty strong cash right now balance in the company. And this is one way then to use the cash that we have available and invest in something that is a little bit longer term and that would really enhance the offering and the value that we provide to the customers. So JLT is traditionally a very hardware-focused company. That's where our expertise lies today. So in order to make this fly, we needed to recruit the right talent into the company. And the first person that I'm happy to announce then is a person that lives in Växjö, very close to the headquarters actually of JLT, and that is Andreas Nivard, and he has already started March 1st, and he will be the general manager for this new subsidiary with JLT. So Andreas comes with 25 years of experience from software business and product development, and most recently he's been working 3 years for Tieto, and before then he was with Visma for over 20 years. So he's been involved in both building up a business as well as defining and taking new products, software products, to the market. We have also initiated the search for a software system architect who will also be the development manager, so to say, for this company. And we target to hire that person in Q2. So the long-term goal here is, as I said, to develop a complementary business to the products that we have today. We will start with the customers and the market segments where we are active today, and really enhance the value to the customers and differentiate our offerings from our competitors by adding software and software solutions around this. And over time, to build up that expertise and a solid software development team within JLT. So that's going to be very exciting to follow this year. We go to the next slide, please. So key takeaways.
Per, you have 30 seconds. Unfortunately, we are running a bit out of time, so just 30 seconds in the summary, and then we'll have to.
Thank you. I'm just going to quickly summarize the presentation here then. So if you click, so 2020 was a challenging year, characterized by the corona pandemic, but I think we managed well throughout the crisis. We put preventative measures in place, staff is safe and healthy, and we ended the year with a positive operating profit, even though sales went down from the previous record year. And now we are looking forward, and we start 2021 by accelerating, and we are really executing on the growth strategy to add value to customers and to add the service content into our offering. Okay, Simon, sorry for taking a little bit longer than expected.
No worries, Per. Thank you for attending today. Unfortunately, we do not have time for any Q&A session, but I'm sure that Per is available for those of you who would like to ask him questions. So thank you, Per, for attending today.
Okay, thank you. Thank you.
Hello and welcome to this next presentation here at ABG Investor Days. My name is Simon Granat and I am an analyst at ABG covering IT and tech stocks. With us today we have the pleasure of welcoming Net Insight and its CEO Christer Fritzson and also its CFO Per Lindgren. With that said, please Christer and Per go ahead and present the company.
Thank you, and thank you all for listening to Net Insight's presentation. And it will be me, Christer Fritzson, and Per Lindgren, our CTO. We see a lot of changes in the market, and it creates growth opportunity for Net Insight. And we will cover a short update on Net Insight, and then we'll move into the opportunities that we see in market for us to grow in the future. So please, next slide. Net Insight in brief, you probably know and aware of that we have been in the market for over 20 years. And as you can see, we have a number of the major and large broadcasters in the market. All the well-known brand name are on our customer list. We also have a number of different service providers like the Switch, like Detta, both global and regional service provider that are offering solution to broadcaster and other media companies that need services for their production. We also see that we will come into a little bit later into the presentation that we see new customer segments coming in, and that is the enterprises, and they are coming in through cloud and other product, and we see also the shift in the market now when we have the COVID that they need to use more professional product to both have communication internally but also external to customer. But we will come into that a little bit later. We are a global company that have representation in all regions around the globe. and a company offering solution that don't need any adaptation to go into new regions and new countries. So we have products that are feasible in all different markets. Next slide, please. Yes, to put our company and our product into the media ecosystem. First of all, we operate in the live event arena. So we are not having any service to like the Netflix or like C More or other companies that have more stream OTT service to consumer. So our ecosystem starts with a live event. And from the live event where you produce the production, we send a feed to the media production, which will be a station, and we transfer all the feeds to the live media production. The production today can be on different places. It can be in a studio, or the production can be on several different places, which will make sure that we can handle the different production, even though that they are on a number of different locations. From the production, we send the feed to the company that actually transfer the product out to the feed out to the end user. And just as an example, if you see a production in Sweden like SVT, they do the production in Sweden and send that production directly to Boxer or Telia or other operator, but they're also sending the feed to other rights holder, which can be like SRG in Switzerland, that then they send to the local operator in the local market. So that's the ecosystem that we are in with our products. We will move into this a little bit later into the presentation. Next slide, please. If we just make a quick catch up what happened in 2020 and the Q1 this year, as you probably all are aware of, we divested Side, the live OTT platform that we have developed over a few years, to Amazon in the beginning of last year. And the price for the divestment product was 350 million krona. We have kept the knowledge and experience that we have created while we developed the Side product, and we are using that now for our cloud product that we have launched last year. So we have kept all the necessary knowledge and experience and that we are using right now. We acquired Aktier in the beginning of last year, which have a product that are virtualized and can fit well into EP media production or fit into the EP media workflow that we see coming up more and more. So that product fit well into our product portfolio. When we divested Side, the core product, the media networks, we had created a new strategy around the media network, and we had formed a new leadership team last year. And we have increased the commercial activities and focus on really transfer our product out to the market in a more efficient way. And we have increased the development speed and increased the development efforts last year. And for a few weeks ago, we divested Schedule, and now we have full focus on our core business, the media network. We divested Schedule to a company called Cytec, and they will be a close partner to us in the future, and we will jointly develop the product, and we have joint customers that are using our products. Next slide, please. Just a short brief on the Q4 result. Net Insight achieved growth in the fourth quarter. and revenue increased by 2.2%. And that's despite the negative exchange rate affected from the strong Swedish krona and still the negative COVID impact that we have. If we take away the adjustment of the exchange rate, the growth was 8.4%. We have introduced a large number of improvements that I just mentioned, and we are starting to see a positive effect on the product development and sales and internal efficiency that we have been working with for the last quarters. So we are glad to see that we now are growing again compared with the same quarter last year. And we look at the operating earning. If we take away the exchange rate differences between Q4 last year and 2019, we see that the earnings were 6.2 million in Q4. And we are glad to see that we have a cash flow of positive cash flow over 18 million in the Q4. Next slide, please. If we then move into the more of the market dynamic that we see, we have a number of different changes in the market that drives increased demand for capacity in the network. If we start with the different formats that are now developing, which create an increased capacity need for our broadcaster and service provider. So if you go from the standard definition and then over to HD, we are moving now into 4K Ultra HD, and in the future we will also see Ultra HD 8K, and that creates an enormous demand for extra capacity to be able to handle the format that are coming and we are in right now. But we also see that more live sport hours are produced in more or less all events, and that also, of course, creates a lot of new demands for increased capacity. Yes, this is an example from the Olympic Games 2014 compared with Olympic Games 2018. As you can see, it was 38% increase in our production during those two events. And we can see that in the most of the events that are produced right now, it's produced a lot more hours in each event. And it's broader also till tier 2 and tier 3 event as well. But we also see an accelerated trend to remote production. And just an explanation what that come from the increase of capacity. Normally, if you look back, it was an on-site production that you have like in an event like 80 cameras, up to 80 cameras, or a normal event maybe have 8 to 12 cameras. They produce and send the feed to an OP van that do the production on-site, and then they send the feed directly to the studio. So it means that we have one feed going from the event, from the OB van to the studio. On the remote production, all camera feeds that can be between like 8 to 80 go directly to the studio, which means that it will need an increased demand for capacity. And the drive for the broadcaster that have remote production is, of course, lowering cost because you don't need to have people on site. But you will also be much more flexible to have the production in the studio because each personnel can be involved in more than one production. So this is a drive from the broadcaster to lower costs by using the remote production instead of on-site production. If you look forward, you can see that the Omdia are estimating that it will be a 33% yearly increase in remote production from 2020 to 2024. And when we talk like with Tata that have around 5,000 remote production, or 5,000 events per year that they are producing. If you look back last year, they have 700 remote production, and we're looking forward, it will be between 1,500 to 2,000 remote production. So it is an increase. So this is three different types of drivers for more capacity need in the network. Next slide, please.
Hello. I'll just talk a little bit about some of this market transformation. There is a lot of market transformation that creates pockets of growth for us. And these trends have been accelerated this year because of the COVID, especially trends towards more IP workflows that Christer explained, and also remote cloud workflows. So the transformation to IP and remote workflows means new infrastructure upgrades. So moving to just handling single feeds to these 20 to 80 feeds, of course, requires new upgrades with more equipment. So in combination, you can say with this and what Chris has said, we see an increase for media processing and video transport. And we saw also the end of last year that the number of our big customers like Detta, but also like the Switch and RTV in Spain, is now upgrading their networks and the media processing units in the Nimbra from 10 gig backbones to 100 gig backbones. So this will continue with this increase and shift towards these new workflows. Another big trend we see is migration to more software and cloud workflows. This will take a little bit longer time, but has already started. But what's interesting to this is with cloud workflows, you can do more cost-efficient productions. And as Christer mentioned, this is something we see in the enterprise side. So we also see unification of more traditional sports and news broadcast to the same workflows now being used to have high quality productions for enterprise when they're doing town halls or when they're doing the marketing events. And they are moving to these cloud workflows, but require then the same type of video transport for both the contribution and distribution of this content. The third area, which is quite interesting, is on the synchronization. Net Insight has been really innovators in doing what we call GPS-independent time synchronization. And we use this, I think, in over 15 countries for digital terrestrial TV transport. But we see now an increase when moving to more IP, that synchronization becoming more important both in professional media production, but also in areas, adjacent areas, and creating new market opportunities. And we just did an innovation project within the Vinnova framework together with the Royal Institute of Technology, looking at the applicability of this solution for example, 5G networks, actually synchronizing and make the rollout of 5G more cost efficient, since you don't have to use GPS or replace existing infrastructure. So another trend we do see is the shift from what we call perpetual to recurring price models or revenue, or moving from capex to more opex revenue. And this allows also our customers to more pay as you grow, and again, allows us to enter new areas with our products. The next slide. So this is just also looking onto the cloud solutions, which we think is a big growth opportunity, both mid and long term for Net Insight. Again, we are in a very strong position given the development and know-how we did for SAI. We developed SAI for 5 years before we divested that to Amazon. But we can use same architecture and a lot of the know-how for doing business-to-business media, both for enterprise and in the news and sports environment. And Nimbra Edge is a totally open software platform that can work in the public or a private cloud environment in the data centers. It's totally open and supporting all the protocols on the market. But we are also integrating it towards our existing ecosystem with our Nimbra and Aktier products. And we have over 16,000 Nimbra units out there. So by connecting these and possibility to ingest directly into the Nimbra Edge and directly into the cloud platforms for media production. This creates a really interesting media ecosystem for the future. But as also mentioned before, it opens up the new market segments for business-to-business enterprise, but also for cost efficiency to more enter tier 2 and tier 3 type of sports and entertainment events. And Nimbra Edge was released beginning of the year, has already received a lot of awards and recognition in the industry. So again, I think we are very well positioned now when moving into this new cloud solution. Next slide, please.
And this is just a short sum up of what we actually have been talking about. We have a global reach. We have a very well-known brand in the market. We have a strong positioning in growing and evolving market, and we are definitely in to grow. And we have like a gross margin around 60%, and we can use that to grow in the future. And our focus now is to capture the opportunity that we see in the market when we shift over to IP, we see cloud coming in, we see more high demand for capacity, and we are well positioned of grabbing the growth that are coming into the market for the next probably 4 to 7 years that we will see an increased growth in the market. So thank you, and we are willing to take any question that you would like to ask.
Thank you, Christer, and thank you, Per. I think your cloud-based initiative sounds very interesting, actually. In practical terms, how far have you come today? Are you already today selling as a cloud-based service? And where do you anticipate this to be in the future, for instance, in 5 or 10 years' time?
Yeah, we have the product in the market, and as we have been communicated, we have signed a number of agreements like Detta, SRG in Switzerland. So we are definitely into that market and approaching a number of customers. Even though that this is a small market so far, and it's small numbers that are coming in terms of revenue so far, but we see a tremendous growth the next coming year. And the interesting thing is that we are broadening the market, and we can address new segment in the market as Per was describing. So it's not cannibalizing on the existing product that we have or the existing market, but you can combine the cloud-based product with the existing product that we have. Like for a huge event, you can use cloud to spin out like clips into the social media, so you can drag in new customer to the live event that you are producing. So you can combine the two technologies, and I think that will be very efficient and both easy of use, but also cost efficient for the broadcasters.
Thank you. Needless to say, the sports event market and perhaps the events market overall has been rather weak in 2020. Still, it feels like you managed the crisis quite well. If we head in and look into 2021, do you anticipate that a pent-up demand might be materialized? And how is your exposure to sports event in relative other events as well?
I think that, of course, the whole industry have been affected of COVID, and definitely in Q2, Q3, we saw a huge effect of events that were closing down. But when we see coming in Q4, I think that we have been adopted quite well into the new situation. And one part of it is actually that we have remote production. We have been able to continue to produce, even though that has been difficulties in the market. But we still, if we look into 2021, we see still that we will be affected of COVID the first half of this year, even though that we see that, like we saw in Q4, like the switch increase, the capacity in US going from 10 gigabyte to 100 gigabyte. We see Detta doing the same. We see other customers that are starting slowly to upgrade the network, but it's still a very market that are really not going full speed right now, and they are a little bit waiting and seeing what will happen. And if that will be a catch up in the second half for 2022, it's remained to be seen. But definitely we see the market is picking up.
Thank you. And perhaps as a final question, most companies want both growth and margins, and some want to achieve profitable growth. If you had to choose, where would you say that your primarily focus over the coming 3 years is?
And as I mentioned, growth is on very high on our priority list, but we would like to have a growth with profit, of course. So we see with our 60% gross margin, we see that we can grow with profit, but we will definitely drive for growth. That's what we see, that we have a global reach. We're established in all the regions. We have connection with the customer, and we see that with the commercial activities that we are doing now, we are focused on growth.
Thank you. Thank you for attending at our event today, both regarding the presentation and the following Q&A session. If you have any final remarks, you may now address them. Otherwise, I'd like to send you a big thank you.
No, we will say thank you for all of you that have listening in, and if there are any additional questions, please contact me or Per, and we will be helpful to try to answer the question that you have. So thank you.
Thank you.